के लिए ये लेवल है आपका नेक्स्ट। 55 पिप कैसल बनता है भाई? 200 पे थे। थोड़ी सी दूर तो बन गया। यहाँ पे देखेंगे इसको, ठीक है। कहीं
100 ya. Silakan kakak beli COD. Ini aku lagi pakai dijadiin outer. Boleh gas COD.
Buat berat badan 73, tinggi badan 169, for kemeja lengan panjang rekomend size apa kak? Di berat badan 73 ya, kalau lengan panjang itu cocok
find people to learn from that actually have, results that they can show you and results that you would want to get as well. Because I see it all the time where it'll be someone online that it's like, as well, you have to be able to filter. So work on just filtering, maybe have some, just some verification that you do want people or whatever it might be. But there are some really good people out there that share their knowledge. A lot of people share their knowledge for free, podcasts, all that kind of stuff. So it is all available. One thing I would tell to anyone watching this is all of the trading wisdom has already been discovered. I don't really think there's anything new in trading. There's ways people can get faster, via coding, algorithms, that sort of stuff. But beyond getting speed advantages, it's all out there, and you can find it all for free as well. So you have to be resourceful and just follow people that have some sort of verified record.
What are your thoughts in terms of, one question I forgot to ask earlier, to be fair, was in timeframes? Like, obviously, because you're long-term trading, sort of more swing to position trading. What sort of timeframes when it comes to your technicals are you looking at?
Yeah, so for me, I'm looking at weekly charts, and I'm looking at daily charts. And then maybe for the execution side, I'll look at the hourly as well if I'm taking a trade. But for me, I'm looking at something and I'm like, what can I get into at the very start of the year that I think might double by the end of the year? So typically I'm looking for about like a year out, something around there.
Right.
But I really think it depends on your mind and the way your mind works. Like I think about things very deeply, and I'm more of like a macro person. So I think for me, thinking that far into the future is kind of good. Whereas there might be someone else that they're very good at just thinking fast. And they're more transactional, more execution based, and maybe a slower time frame works for them. But what I will say is the shorter your time frame is, the higher chance that your competition is a robot. And most likely you're not going to beat robots and algorithms because they don't make emotional mistakes. So if you're trying to like scalp like the 1 minute chart, you're literally competing with algos, and most likely, unless you're very good, the odds they're not there in your favor. One trend that tends to work for people is the market tends to go up over time. So if your time frame, say you're like a 5-year trader, if you buy almost any stock, 5 years from now it's going to go up. But that trend dissipates when you get to those lower time frames.
Yeah, I do love that, especially the lower time frame stuff is interesting, because what I found actually, not even just when it comes to lower time frames, it's like lower time frames versus higher time frames, it's fundamentals versus technicals, it's the options versus futures, or Forex versus this. It's like there's always in the markets, I think people like yourself and other verified traders, they understand that anyone can trade anyway, depending on their personality and so on, and on where they find their edge. But even then, it's more so in the verified traders than anyone, to be fair, is that they have very strong convictions in some of their beliefs, right? So equally, I've known really successful scalpers who truly go, like, the best edge is in scalping, right? And there's truth to it, of course, but it's more so down to the fact that they found their edge in scalping, right? Versus there's like an incredible, return trader out there who only long term, even yourself, right? Like 255% in a year, long term, right? So anything can work, but it's interesting, as you mentioned, like you understood yourself, you understood how you're a deep thinker, and that you have sort of a longer perspective on the markets. Yeah. Where did that understanding come in, or that insight, that internal insight? Was that something you knew early on? Was that something you kind of learned throughout the journey?
Yeah, so I think when I first started and I knew nothing, that was what I naturally gravitated towards. Where I wasn't trading every day, it was sporadically. And it was like, okay, I'm watching the market every day, but I'm maybe taking a trade like once every 2 weeks or something like that. And I did that without really having any training or anything. So that was where I naturally gravitated towards. So I definitely recommend for anyone, think about where you're naturally gravitating towards and where you're having the most success. I had a couple of years where I had major success doing that. And then when I tried day trading, I had no success in it. Whereas one of my best trading friends, he used to work as a floor trader in the pits in Chicago, and he's a scalper. And I talked to him on the phone, and he's so fast with what he's doing. And he's taught me a few things, but if I tried to do it the way he does it, like, he would crush me. If I had to compete against him and what he's doing, like, he's going to dominate me. So for that reason, it's like I want to stick with what I'm good at.
Mm-hmm. That's a big part of the edge, right? I think a lot of times people just assume edge means strategy, and that's it. When in reality, edge means strategy. It means your ticker selection. It means, you know, what even the news catalysts, right? That's part of the edge. But also knowing what you're good at is part of the edge. Another part of the edge that a lot of people don't talk about is your routines, right? You know, what is your routine for your trading? Like, how are you optimizing your day-to-day life to maximize your performance in trading? What does that look like for you?
Yeah, so for me, I have a pretty detailed pre-market routine. So I'm typically on the desk around 7 o'clock, and I read some news catalysts in the morning. I have a couple of news wires I look at, pretty much clean those. I clean Bloomberg, Wall Street Journal. And then from there, I'm looking at technicals and what's happened overnight. Then more when I'm off the desk. Like, I'm actually a harm to myself during those hours. So I really try to stay off the desk and work on something else. Like, maybe I have indicators I'm working on, you know, newsletter stuff, that sort of thing. I do other work. And then from 3 to 4, then I'm pretty engaged again. I'm on the desk looking at what's happening. And then every night I do my evening homework where I'm running all my models, doing my analysis, looking at all this stuff. And I package it together in a research note, send to my subscribers. And then the whole wheel just turns over and over again. So yeah, and then during the weekend I have a routine as well. I put all my research into a note, I send it to my subscribers. So yeah, for me, writing the newsletter has also been awesome because it really gets me to systematize what I'm doing, think about the why behind it, and there's accountability there.
Do you believe that to continue to perform at a very high level as a trader, that you will consistently have to put in that work, like consistently follow that routine? Because I believe that there's a lot of traders out there that believe one day when they're profitable, it becomes easy, it becomes like, you know, you don't have to do as much work that it took to get profitable. And I think that, and I had that same mentality, I had that same that thought process. And thankfully, you know, through the podcast and even before the podcast, I learned differently the reality of trading. But what are your thoughts on that? Do you believe that for you to continuously perform the way you have, and if anything to even increase, that level of work and detail that you're doing at the moment, that routine that you're rigorously following, even on the weekend, which is interesting as well, right? The market's closed. Why are you doing any work on the weekend? Is what some people may think. But do you think that is truly how you perform at your best and consistently perform at your best? As you mentioned earlier, right? Consistently profitable. You thought it meant day to day, you know, money in the markets. I would say consistently profitable is very much what you said earlier, but also it means doing the work consistently. And consistency essentially in the definition means forever. Like, there isn't I think what people think is you get to a destination, it's like a destination. It's like, you know, eventually you will be consistently profitable, but no, it's like you have to consistently be consistent, you know?
Yeah, you have to keep earning it. So yeah, if those routines fall apart, then my trading results, they're going to suffer. So it depends on what strategy you run. Like my strategy, given that it's longer term, could I skip a day somewhere? Absolutely. I don't, because I write the newsletters. That really keeps me accountable. But to be honest, if my routine slipped, if I stopped putting the time into the market, like sometimes on the weekend, I'll be like, you know what, I want to research a company. It'll be a random company. I'll dig in, maybe spend like 2 hours, you know, reading up on it. Or during earnings season, I'll be listening to earnings calls, that sort of thing. And it's really like getting those hustle points in, or maybe it amounts to a trade, maybe it doesn't, but you're putting that time in. So yeah, I think in trading, there's no point of arrival, or like I just hit this level where now I can just generate this all the time. It is a grind. Like even if you work on an institutional trading desk, it's like this wheel that every trading session, there's certain things that happen at certain times, and you got to keep going through that process. So yeah, if you want to really pursue a career in trading, you have to understand like you need these routines, and if you want to have a good 30-year track record, you're gonna have to do these routines for the next 30 years. So most people don't want to do that, but for me, I love it so much that for me, it's it's all good.
How important do you think it is to be passionate about trading and to be a high performer?
It's the most important thing, because if you're not passionate, like we all have things in our life that we're not passionate about, and most of the time we're not good at them because we don't want to put the work into them. But if you have someone that's like fascinated with coding, for example, and they love it, they're going to be able to code some awesome screens, awesome filters, new automations, that sort of thing. Where if someone's just like, I want to make money, but I don't really like this stuff, they're not going to put in that work. Or like if someone really loves technical analysis, they're going to go through all the charts. But yeah, passion is something that allows you to do so much more work than someone that doesn't have it. So I think it's crucial. You need it.
In terms of trading psychology, one thing that was very interesting and sort of really shaped my mindset going through the podcast is I was of the same mindset that I think the majority of traders out there have, which is trading psychology is so important, and that's the biggest thing that holds traders back. And then since doing the podcast, but also because of the podcast, I watch a lot of content. I'm really listening to a lot of verified traders, professional traders. They talk about how trading psychology isn't as big of a problem that traders assume, right? Some people say trading psychology is bullshit, right? That's just the term they use. But what they're saying is, they're not saying it's not important and it's not a real thing. What they're saying is though that the biggest issue that would actually solve the psychological problem to a degree is actually having edge. And the fact is that most traders don't have edge. They don't put in the work to find edge in the first place. And therefore they use psychology as an excuse for why they don't have edge. But they don't see it that way. They just see it as FOMO and greed and I oversize and whatever it may be because of my psychology. But in reality, they don't have a well-defined system. They don't have a system. They just have maybe there's this particular technical pattern or this particular volatility, whatever it may be. What are your thoughts in terms of trading psychology?
I think trading psychology is very important, because if your psychology is not right, then your execution's not going to be there. If you're a systematized trader and you have an algorithm that's doing the executions for you, then yeah, trading psychology does not matter. But for example, if you don't have the confidence that your trading strategy works, then when it comes time to execute that trade in real time, like say you're trading a breaking news catalyst, if that news catalyst comes out at 10:01 and you see that thing come out and you're like, okay, this is bullish, you have to make that connection, and sometimes within 30 seconds, I'm in a trade. If you're like trading very poorly and your psychology's not there and you're like, man, am I just gonna take another loss? Like, I'm so over this, you're gonna hesitate and then the thing moves without you. So to me, it's really like, you need to have confidence to execute. And I think of course, like if you're executing very well, the confidence kind of like hand in hand. But I also think where psychology comes into play is if you're desperate to make money, like if you're operating in the market from a poor person's mindset, then you're going to be looking for trades everywhere because you're desperate to make a buck. Whereas if you're operating from a mentality of abundance, like I can do this, I know things are going to go well for me, I know by the end of this year I'll have some good results, then you're not there looking for everything. So yeah, I think it matters. There's lots of different ways to look at it, but for me, psychology's been pretty important.
No, definitely. It's like I said though, it's not in terms of like they say it's non-existent or anything. It's more so, as you said about confidence, right? And execution. It's like if you don't have an edge or a data-backed edge, essentially, how will you be? How can you expect yourself to be confident? Don't get me wrong, there's definitely, I'm sure, circumstances where you've actually got the edge, but still your confidence isn't there.
Yeah.
And then that's, of course, psychology. But I think a lot of people don't get to that point. A lot of people, unfortunately, they don't have the edge, and then they're not confident, of course, but they blame then the psychology versus, actually, wait, I haven't done the work.
Oh, yeah.
So like in terms of like building an edge for yourself, like what did that look like in terms of data? Like how much data were you collecting in order to say, okay, this is actually a playbook. This is a playbook I'm going to class as a playbook and use day to day and throughout the year for my trading. Like, what did that look like for you? What was that process of collecting your playbooks and your edges?
Yeah, so I'll start with when you really have no edge, it's really you're showing up to the market. Maybe you have a charting platform, you're seeing stuff going up and down, and you're executing trades based off like, okay, this is going up, this is going down, I got a feeling. That's like square one. But really, when you start to develop edge, to me, it was a multi-year process. So like when I was studying economics as a freshman in college, I didn't even realize it, but maybe I was developing edge there because now I use macro in my approach. Same thing when I was studying the CFA exams. I was 21 years old when I started that. I was learning fundamentals. I guess I was developing my edge there over those couple of years I was doing that. And when I was working with Y charts, I was doing a lot of data science work, which now helps me with my trading. So I guess I was working on my edge there. I was doing prop trading. I was learning options and technical analysis. So I guess I was working on my edge there. So it's something that it takes years and years to refine, and it just takes consistent work. So it's like if you don't know anything about data analysis, maybe you can rely a little bit more on software tools to help you with that. Same thing if you don't really know fundamental analysis that well, maybe you can do the same. But you have to have something that's unique because the reality is 95% of people fail. So it's like, how do you end up in that 5%? You have to be a little bit different. You have to put in some sort of effort, adhere to your system. So for me, I'm still refining everything I'm working on. Like even after this year, I was like, oh my gosh, I'm making all these mistakes. I can optimize this. So I started rewriting.
Do what you want, travel to wherever you want, and just buy whatever you want? Those are the same questions that I used to ask myself as well. Now, there are 20-year-olds out there just like me who are taking advantage of this digital economy to get paid as much as doctors every single month without having any prior work experience. So today, I'm going to show you everything you need to know to go from zero to making 6 figures from trading. And the best part is, you don't need a large sum of capital or spend hours upon hours on the charts. I started trading with less than $100 in my bank account, so anyone can start. Literally anyone, whether you are a student or you are working a 90 minutes or less on the charts every single day, and I trade for about a total of 4 hours a week. This is exactly why I have so much freedom with my life. Now, the first thing I want to mention is that if you have failed at trading in the past, it is not your fault. There's a lot of information out there and it can be quite confusing. Majority of the trading advice doesn't even make you money, and this information overload is preventing you from success. If you have been concerned in the past that you just can't succeed with trading, I want to reassure you and put those fears to rest. You can do this. You just need the right person to teach you. Now, the big banks want you to think that you need a lot of money or some fancy college degree to become successful at trading. I'm here to tell you that they are wrong. They have their own reasons for wanting you to think that, but it's not true. If you ever thought that the government and the banks actually want you to fail, you are probably right, because they don't benefit from you succeeding. They want to keep you poor, they want to keep you in debt and in need, so you can always depend on them. The difference with me is that I actually care about your success and truly want to see you living your dream life. So that's what I'm here for. I know you want to live your dream life and provide for your family, and I want to show you how to make that happen during this entire lesson. My goal for this presentation is to help two types of people. For those who are beginners, you will get to learn everything you need to know to start trading. And for my more experienced traders who have been in the market for a while now, you will learn how to make more money from trading and how to stop losing and become profitable faster. For everything that I'm about to show you today, I want you to know that I'm speaking from experience. My name is Brett Goh, or you might know me as the Trading Geek, and I've been trading since 2020 and I've made over 6 figures from trading myself, and I've literally shown my live withdrawal on YouTube multiple times. I have a YouTube channel with over 400,000 subscribers and over 100 videos on trading. And I've also coached multiple students, some of which have went on to become profitable traders themselves who are making thousands of dollars every month consistently. So let's just say I know my shit. Now this is one of my students who have graduated from my mentorship program. Her name is Ease, and she's a fitness influencer on Instagram. And she messaged me recently telling me that she has made over £6,000 in just a span of 1 week from trading, which is absolutely insane. So if you watch till the end of this class, I will show you how to get the exact trading system that she is using to make this much profits. Now, I know there are distractions all around you, but this strategy that I'm about to show you is potentially gonna change your life. And I don't want you to miss a single crucial step, so please make a commitment to stay focused. Can you do that for yourself? Close your Instagram or TikTok, stop reading the comments on this video, give me your complete attention, and you might even want to grab a pen and paper to take down some notes. So for the next 40 minutes or so, this is exactly what you will learn. Secret number 1, the most profitable high income skill in this era. Why do I choose Forex trading over any other online money making methods? Secret number 2, reframe your mind for trading success. You need to delete all the useless knowledge that you have learned so far and start learning valuable trading wisdom that will actually help you out on your trading journey. Secret number 3, how to master trading in the next 90 days. You can get started with literally less than $100 and little to no risk. And last but not least, I'm going to share with you my number 1 trading hack, and you can literally get to copy the exact system that I use to extract profits from the market. So what's the most profitable high income skill in this era? By now, you should know that it is trading. Now that's me in Thailand living the digital nomad lifestyle, a lifestyle that many traders can only dream of. There I was, sitting on the beach with a beautiful sunset in the background, and at that moment, I remember I thought to myself, damn, I'm so grateful for this life. This is why I've been working so hard for. Now, I don't want you to just dream of this lifestyle. I want you to actually experience it yourself. So why become a day trader? Because you get access to freedom, time freedom. Day trading is flexible, which means you can trade for a few hours and then do whatever you want for the rest of your day, be it spend time with family or work out. Location freedom. Day trading can be done in anywhere in the world, which means you can be sitting on a beach in Bali and then traveling around Europe the next month and even visit the mesmerizing Lake Como in Italy. Financial freedom. When you are working a regular job like a clerk or an office job, you are given a fixed monthly salary. In day trading, there is no cap to the amount of money you can potentially make. In trading, you don't get paid by the amounts of hours you work. You get paid for your decisions. However, there's one condition. Like I said in the first video of this series, 90% of traders fail. These are the things that only the top 10% of traders get to enjoy. Now, the next question you might have is, what should you trade? Forex, stocks, options, or crypto? Now, I have tried trading all of them and I found Forex trading to be the most profitable. So why did I choose Forex trading? When you are trading stocks or options, the market is only open for 8 hours on weekdays. On the other hand, the Forex market is open 24 hours from Monday till Friday. This means that you can trade at any time you want. It doesn't matter what time is your full-time job. You will always have the time to trade. If you're working a 9 to 5, you can trade from 6 p.m. to 10 p.m. If you are still studying in school, you can trade during the times where you are more free, like during your holidays. Forex move based on economic and business fundamentals, such as inflation, interest rates, production, etc. These things don't change so quickly, so the value of the assets doesn't change that quickly either. On the other hand, cryptocurrencies have no such fundamentals. The only thing moving them is investor sentiment, like greed and fear. And that's a bad thing, because sentiment can change in a flash. 1 minute, Bitcoin could be going to the moon, and the next minute it could be going to shit. Now, these are the main reasons why I choose to trade Forex. The Forex market is the most liquid market in the world. This means that there is always a large number of buyers and sellers looking to make a trade. The high liquidity in Forex means that transactions can be completed quickly and easily. So the transaction costs are often very low. So you don't need to pay like a crazy amount of commission fees to the brokers. And like I mentioned just now, the Forex market is a 24-hour market, which means you can trade at any time you want. You can easily start Forex trading with a small capital because there is leverage in Forex trading. Leverage allows you to make more money from trading with a limited amount of capital. A lot of people have misconceptions when it comes to trading. These misconceptions are actually limiting beliefs that are holding you back from trading success, holding you back from living a dream life. Trading is risky. When I first started investing in stocks, I was only 17 years old. That was the age where I bought my first stock, and I still remember it was Apple stock. And it was at $80. I still remember how happy I was, and I thought to myself that, oh, I'm gonna get rich and become a millionaire before 30. I wasn't even old enough to open a brokerage account. And coming from a traditional Asian family, my parents told me that it was extremely risky and I shouldn't play with stocks. But back then, I was reading a lot of finance and self-improvement books, and I came across this beautiful quote: risk comes from not knowing what you are doing. So the more you know about that particular subject, the less risky it will be. So I went ahead and studied everything I needed to know about investing, about trading, how to analyze the charts, how to react to the economic news. I read books and watched YouTube videos. And then once I done my research, I started investing more money into growth and innovation stocks like Tesla and Square. So in my first year in the stock market, I actually managed to outperform the market with my portfolio, surprisingly. As you can see right here, my portfolio returns was about 52.4%, while the index was only 48.2%. Yeah, this might be just pure luck, alright? So if you don't take risks, you will always work for someone who does. Just think about it for a minute. If no one took any risk and everyone played it safe by working a 9-to-5 job, there will be no great companies like Facebook or Google. These companies are created because the founders went ahead and took risks, and in return, they got their reward. No risk, no reward. It's as simple as that. When it comes to trading, there will always be a type of risk called market risk. At any point of time, anything can happen in the world. It could be World War III or another pandemic. All of these things are unpredictable and they affect the market. So yes, 100% there will always be risks. But you can reduce risk by learning everything there is to know on trading. Develop an edge that gives you a higher probability of winning. Oh, I have a full-time job. I'm working a 9-to-5. I'm still studying in school. Where got time to trade? What if I tell you that all you need is 30 minutes per day to generate consistent profits from the market? People think that to succeed in trading, you need to stare at the charts all day. And that's just not true. Trading gives me the freedom to work whenever I want and wherever I want. So when I don't feel like trading, maybe I could be facing some family problems, I'm not going to trade. As simple as that. So right now, I'm only spending about 30 to 60 minutes per day on the charts, analyzing the charts. And most of the days when there is no opportunity, I don't even trade at all. However, back when I was still learning how to trade, I was actually working a 9-to-5 office job. At the same time, my job was to help to calculate and compute the property tax for big companies in Singapore. And it was just like a boring ass desk-bound job, and I hated every single second of being a corporate slave. So my routine was that I'll wake up at around 7 AM, go to my office and start working with my laptop. And whenever I have free time, like during lunch, I would study trading. And then I will end work at around 6 PM and take the train for about 1 hour, so I'll reach home at around 7 PM. Guess what I did when I reached home? Do I just chill on the couch, watch Netflix and play video games? Of course not. I studied how to trade Forex. I was reading trading books, watching online courses, taking down notes and practicing using a demo account. No matter how tired I was from my 9-to-5 job, I make sure that I put in the work, put in the time to study how to trade day in, day out. So from around 7 p.m. to 12 a.m., I pretty much just started trading and just practice how to analyze the charts using price action. And I did this straight for 6 months. Like for 6 months straight, this is my routine. And now looking back, I'm so goddamn glad that I did that, because all my hard work has finally paid off in the end, and my life changed forever because of these 6 months. Last time I had to spend 6 hours per day studying how to trade, maybe 2-3 hours analyzing the charts, and right now I'm only spending like 30 minutes on trading per day, which is something that I'm very grateful for. So wake up earlier to study trading and analyze the charts. Stop mindlessly scrolling social media like TikTok and Instagram, and stop watching entertainment that does not serve any purpose or any help to your life at all. If trading is a priority to you, you will have the time to trade. You need a large sum of money to start trading. I used to think that I need at least $10,000 to start trading Forex, but that is not true. I started trading with less than $100 in my bank account, and there was this one time where I was lucky enough to turn $500 into $9,000 in 3 days, and I literally documented like the entire trading journey on YouTube and Instagram, so you can go ahead and find that video if you want. But basically in this video, I explain my thought process and how I did it, and also show you the proof that it is actually a live account. As you can see, this is my broker statement for third day. On the third day itself, the third day alone, I managed to make over $7,700, which brought my entire account value up to like $9,000 in total. And I started off with $500, guys. And let's look at Steph. After joining my program for just 1 day, Steph managed to double his small account of like just $500 and made over another $500 in profit while trading gold, bringing his entire account from $500 to $1,000 in just 1 day. The point here is, if I can do it, if Steph can do it, you guys can do it too. With the right knowledge and the skill set, you are able to generate consistent profits from the market like I am now. But please guys, do not go ahead and start depositing a few $100s and try to flip it to $10,000 if you are a beginner. You will 100% blow your account and lose all the money that you deposited. I'm able to do it because I not only got the right strategy, but also the experience and the knowledge in the market. Now, if you want to know the exact strategy on how I did it, watch till the end. Now, when it comes to trading, you need money to make money. If you have more money in your trading account, then you can risk more money, and in return, you will get much more profits. So if you don't want to lose like too much of your hard-earned money, you can consider getting funded accounts. A funded trading account with a prop firm is basically an agreement where the prop trading firm will offer you capital to trade with, and in return, you will have to give them a portion of your total profits. But in order to get funded, you have to go through like a 2-step process to actually like prove your trading skills, prove that you are competent enough to pass the challenge, and it is not easy at all. Which is why I'm going to share with you a 4-step framework that will help you master trading and potentially get funded soon. And at the end of this Roadmap to Mastery series, like I said, I will give away $200,000 funded accounts to 2 lucky winners. And I will announce this soon, so if you want to participate in this giveaway, make sure you follow me on all my social medias to stay updated on this. Link in the description. Now here's another one of my students called Bushan, who managed to grow his trading account by 10 times after my coaching. He managed to grow a small account of $100 to $1,000. Once again, he has proved to us that you don't need a large sum of money to start trading. And if you want to learn how he did it, keep watching. Oh, trading is risky. I don't have the time to trade. You need a large sum of money to trade. All these are excuses. Excuses that are preventing you from living your dream life. I know exactly how you feel because I was in your exact position a few years ago. I was scared to start trading as well. I thought to myself, oh, what if I ended up losing all my life savings? When you make excuses just like this, you prevent yourself from living your full potential. Whatever your excuse is, just understand that you will never get to where you truly want to be if you continue making excuses. It's up to you whether you let these excuses take over you or not. The question is, what will you do? Next, I'm going to show you the exact steps you can start taking to master trading in the next 90 days. How to trade for a living so that you can eventually quit your full-time job. These are the 3 pillars of trading that you must master if you want to become a successful and profitable trader. I call it the 3 M's: method, money management, and mindset. Now let's go through each one of them. Method is how you trade the market. There are two methods where you can use to determine whether you should buy or sell. Technical analysis. This is basically analyzing the charts to determine whether you should buy or sell using tools like trading indicators, trend lines, support and resistance levels, and candlestick patterns. Fundamental analysis is basically the study of economic news and announcements that will affect the economy. The state of the country's economy will determine the strength of the country's currency. So if the economy is good, the currency value is going to go up. If the economy is bad, currency value is going to go down. Money management is basically how you manage your risk and reward. You must understand that as traders, our goal is to take the trades which will give us the lowest risk and the highest reward. So you need to figure out how much money are you risking per trade. What is your risk to reward ratio? What's the maximum drawdown you can accept in your trading account? Money management will allow you to minimize your losses and maximize your profits so you can be profitable in the long run. The final M is mindset. When you are trading with your hard-earned money, you're going to experience a lot of emotions like fear, greed, FOMO, doubts. And all these emotions will cause you to make bad trading decisions. Play stupid games, win stupid prizes. This means that if you trade based on your emotions, you will lose money. Just like I mentioned earlier on, in trading, you don't get paid by your time. You get paid by your decisions. So you need to control your emotions so you can make the correct, the rational decisions that will allow you to make profitable trades. Now, everything begins or ends with your trading mindset. If you are not in a proper trading mindset, you won't be able to make money on a consistent basis. Remember, at the end of the day, you cannot control the market. You can't control how much money you will make today or next week. But there is one thing that you can control, and that is yourself. You can control how you react to what the market is actually showing you. You can control whether you follow your trading plan or not. Now, all 3 M's are equally important, and these 3 pillars will become the backbone of your trading plan. This is like a chair with 3 legs. If you remove one of them, you will fall and hurt yourself, or in this case, your trading account. This means that you need to master all 3 pillars if you want to become a successful trader. A diet won't help you unless you stick to it. You won't be profitable in trading unless you follow your money management rules and you actually stick to your winning trading strategy. Money management can't help you unless you have a winning trading strategy that is backed up by a proven, profitable track record. And there's no trading strategy that can make up for poor money management. You can have the best trading strategy in the world that works 90% of the time, but still lose money because you don't practice proper money management. Example, when you win, you make $50, but when you lose $1,000. Even with a 90% win rate, meaning you win 9 out of 10 trades, one loss can still wipe out all the profits that you made from those 9 winning trades. Now, I'm going to teach you the 4-step framework you can use to master trading. And you can see, it clearly worked for another one of my students called Marcel. He used this exact framework, and in return, the market rewarded him for his discipline. Now, these are the 4 steps that you need to take to master trading. As you can see, it's a loop, it's a cycle. First, you start learning everything you need to know about trading. Then, practice and apply whatever you have learned. After you have practiced enough, and you have become confident and proficient at your trading abilities, this is when you start depositing real money into your trading account and start trading live account. As you trade, you will need to journal and record down your trades so that you can actually learn from your mistakes, learn from your losses, and become a better trader. And the whole process repeats itself. Trading is a never-ending journey. You should always be learning and improving. Trading is like riding a bike. Once you mastered it, no one else can take it from you. Now let's go through step by step. There are 4 ways that you can learn trading. Number 1, watch free YouTube videos and webinars to learn trading strategies and techniques. Number 2, read books about Forex trading to gain a better understanding of the market. Number 3, get a mentor to shorten your learning curve. Number 4, invest in a high quality trading course that actually teaches you everything about trading. Now, the key to trading success is to follow someone who is already successful at trading. There is no need to reinvent the wheel and come up with your own trading system. If it has worked for someone else in the past, it's most likely going to work for you too. So ideally, you want to learn from someone who knows what he's doing and is already good at trading. Now, there are a lot of free information out there on YouTube and the internet to learn from. And it can be quite overwhelming because there are thousands of trading strategies out there and you do not know which one to pick. And everything is just so messy and all over the place and you don't know where to start. Which is why I would recommend you to start binge watching my free trading courses playlist on YouTube to learn everything you need to know about price action trading. You're able to learn how to use tools like support and resistance levels, supply and demand zones, candlesticks, volume and Fibonacci to determine whether you should buy or sell and where to exit the trade. You are the average of the 5 people you spend the most time with. The people you spend the most time with shape who you are. They determine what conversations dominate your attention. They affect what attitudes and behaviors you are regularly exposed to. Eventually, you will start to think like them and behave like them. That's why I recommend you to join an online trading community to learn from other traders and share ideas with each others. I have a Discord server named The Trading Tribe where you can join over 40,000 members and talk to other like-minded traders who want to learn just like you. Every tribe member has either achieved or is working towards the ultimate goal of becoming a successful trader just like you. So like I said, there are a shit ton of nice people in my Discord server that will be more than happy to help you out on your trading journey. You can post your chart setups, ask questions, and even see other people's ideas and strategies and see what works for them. So if you want to become part of my tribe, click the link in the description and join for free. Remember, trading can get lonely. If you want to go fast, go alone. If you want to go far, go together. Surround yourself with successful traders and you too will become successful. If you want to learn exactly how I trade and copy my highly profitable trading system, watch till the end of this class. Valor managed to use my trading system and got funded by FTMO. He then used that funded account and made over 18.5k in total profits. And like I said, watch till the end and I'll show you how you can copy my exact system so you can make profits just like this. Now, after you have learned everything about trading, it is finally time for you to apply whatever you have learned and start practicing so you can actually become good at trading. So this is where you can use Forex trading tools like TradingView to practice trading and test out all your trading strategies. And also make sure you open a demo account on MetaTrader 4 and start trading with virtual money to practice without risking real money. And this is what we call front testing. Or you can also use back testing software like Forex Tester 5 or Bar Replay 2 on TradingView to practice with historical market data. This is what we call back testing. If you want to win, learn to lose. This stage is where you are allowed to fail. Fail so you can learn. Experiment with different trading strategies and then narrow down to one that works best for you. Find out whether you are a scalper, a day trader, or a swing trader. When I first started out, I was just like you. I hated my job and I wanted to quit so damn badly. Back then, I was working as a busboy, so I had to serve the customers with alcohol and food. And I would always be working until like 2 AM. And then I would have to go home smelling like alcohol and freaking junk food. I was constantly looked down by customers and I will always get scolded by the full-timers there, the supervisors. And I just hated how broke I was and I wanted to quit ASAP. Like I fucking hated my job. And that is why I only spent about 1 month trading on the demo account and that was it. Then next week, I proceeded to opening a live account and I deposited $500 in that account. And within just a few days, I blew that $500 account. And at that point of time, $500 means a lot to me. So if I had to start over, I would spend much more time on trading a demo account. So take your time on trading demo. After you have a consistently profitable track record on demo account, you are ready to start trading live. Remember, you should only start trading a live account when you have found a successful strategy and you have done through lots of backtesting and you have learned how to control your emotions and practice proper risk management. A lot of new traders jump straight to trading a live account and end up losing a shit ton of money that they shouldn't have. Do not rush the process. Once you are ready, set up a trading account with a reputable broker and start trading live. I recommend you to start with a small amount of capital and gradually increase it as you gain much more experience. Now, when you are trading, you will experience lots of emotions like I mentioned earlier on, and all of these emotions will cause you to make bad decisions, and you will lose money if you let these emotions control you. So how you can prevent this is actually by creating a trading plan. A trading plan is a set of guidelines that define your trading. You need to include these 7 things inside your trading plan. Number 1, what is your time frame? What markets are you trading? How much are you risking on each trade? What are the conditions of your trading setups? How will you enter your trade? Will it be a limit, stop, or market order? And where is your stop loss? And where is your profit target? Now, I used to search for the perfect trading strategy that works all the time. So after I lose a trade, I will go on to find the next trading strategy. And this mistake has cost me a lot of money because I didn't know what worked. My trading was quite inconsistent. I'll win some money and then lose some money. That was my weakness, hopping from one strategy to the next. In reality, there is no such thing as a perfect trading strategy that works all the time. But how did I realize my mistake? Because I recorded my trades in my trading journal, and I realized that my trading setups are always different. 1 minute I'll be trading breakouts, and another minute I'll be trading pullbacks. And that's the problem. I couldn't pinpoint what worked and what didn't because my strategies were always changing. This is why having a trading journal is so important. It allows you to learn from your mistake, and that itself will prevent you from losing money. So record down your trades. Keep a trading journal to track your progress and learn from your mistakes. And you can download the Winning Trading Journal to help you with this. Link in the description. Keep track of all your trades and analyze your performance. Continuously learn and adapt your trading strategies if needed. Keep a trading diary where you can record down your thoughts and feelings before, during, and after each trade, as well as any lessons that you have learned. Now, you can even keep a visual record of your trades using screenshots of your charts and trade history. What I even like to do is to literally screen record my entire trading setup and talk through my entire thought process and what went wrong and what went right, so that I can keep it somewhere so that I can learn in the future. Now, the question is, how do you get profits just like this? Like all these people who I showed you throughout this entire video. The first option is to take all this information I have given you today and figure it all out by yourself. This was the path I took 3 years ago. I went through lots of trials and tribulations, lost over $10,000, blew multiple accounts because I thought that I could do everything by myself. If you choose this option, understand that you'll waste valuable months or even years trying to figure out everything on your own. You will lose more money trading and pay more market tuition. You will also miss out on all the extra money you could have made if you're starting out on the right way from the get-go. And there's also going to be a higher chance of quitting if you get stuck. Which is why I created the Trading Blueprint, which is a program where I take you by your hand and teach you exactly every single thing I know about trading, so you can go from zero to making over $100,000 from trading in record time. Which brings me to the second option, which is join the program with the best success stories in the industry. Every single success story you've seen during this entire video has gone through my programs and achieved the profits using the price action trading strategies I have taught them. Inside the Trading Blueprint, we take complete beginners with no prior knowledge or experience on trading and help you master trading from scratch, create a high win rate trading strategy that generates consistent profits, and also teach you my entire trading strategy from the start till the end. So if you just got a few minutes, let's look at what's inside the Trading Blueprint. First of all, understand that the Trading Blueprint is not just a course. It is the best learning experience that is focused on getting you results, helping you become profitable as fast as possible. The Trading Blueprint course has a lot of training videos that are laid out in a very organized step-by-step process to teach you everything you need to know, no matter what experience level you are, in order to get you to a point of trading success. This program is split into 9 phases. These 9 phases will help you go from a complete beginner to an advanced trader. Phase 1 is the beginner's guide. Right, so this is where you start your trading journey by first learning the basics of the Forex trading. Right, things like how you make money in Forex, what is Forex trading, basically an introduction to Forex trading. Next, you got phase 2, which is more on technical analysis. Here's where you learn how to analyze the charts using price action tools like candlestick patterns, Fibonacci, key levels, trend lines, and all these technical tools. Next, we move on to phase 3, where I literally show you how I personally trade. It's like an in-depth, a few part 60 minutes explanation of everything about my highly profitable trading strategy from top to bottom. Like literally, I will show you everything. I'm literally opening my hands up to you. And then phase 4, these are the things to know. You can learn some of my best secrets and hacks I use to increase my trading performance. And phase 5, scalping and swing trading. Here's where I show you my best scalping and swing trading strategies, which are back-tested and proven to work. So it doesn't matter if you are intraday trader, swing trader, or a scalper, you will all benefit from this course. Also, phase 6, fundamental analysis. Here's where you learn how to trade the news, how to take advantage of all these economic news and announcements so that you can make the correct trading decisions. Phase 7, risk management. This is where you learn to minimize losses and maximize profits using risk management techniques that is only used by professional traders. Phase 8, advanced secrets. Here's where you learn how to trade like the top 1%. And this is for like the advanced traders who want to take their trading to the next level. Here you learn like the secrets used by legit the top 1% of traders that I've never ever really reviewed on my YouTube channel or anywhere else. And lastly, phase 9, we got trading psychology. This is where you develop the proper mindset of a profitable trader so you can conquer emotions like fear, greed, doubt, and FOMO, right? And if you can really master this section, right, 100%, you're gonna have a higher chance of becoming profitable. Now, I believe that the trading blueprint is hands down the best trading course right now in this industry. But don't just take my words for it. Here are some feedback from the students who have bought the trading course themselves. You can pause this video and read them yourself. Here's more feedback once again. But my favorite one is this. Isaac is a 15-year-old teenager from New Zealand and he has chosen to invest in himself at such a young age. At that age, I was busy playing video games until 2 AM. And he mentioned in this feedback that no one explains Forex as well as I do. And that is the best part about my teaching. I explain everything, every complicated trading concept in a way where even a 5-year-old can understand. And that alone is why you should learn from me. And after taking the course, Isaac managed to apply whatever he has learned from the course and go on to win 6 out of 8 trades that he took. Our program is focused on helping our students become profitable fast. So we have to go the extra mile. We even included trading tools to guide you and help you become a better trader so you can make more profits from trading. Like I mentioned earlier, the key to becoming successful at trading is to follow traders who are already successful. This means that you need to follow how they think and their day-to-day habits. The habits they do every single day to ensure consistent profits from the market. So I invented the Profits Matrix. The Profits Matrix is a habit tracker that will help you do just that. Follow all the professional traders' habits so you can achieve all your trading goals and reach your fullest potential as a trader. Emotions are why 90% of traders lose. That's why you have to learn to identify these emotions so you can prevent them from taking control over you and your trading account. You can use the rational framework to map your emotional patterns and record down your trades. This will help you gain like a better understanding of your emotions and yourself, and this alone will just translate to more profits. And also the Victorious Trading Plan, which is basically like a custom winning trading plan template that is designed for you so you can craft out your own version and rely on it before every trading day. Now that's not the end. As the time passes, I will still be releasing more trading tools to help you guys out. Like I said, my main purpose with the trading blueprint is to transform you from complete beginner to highly profitable traders. So yes, if you get a trading blueprint, you will also get useful trading tools. Since the dawn of time, humans have always hunted in tribes. We are more powerful when we work as a team, which is why I created the Profits Mastermind. The Profits Mastermind is an ultra exclusive private community built for traders to reach their fullest potential. Inside the Profits Mastermind, you will be able to do the following things. Meet and network with other traders, find accountability partners, get your questions answered, complete trading challenges, discuss trade setups and strategies, and also celebrate your wins with each other. Just look at how supportive this community is. Everyone is kind, friendly, and just helping each other to become profitable traders. So yes, you will get access to the Profits Mastermind community as well. So like I mentioned, you will also get access to my best trading strategies on scalping, swing trading, and intraday trading. These are the trading strategies that has made me over 6 figures and also made my students consistent profits. And also, like I said, how I personally trade, right? I'm literally going to tell you guys everything, holding nothing back, showing you guys everything on how I personally trade so you can replicate the process and you can replicate the profits as well. And also advanced trading secrets, right? Something that I have never ever really shared in public before. The trading secrets that literally the top 1% use. Now, the total value of this course is over $10,000, which is why we wanted to charge at least $1,999 at first. But we thought that that price would be too expensive and out of reach for most people. So I'm not going to charge you that. In fact, the actual price is not even half of it. We decided to make it accessible for those people who are just starting out on their trading journey, because they are the ones who need it the most, which is why I'm only charging you $497. So let me repeat what you'll get again. Lifetime access to the trading blueprint course, useful trading tools to help you become a successful trader, access to Profits Mastermind community, and ultra exclusive private community built by traders for traders. My best trading strategies, how I personally trade, and advanced trading secrets. All of this for only $497. Now, I would suggest that if you want to get lifetime access at this price, get it today, get it right now. Because in less than 48 hours from the time this video is released, the price will be increased to $697. Price will increase, and in the future, this price may even become a yearly subscription where people has to pay like this amount every single year just to continue being in the program. So at this point, you have two choices. Choice 1, do nothing. If you do nothing with the information you have learned over the last hour or so, what will you get? Absolutely nothing. Or you can choose to take a leap of faith. Be the action taker and invest in yourself so you can live your dream life in the near future. If you want to get the trading blueprint course, click the first link in the description. You are either good at making money or making excuses, but you can't do both. I've given you the opportunity, and now it's time for you to decide whether you want to be a bystander or someone who actually takes actions so they can change their life. Whatever your choice is, know that I will always be rooting for you, and hopefully I will see you inside the trading blueprint course. And as always, remember, you're just one trade away. Mwah. I'm finally revealing to you the trading strategy that has made me over 6 figures throughout my entire trading career. And it's the same trading strategy that I used to make over $20,000 in 1 week. I'm gonna tell you everything from the start to the end, so make sure you watch every single minute of this video and get ready to take down some notes. Now, first of all, you must understand that I'm a mix between an intraday trader and a swing trader. I'm no longer a scalper because I'm past that stage, right? I realize that scalping takes away a lot of your freedom because you spend a lot of time looking at the charts. And that's literally the opposite of what I want. The whole point of trading is so that I can get freedom, and scalping does not allow me to do that because I have to stare at the charts all the goddamn time. So right now, I like to enjoy my life a little bit more and, you know, just chill out. So yeah, the time frames that I'll be using is weekly, daily, 4 hour, 1 hour, and a 15-minute time frame. Because like I said, I'm a mix between intraday and a swing trader, which means that sometimes I will hold a trade from a few days to even up to a few weeks, right? Depending on where's my take profit level. Now, the first thing I want to do is to identify the trend and market structure. That should be like the first and foremost, the most important step. So what I want to do is to go to my weekly time frame, look at where the overall trend is, so that I can kind of come up with like a bias on, you know, whether I should enter for a buy or whether I should enter for a sell. Because you must remember, the trend is your friend. The last thing you want to do is to trade against the trend. You should always be trying to trade with the trend, right? So firstly, we can see that right now AUD/USD is in a downtrend. How do we know that? We know that price is, first things first, going down. First, very obvious factor. Next thing is creating lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. So obviously, that tells us that price is in a downtrend. So perhaps we could be looking to enter for a sell. But if you go on to the daily time frame, you could start to see that, oh shit, maybe price is reversing, right? Maybe this is a reversal. Maybe price is reversing from a downtrend to becoming an uptrend. And how do we know that price is going to reverse to become an uptrend? We look at the second thing, which is the market structure. So you guys know, in a downtrend, price should be creating your lower highs, lower lows, lower highs, and lower lows. But in an uptrend, price will be creating your higher highs and higher lows. So if you look at what price has been doing recently, you can see that price has been creating higher highs, higher lows, higher highs, and higher lows. And in this case, if you look closely, even more closely, you can see there's actually a break of structure. So previously, price has been creating a lower highs, lower lows, lower high, lower low, lower highs, right? So this is the last lower high being created. Okay, this is the last lower high being created. And right now, we could see price literally like burst above the last lower high and it has came back down to retest this lower high to form your new higher low, right? So this could be the first sign that tells us that right now price has reversed and it has become an uptrend right now. So in this case, we can't decide whether we want to enter for a buy or we want to enter for a sell, right? You guys must understand that trading is not as easy as what it looks like on the textbook, right? Textbook can say that, oh, uptrend is like this, downtrend is like this, but in reality, the charts look something like these, all right? So you guys need to be very careful when it comes to identifying the market structure, the trend, because one wrong move can cause a loss, right? So every move you take must be calculated, must be thought through. So right now we can see that the market structure could be reversing to becoming an uptrend. So in this case, I'm gonna zoom down to the 4-hour time frame. Okay, zoom down to the 4-hour time frame. Look at what price has been doing lately, and if you see, price has been going up lately, right? Price has been creating a higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. So the daily time frame has shown us that it is bullish. 4-hour time frame has shown us that it's bullish as well, right? So now the higher time frames has shown us that it's bullish, so we should be entering for a buy in this case, right? So right now what we are waiting for is all the time frames to be aligned, right? You want to wait for all the time frames to be aligned, like all the stars in the skies to align, to give you the confidence to tell you to enter for a buy. Right now, daily bullish, 4-hour bullish. What we want next is to look for a bullish movement in the 1 hour or the 15-minute time frame, because this is where we are be looking for our entry, right? Either on the 1 hour time frame or the 15-minute time frame. So once the 1 hour time frame or the 15-minute time frame has turned bullish, this means it's good to go. This means you can enter for a buy already. If price is like this right now, you can see right now it's like this, right? And if you go to the 1 hour time frame, oh shit, it's actually bearish, right? In this case, it kind of goes against our principle of having all the time frames to be aligned. So in this case, if it's 1 hour is actually bearish, in this case, you still cannot enter for a buy yet. You guys must be patient. You guys must be disciplined enough to wait for the perfect trading setup. Remember, trade like a sniper. The last thing you want to do is to trade like a machine gun, take a shit ton of trades, but you end up losing on most of these trades. So trade like a sniper, right? So in this case, I'm waiting for the 1 hour time frame to become bullish. Daily have to be bullish, 4 hours has to be bullish, 1 hour 15 minutes has to be bullish as well for me to enter for a buy. So right now we still wait. You can see I'm just gonna fasten this a bit. Okay, you can see like price is like starting to change from bearish to bullish right now. How we can know is by even drawing like a mini trend line right here, right? Drawing like a mini trend line. This is what we call a counter trend line, and if price breaks through this counter trend line, this shows us that this retracement, this mini downtrend is done, and price is gonna become bullish again, and it's gonna go up now. So we can wait for this counter trend line to break as well. So as you can see, this is exactly what price did, right? The counter trend line has been broken. Now that all the time frames has been aligned, right? The next thing you must do is to make sure that you wait for price to get to a key level, right? You don't want to be trading when price is in the middle of nowhere, right? And just now I forgot to mention, but you guys should also identify all your key levels, mark up all your key levels on the higher time frame, like the 4 hour or the daily time frame, right? So I can mark up like a key level like right here, or even another key level like somewhere right here. Yeah, this is the first key level, this can be the second key level. Yeah, so by identifying these key levels, you will know exactly where you should enter for a buy, where you should enter for a sell, where to look out for, because you know that, oh, if price is hitting a resistance area, that means most likely it's going to reverse. So maybe you can place a take profit right there. So those are some examples. So I can just mark up more key levels right here, and I can even show you guys another trick, right? You can see, this is what I call the trend line brick magic, the trend line magic tool, right? So you can see previously it has been a downtrend, right? It has been a downtrend like this. So when price usually break through the trend line, price tends to go to the points where it touches the previous trend line. So what I mean by that is that you can see previously trend line, find out all the points that touches the trend line, which is right here, and like right here, and I'll say right here. Because what price usually tend to do is that price, when reverse, right, when price break out of this trend line and it reverse and it start creating an uptrend, right, it's going to go to these points. So you can use these points as your take profits levels. So this is what I like to call the ABCD, right? So you can see this can be point A, point B, point C, point D, right? So price will tend to go up to hit either one of these levels that we have right here, or if you are lucky enough, price can even go all the way up to point D before it starts reversing and head back down. So you can use these levels to like kind of take profit, right? So this is like a nice little trick that you can use. So back to the strategy. So like I said, I'm waiting for price to get to a key level for me to enter for a buy. And you can see, if I go down to the 1 hour time frame, I can see that right now price is actually at a key level, right? You can see this is the key support level, and this is what we can also be called like a area of interest. Okay, area of interest. So right now price is at a key level. You can either wait for price to get to a key level or a supply or demand zone. That is when you want to look for confirmation. So after price get to a key level, right? You know what? Let me just put down the steps for you guys. I almost forgot to put down the steps for you guys. So the second thing is to wait for all time frames to be aligned. Must be bullish on all time frames. Then the third step would be to wait for price to get a key. Wait for price to get to a key level or supply or demand zone, S&D zone, supply and demand zone, right? The reason why you want to wait for price to get to a key level is because the last thing you want to do is to trade when price is in the middle of nowhere. Let's say you enter for a buy like somewhere right around here. When price is in the middle of nowhere, look, if you enter for a buy here, your stop loss must be below the last higher low, which is right here. And your take profit could be at the next key level, which is like somewhere right around here. And you can see the risk to reward ratio is just not worth it. It's just not worth it, guys. So like I said, what you want to do is to just make sure that wait for price to get to a key level so they can have a nicer entry, a tighter stop loss. Because if you trade at the key level, you can place your stop loss below the key level, and now you have a much tighter stop loss and a wider take profit, which means that you can risk less and make more money on this trade. What you can do is after price get to a key level, right? Now this is where you want to look for multiple confirmations, or rather what I like to call confluences. Right, so this multiple confirmation can come in the form of candlestick patterns, chart patterns, indicators, moving average crossover, Bollinger Bands, RSI, whatever indicator that you like to use, and also like things like trend lines, Fibonacci. All of these things, right, help to give you additional confluence, additional confirmation for you to enter for the trade. So yeah guys, once price gets to a key level, you want to look at what price is doing at the key level and then get your multiple confirmation. So for the sake of this, I'm just gonna put on my moving averages. These are my 8 and 14 EMA, as you can see right here. This is the 8 and the other one is the 14 EMA, right? And the moving average crossover is a very simple trading strategy. When these two like moving averages cross over each other like this, you can see right here, this is when you know that the trend is going to reverse. And that is when you know that price is going to reverse, and you can look for a reversal trade setup right there. So right now, let's zoom in even further. Right now we are on the 1 hour time frame, by the way, and we see that price has, first of all, broken past the counter trend line. Price break. That's the first confirmation, the first confluence. Next, it could be this giant bullish engulfing candlestick. So when you see this big bullish engulfing candlestick, right, this big green candlestick, what does this tell us? This tells us there's a lot of momentum, a lot of volume, a lot of pressure, buying pressure, which means that buyers have entered this market and is pushing the price up. Next, this little key support area right here. This is the key support area, or rather area of interest, whatever you like to call it, right? It can also be a demand zone, right? That's the third confluence. Our fourth confluence could be your moving average crossover. You can see previously the moving average has already crossed over right here. When the blue line is above the red line, this tells us that price is in the uptrend and we should be entering for a buy. When the red line is above the blue line, this tells us that price is in the downtrend and we should be looking to sell. So right now, blue line above red line, this tells us that we should enter for a buy. So now that we got our 4 confluences, and the 5th confluence could even be like market structure, right? Right now, price is creating your higher low. Once you got your multiple confluence like this, right? Like I said, you guys always want to make sure that you get multiple confirmation. The keyword here is multiple. The last thing you want to do is to just enter a trade based on one confluence. Oh, I see this big candlestick, I'm just going to enter for a buy here. No, you need multiple confirmation. The reason why you need multiple confirmation is that the more confirmation that you have, the more confluences that you have, the more confident you will be in holding the trade to your take profit. The higher chance that the trade will play out, right? Because remember, the market is random. That means that we cannot control the market, but what we can control is our entry. We can be disciplined enough to wait for the perfect trade setup. So this is what I like to call like a perfect trade setup, right? A perfect trade setup is when I have at least like 3 to 4 confluences. and price at a key level, all the stars in the world is aligned for me to enter for a buy, and I'm confident to hold the trade all the way till my take profit. So now I have multiple confidence, that means I'm good to go, right? That means I can finally enter this trade after analyzing for 10 years. So there's two ways where I can enter this trade, either on the 1 hour time frame or the 15-minute time frame, right? So if you want to look for an even better sniper entry, you can go down to the 15-minute time frame, right? 15-minute time frame is where you get those like really tight entries. Like example, I would have entered for a buy somewhere right around here when the moving average started crossover, and I'll place my stop loss, right? For stop loss placement, you guys want to place your stop loss based on market structure. Remember, based on market structure. Don't place your stop loss like 5 pips or something, because 100% you're gonna get stopped out like a dumb idiot. A lot of beginner traders, they go into trading thinking that, oh, I have to have the tightest stop loss possible, the tightest stop loss, so that I can really minimize losses. So I need to have a 5 pip stop loss every single time I trade. Majority of your trades are gonna be losses if you do that. So what I want you to do right now is to, give your stop loss a little bit of breathing room, and then place your stop loss based on market structure. So in the uptrend, you should be placing your stop loss at the previous higher low. So right now, this is the uptrend. You can either place your stop loss at the previous higher low, or we can place it below this key level. In this case, I'm just going to be placing it below this key support area that we have right here, somewhere right around there, and take profit. Take profit is when you want to take profit at the next key level. Where is the next key level? The tip here is to look towards your left, right? Look towards your left to see where price last stopped at. And if you look towards the left, you see that over here, there's a key level that we have right here. Remember our point A, point B, point C, point D? Just now we mentioned, right? So this will be the next key level. So that could be my first take profit that we have right here. And the next key level could be right here. The next key level could even be all the way up here, right? So if you are confident about this trade, you can hold it all the way up to this area right here. So this will be a much nicer sniper entry. So this will be more of like an intraday trade, right? If you hold it till this first take profit level. If you hold it all the way up to this next key level, this will be more of a swing trade where you have to hold the trade a little bit longer over the next few days, etc. So yeah, let's discuss a little bit about risk management. When it comes to trading, right? Ideally, you want to aim to get 1:3 risk to reward ratio setups, right? 1:3. So you can see this is a 1:6, right? But if we move it back to the first take profit level right here, this is 1:3, right? This is 1:3, which means that we are risking 1% to make 3%. In trading, you always want to make sure that you get back in return more than what you risk. It doesn't make sense if you risk $1 just to earn back $1, right? It doesn't even make sense if you risk $1 to earn back 50 cents, right? You always want to make sure that you can double the amount of money that you risk, right? You want to get back more in return. So ideally aim for 1:3, because if you have 1:3, your win rate can be a little bit lower, which means you can win lesser trades but still be profitable in the long run. This ties in with win rate as well, right? Ties in with win rate. Example, an average win rate 50%, okay? Average win rate 50%, which means that you win half the trades, you lose half the trades. That is like the win rate of professional traders, right? 50%. And with a 1:3 risk to reward ratio, that ensures that you can become consistently profitable over the long run. This is the goal that you should be looking out for, 1:3. So on each one of my trade, right, I'm risking 1 to 2% of my entire account on each trade. So what this means is that if I'm having a 100k account, I will risk 2% of that, which is what, 2,000, right? I'll risk $2,000 on this trade. So in this trade, since it's a 1:3 risk to reward ratio, I risk $2,000 to get back $6,000. Risk $2,000 to get back $6,000. So this is the risk and the reward will be $6,000. This is how I approach risk. And why I say 1 to 2% is because it depends on the scenario. If I'm more confident about this trade because I have more confluences, right, then I'll risk 2%. If I'm a little bit less confident, I have like lesser confluences, lesser confirmation, I'm gonna risk 1%. So how much I risk depends on how confident I am on that trade, right? You don't want to make sure that you fucking risk 10% on like a low probability trade setup. So the higher the probability of the trade going well, the higher of amount of money that I'm going to be risking, right? Because I'm more confident, so obviously I'm going to risk more to try to earn more money, right? So right here, this is how I approach risk. After coming out of this, next thing you must be wondering, when you go into MetaTrader 4, there's something called lot size, which means like, what is the position size? What is the amount of units that you're going to be buying? And how you can figure out your lot size is by using this principle that we have right here, risking 1 to 2%. Go on to Google or go on to App Store and search for this useful tool, position size calculator. And this is going to be your best friend from now on all the way to stop trading. So you can see right here, this is your position size calculator, and all you have to do is to input some values and it will calculate the lot size for you just like magic. So over here, we can put, my account size is 100k, and let me choose the currency pair that I'm trading, which is AUD USD. And right now, I'm risking 2%, so put 2% right here. My stop loss distance, let me check what's my stop loss distance, is about 22 pips, right? 22 pips, so put 22 pips. Now, you can see right here, it literally lay out the lot size for you. You should be using 9.09 lots, and you're risking $2,000. So I will go on to my MetaTrader 4 and input 9.09 lots. Not more, it can be less, but not more. It should not exceed 9.09 lots, right? Once I input 9.09 lots, I'm going to be entering for a buy, right? After I enter for a buy, I have to let to see the trade play out, and you can see price eventually go up here and smash the first key level that we have drawn right here. It's really just as simple as that, guys. Like, I don't want to overcomplicate things or make things way too complicated, right? A lot of people try to look for like the perfect trading strategy, so they will go on to YouTube, search for 10,000 trading strategies and experiment with like different trading strategy. It's okay to do that, right? It's okay to experiment with different trading strategy, but what you want to do is to find out what works best for you. My trading strategy might not work for you because we have different personality. His trading strategy might not work for him or her, right? We all are built different. So what I want you to do is to experiment with different trading strategies. Yes, study smart money concepts, study ICT concepts, study price action, and then come up with your own trading strategy. You can take 50% of what I just taught you, or even 20% of what I taught you, but then use that to come up with your own trading strategy. Maybe take a bit on here, a bit from there, a bit from here, and then come up with your own winning trading strategy that suits your personality, suits your schedule, and suits your trading style, right? So like I said, this is more of an intraday or swing trading strategy. So it's gonna be a little bit different. Like example, a scalper is not gonna be entering for this trade because this takes like at least like 1 day for this trade to be played out. So yeah, I just want to give you guys like a whole overview of my entire trading strategy. As you can see right here, first things first, identify the trend, the market structure, wait for all the time frames to be aligned, right? Because you want to make sure that your 4-hour time frame is bearish, daily time frame bearish, weekly time frame bearish. Then that is when you can know that, you know what, all the trend direction is aligned together and we can trade with that particular trend direction. And next, you want to wait for price to get to a key level or supply and demand zone. Very important, right? You don't want to be trading when price is in the middle of nowhere. You want to get a sniper entry. And how you can do that is to wait for price to get to a key level. Then after price get to a key level, that is when you can analyze the charts, look for multiple confirmation. It could come in the form of candlestick patterns, chart patterns, support or resistance levels, Fibonacci, trend lines, moving average crossover, other indicators, whatever confirmation that you love, use that particular confirmation. That is when you can finally enter the trade on like either the 1 hour time frame or the 15-minute time frame. And in this case, you want to aim to get at least 1:3 risk to reward ratio if you want to become like profitable over the long run. Yes, you can be profitable with a 1:1 risk to reward ratio, but that just means that you need to win more trades, right? You need to have a higher winning rate. For me, I can honestly tell you that I'm not the best trader in the world. I don't have the highest win rate. My trading strategy is not perfect. I'm just gonna make that clear, just gonna be honest with you guys. But what I have is solid risk management, which means that I'm able to focus really well on my risk management, managing my risk, money management, and I also have a solid trading mindset. And that gives me an edge over my competition, which is the market. And also, once you have find out how much you're risking per trade, go on to the position size calculator and determine your lot size. Is it going to be a 1 lot size or a micro lot size or a mini lot size? Whatever it is, it depends on your trading account. If you're trading like a smaller account, right, the last thing you should do is to trade with a 1 lot size. That's the mistakes that I used to do back when I was still a beginner, right? Fucking $500 in my account, and I'll use like a standard lot size, and I'll freaking blow that account in like 2 trades or even 1 trade actually. Yeah, so massive mistake. Stop making that goddamn mistake, guys. I know it's hard for you because you want to get rich quick fast, but this is what it takes to become a profitable trader. And profitable trading can be boring and uncomfortable. Like waiting for the perfect trade setup is not fun. Following your trading plan is not fun, right? It's freaking boring because it goes against human nature, but it is what you need to do. So do the hard things, do the disciplined things so that you can enjoy like the long-term freaking fruits. Man, I don't even know where I'm going with this. But yes, that is my entire trading strategy. I'm starting a revolution, a movement, something that's never been done in this trading industry. and it's called Roadmap to Mastery. 90% of traders lose, which means you will not get rich from trading just by learning technical analysis. You don't need any more technical analysis. You need a serious review of how you think. So it's finally time for me to reveal to you what it takes to become a top 1% trader and how to think like one. And the best part about this whole series is that it not only benefits beginner traders, but it also benefits advanced traders. All types of traders, they will learn something. Whether you trade Forex, crypto, or stocks, whatever you are, you will learn something. So on 5th August, I will finally reveal to you the greatest secret to my trading success. I'm inviting you to step into the world of professional trading during this entire Roadmap to Mastery series. And at the end of the event, I will give away $200,000 funded account to 2 lucky winners. And you can save your spot right here by going to this link, thetradingblueprint.kajabi.com, or just click in the link in the description. This is your invitation to live the life you have always dreamed of. Don't just dream it anymore. Live it. If you love my unfiltered and uncensored trading episodes, you will 100% love this series because it's higher quality videos. I spent over $10,000 on the equipment and all the editing and stuff, and there's more amount of research done. So hours of learning went into learning from the top professional traders, and I've literally compiled all the wisdom into this whole series. And also I spent a lot of time planning and scripting each one of video. Literally one video takes 1 week to plan out. The first episode will be live on 5th of August, 9 PM Singapore time. Average is the enemy. Success is your duty and obligation. It is your duty as a trader to reach your fullest potential and become the best trader you can possibly be. And this whole series will help you do just that. So stay tuned for this series that will transform your trading and help you become the best trader. And like I said, if you want to get notified when the first episode drops, make sure you go sign up, link in the description with your name and email, and also click on that subscribe button and the bell beside it. Because I guarantee you that this will change your trading forever. And this will literally revolutionize the whole trading industry. And I hope that you'll be part of this revolution, part of this movement. If you're brave enough, click on that subscribe button. And remember, you're just one trade away. Mwah. As you can see, I'm up $3,000 right now from shorting gold. And yes, this is a live account, which you can see right here. Live account, real account, guys. And for those people who keep on asking me to show you live results, I've done a video of me withdrawing $50,000, and I used that money to pay for my dad vacation. I bring him to his dream vacation and paid for everything. There's a video on that. It's called my 50K live withdrawal or something. And there's another video of me turning $500 to $9,000 in 3 days live. I'll literally show you the proof in the video. And yes, there are still other videos of me showing live profits. There was one where I was up 23K, and I literally posted the freaking screenshot on Twitter and YouTube. So yeah, there you go, live trades, live profits. Just wanted to make that clear before I start this video. Without further ado, let's dive deep into this video. Now, one of the few criteria of becoming a professional trader is to understand and trade market structure. If you can understand market structure, you can understand how the market flows, how the market moves. You'll be able to get nice entries. You will know when the market is done retracing so they can enter for an optimum entry, so they can have the lowest risk and the highest reward. Now, first things first, before you do anything, we need to learn how to understand market structure. So over here, you can see in the uptrend, we know that price will not just go up in a straight line or go down in a straight line in a downtrend. Price has to push, retrace a little bit, push, retrace a little bit, and push even more and retrace a little bit. So over here, you can see price did this huge impulse move, so it moved up and it starts retracing. So this is your correction phase, and then it makes another impulse move, and it makes another correction, impulse, correction, so on and so forth, right? So why this happens is because during the impulse phase, right, when price push up like this, there's not enough buyers to continue for the price to continue going up, right? So there has to be some sort of retracement. So some sellers start to come in and push price down, causing this correction. Now, after price is done correcting, more buyers will start to come in and buy low and sell high, right? So they will buy at this higher low, causing the price to be pushed up even further to create a new higher high. So this is the next impulse move. And then it starts to retrace it again, and then starts to push even higher. So in an uptrend like we see over here, price will be creating your higher highs, higher lows, higher highs, higher lows. So you can see this high higher than this high, and this low higher than this low. So usually price will go up, break through the last higher high that we have right here, and then it will usually come down to this higher high right here, retrace back to this higher high so they can retest it so that it knows that it's solid, and then creates a new higher low before pushing up and create a new higher high and retrace back to this previous higher high to create a new higher low. So what we see over here is on maybe the daily or the 4-hour time frame. On the daily or the 4-hour time frame, this is where we have your major structure, right? Market structure is much more clearer. You can clearly see the higher highs, the higher lows. But more often than not, when we go down to like the smaller time frame, the 1-hour time frame, the 15-minute time frame, or even the 5-minute time frame, all this market structure still exists, but it looks a little bit more complicated. So instead of looking like so clean, you can clearly see where's the higher highs, the higher lows, where price is pushing, where price is retracing. It's gonna be a little bit confusing to see the market structure on the smaller time frames. So over here, let's say we are doing our top-down analysis. So we see this on the daily or the 4-hour time frame, and then we zoom down to our 1-hour time frame. So on our 1-hour time frame, this is what the impulse and the correction move looks like. So over here, this is the impulse move, and the correction, and the correction. This is the correction. So in this case, right, you can see it looks a little bit more confusing now. But the concept is still the same over here. There is still your higher highs and higher lows in the uptrend. There is still your lower lows and lower highs in the downtrend. And what we have in the 1-hour time frame, the smaller time frame, is what we call the minor structure. So over there just now we have analyzed your major structure, and now this is your minor structure. And by the way, guys, this is just a zoom in of like this area right here. A zoom in of this, and then we give you something like right here. So you can see, right, this impulse move is this lanky up move over here, and then this correction, this little retracement, is this little downtrend that we have right here. So it's still the same thing, guys. Like you see, in an uptrend, in an impulse move, price is creating high highs, high lows, higher highs, higher lows, high highs, high lows. And eventually, the buyers start to lose steam, like I said, and the sellers start to come in and push the price down, causing the retracement. So over here, you can see, price starts creating a new lower high. You can see this high is lower than this one right here. So the minute price starts creating a lower high right here, right, you will know that, okay, the retracement is about to start, right? This little impulse move is gonna end, and we are moving on to our correction phase that we have right here. So can you sell during this correction phase? Yes, 100%. If you're a scalper, if you're an intraday trader, you can catch some really nice shots on this little down correction that we have right here. However, if you're like a swing trader, you might want to like trade when price is done correcting. So you enter for a buy right here and continue trading this uptrend because you want to trade with the trend. So like I always said, at the end of the day, it depends on your trading style. What works for me might not work for you. So choose one and stick to it. So as I was saying, price created a lower high and then it starts going down, correcting the price, and then it starts creating another lower high, lower low, lower high, and lower low. But at some point of time, you must understand that this correction will cease, and this uptrend is going to continue. So how we can identify that is when price starts to create a new higher low. So you can see price starts reversing over here, price here the down bottom starts reversing and create a new higher low. This low is higher than this low that we have right here. This tells us that there was a break of structure. Price is going to reverse right now. This correction is done, it's over. So we can look to enter for a buy somewhere right around here and trade the continue, like the uptrend. Now, if you're looking for a sniper entry, you're going to get it from the even smaller time frame, like maybe even the 15-minute time frame, especially if you're intraday trading. So right now, we are still on the 1-hour time frame looking for a minor structure. So now I'm ready for my entry. So I'm going to zoom in down to the 15-minute time frame to look for my sniper entry. So this is what price will looks like on the 15-minute time frame. Yes, it can be a little bit more messy now, but the concept is still the same here. So what you can see over here is actually the correction phase that we have right here. If you zoom it out to the 15-minute time frame, it's gonna look something like this. So as you can see, this is a correction phase, but in the correction phase, it doesn't mean that price will just go down straight. It will go down, retrace, go down, retrace, go down, retrace. That's why causing this whole confusion. But don't worry, I'm going to simplify this for you, alright? So this is the correction phase, and we can see that price got pushed down. The minute price pushed down, it's going to start retracing, right? So it starts retracing, create this little higher highs, higher lows, higher highs, and higher lows. So over here, what we can see over here is actually this little move right here. This little retracement create a new lower high. So this is actually a new lower high on the 1-hour time frame. So the minute we see this new lower high, and when I can enter for a sell is when price break through this last higher low. So you can see, once price break through this last higher low, chances are price is going to continue to go down. So this is the new lower high being formed, and we can look for our short if price break through the last higher low, thus breaking market structure, which shows that price is going to reverse and head back down. And then once again, price starts going down, and then price starts retracing again, starts to create another lower high. So this new lower high is this one that we have right here, the second new lower high. And same thing, price break through this last high low, guess what, I can look to sell. So over here I've gotten like 2 short opportunities. So that's the whole map of like how market structure works, how the major structure and the minor structure comes in together to form your market structure. And it is very important for you to understand both the major structure and the minor structure frame, and you just fail to see the overall big picture. And I just want to remind you guys that trading is actually very simple. You either buy low and sell high, or sell high and buy low. Fit this concept into market structure, find out what are the optimal areas to look to enter for your buy or look to enter for your sell. And guys, if you want to get good at anything, you need to start practicing. So if you still don't understand market structure, you need to go on to the empty chart, like just plot any chart, Euro USD, GBP USD, AUD USD, and start marking up your market structure. Identify the market structure, see whether price is in an uptrend or downtrend, and then start marking up your lower highs right here. Another lower high, and then another lower low, and lower low. So price creating low high, lower low, low high, lower low, and create another new lower high and another new lower low. So this is the major structure on the 4-hour time frame. Downtrend, major structure. So you can see major structure, price creating a low high, lower low, lower high, lower low. So what you can even do is to go down to the 1-hour time frame to look for your minor structure. So once we go down to the 1-hour time frame, we can see that okay, price is actually not that smooth anymore, right? But in a way, you can still see like the downtrend. So you can see right here, price creating a new lower high, lower low, and within this little lower low, right, price is retracing. So it's price retracing and starts creating a new little higher highs, higher lows, higher high, higher low. And then when price breaks through this last higher low, like I said, what we've said. And then when price breaks through this last higher low, what we said just now is to enter for a sell. So sell right here. And another thing right here, you can see price creating this little retracement, and this is the new higher low. Once price breaks through this new higher low, look to enter for a sell, and so on and so forth, right? Like I said, all the time frames tie in together, be it the 4-hour, the 1-hour, or the 15-minute time frame. There's no like one single best time frame to trade on, because it all ties in together, and you have to make use of all of these time frames if you want to trade market structure properly. So now that you have learned how to read and understand market structure, you must learn how to apply market structure. So I want to give you something that is more applicable so that you can actually apply onto your charts and start trading. So now I'm going to show you my trading strategy, how I personally trade market structure. I'm just going to show it to you guys on GBP/USD live, right? You can see right now this is the live market. You can see the timestamp right here. So over here, first things first, we have to identify the major structure on the 4-hour time frame, right? Because the major structure tells us like where is the overall trend, like where is price going overall, like on the higher time frame. So overall, we can see that price has been creating a higher highs, higher lows, higher lows, higher highs. So higher highs, higher lows, higher highs, higher lows. This is the impulse correction, and it starts creating a new higher high. So recently, this is the new higher high, and this is the new higher low. But if you look closely, there's a chance that this could be a reversal. So on a 4-hour time frame, we have identified the major structure is the uptrend, right? Then we go to the 1-hour time frame to look for our minor structure. So if you look closely at our minor structure, let me remove all these first. You can see that price did this huge consolidation that we have right here, right? This huge consolidation. So the last higher high that we have is right here. And since then, price has created a new lower high. So what does this mean? This means that there's a chance that this could be a correction or even a reversal. So knowing this, you could have easily entered for some short opportunities during this correction. Example, right here, price starts creating a new lower high. You can see this high is lower than this high that we have right here. So when price reaches this zone that we have right here, we should only be looking to sell. So price reach here 1 time, 2 time, 3 time, 3rd time, price reach this area again, and you start seeing like some sort of selling pressure, some sort of bearish candlestick, bearish engulfing candlestick, and all like little dojis that we have right here. Easily you could have entered for a sell right here, stop loss above this last lower high, and take profit at the next key level, which could be somewhere right around here. Or another example that we have right here, you can see price has just been creating a high highs, high lows, and higher lows, right? But over here, price has started creating a new lower high. So a new lower high right here, because this high is lower than this one. So the minute price created a new low high, we know that, okay, the correction is about to start. Sellers have started to come in. So we can look for shorting opportunities right here. And I will personally enter a sell when price break through this last little low that we have right here. This is the last higher low, and once price breaks it, it just tells us that all hell is gonna break loose. So easily enter for a sell right here. And then once again, price goes down and it starts retracing to create potentially another lower high. So the minute price creates this new lower high, we know that within this zone over here, we should only be looking to sell. We should not be looking to buy. So easily you could have entered for another sell right here, and you can start seeing price starts consolidating, and it even start to create a new higher low. So you can see this high, this low, I mean, is higher than this one. So a lot of traders might think, oh, this correction is done and price is about to go up right now, because the next thing you know, price starts giving 1, 2, 3 green candles in a row, and then followed by this huge long ass candle. So at some point of time, price literally got pushed all the way up back to this zone that we have right here before it got pushed all the way down. So a lot of beginner traders, they might take this as a reversal. They might think that this little retracement is done and right now price is going to go up even higher. So they enter for a buy right here. Next thing you know, they get stopped out and price reverse against them and they lose a lot of money. Which is exactly why you guys cannot be stuck on like one time frame alone. So if you just stuck on 1 hour time frame alone, you might think that yes, price is going to go up right now and you will enter for a buy. So at the end of the day, always make sure you zoom out, look at the overall big picture, and we have seen on the major structure on the 4 hour time frame, price is actually correcting itself right now. So there's a chance that price is going to go down even lower. So after I see this candlestick being formed, right, this long ass candlestick being formed, I know that this is definitely like a zone, like a later supply zone, and there's a lot of sellers at this area. So price is definitely gonna drop a lot right now. So you can have entered for another short opportunities right here. Now there is a more intraday approach, right? You can look for some nice sells during this correction. But if you're more of a swing trader who likes to trade the trend, what you can do is that you can wait for this entire little correction to be done, for this entire gigantic correction to be done and start seeing some form of reversal, then that is when you can enter for buy. So example, price is still creating a low highs, low, 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 high, low, 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 high, low, 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 high, low, low. So over here, I want to see price break through this last lower high, come down to retest this last lower high to form your new higher low. Then that is potentially telling us that this correction is done and I'm gonna be looking to enter for a buy because price is gonna go to the moon right now. But until that happens, until you see a break of structure, you should not be entering for a buy yet. And I always forget to talk about this, but when it comes to entry, right, if you're an intraday trader, like I said, you want to enter on your 15-minute time frame, right? So over here, go down to the 15-minute time frame, and you can see there's so many opportunities where you can enter. Right here, we can see that price is creating a double or rather a triple top. 1, 2, 3, triple top, and you see a evening star candlestick pattern that we have right here. Easily entered for a sell right here because number 1, price gave us an evening star, a reversal candlestick pattern. Number 2, price is at a lower high. Price is creating a lower high. It's at this supply zone that we have right here. Number 3, triple bottom, right? 3 confluences, easily pull the trigger, enter for a sell right here. And stop loss above the last lower high, like I said, and take profit at the next key support level, which could be somewhere right around here. And you can see price literally went down in our favor. So at the start of this video, I showed you guys how I'm up about like 3k from shorting gold, and I want to take like a few minutes just to explain this live trade that I took. The concept is still the same. Look for your major structure and then look for your minor structure. So over here we can see the major structure in gold is that price is in the uptrend. Price is getting higher highs, higher lows, higher highs, and higher lows. So there's impulse correction, impulse, and even further correction. So over here we go down the 4 hour time frame and we can see that price was previously in like a little uptrend, but somewhere right around here recently price has started to reverse to become a downtrend. There's a potentially a break of structure that we have right here. You can see I've identified this is the last higher low and this is a last higher high. The minute price break through the last higher low right here, price break to the last higher low, starts coming up to retest this higher low to become a new lower high, we know that right now price is going to reverse and it's going to go down right now. So over here, once again, you can enter for a sell when price is creating all these little lower highs right here, sell here, sell here, sell here. But to be honest with you, I wasn't looking at the charts doing like this little consolidation because I was quite busy back then. But right now, I have a little bit of free time recently, so I decided to look at gold, analyze gold, see where price is going. And I can see right here, price has just broken past this new lower low, and potentially when price breaks through a new lower low, it's gonna come back up to retest this same lower low to create your new lower high. So I got the idea that price is gonna retrace, right? So the next thing is I went out to the 1 hour time frame to look for my minor structure, and I can see price is creating your lower highs, lower lows, lower highs, lower lows. And actually for this trade, I didn't really go down to the 15-minute time frame because I plan to like hold this trade even longer and swing this trade. So I see that price has just finished creating your new lower high right here. So I entered for a short right here, given that I have a bearish engulfing right here, and then this is price forming a new lower high, and then also price has just break through this support area and it has came up to retest it. So that was my 3 confluence, and I entered for a sell right here, placed my stop loss above this last lower high, and right now we are in a little bit of profit, as you can see right here. And my take profit is all the way down at this key level that we have right here. So like I said, I plan to swing trade this, so I place my take profit all the way down at this support area. Maybe I would take partial profit somewhere right around this area, depending on what price is gonna do. So I'm just gonna be observing to see what price is doing, and then as price creates a new low highs, I'm gonna be moving my stop loss from here to like the new low high. So that's just a little analysis on why I entered for this gold trade earlier. And right now price is like kind of like retracing around here, correcting itself after this little down move that we have right here. And you guys must understand that at the end of the day, corrections, retracements, they're all part of the process. Once you place the trade, I will advise you guys to just not constantly look at it, because if you constantly look at it, you might start thinking, oh no, right now price is going to reverse and I should get out of this trade right now. And once you get out of the trade, you see that price starts going even further, going in your direction, and you end up like regretting getting out of the trade and tell yourself, oh my god, why am I such a bad trader? Why am I such a brokey? So I just wanted to make that clear. Just trust your analysis and let the trade play out. Whether you hit the stop loss, whether you hit the take profit, I don't give a shit, alright? I'm robotic. And going forward with trading, you should have this mindset. You should adopt this mindset. If you have enjoyed this video, like, subscribe and all the stuff, and you can check out my course, link in the description. And if you want to learn more about advanced market structure, you should definitely watch this video next, because that video combined with this video will really solidify your understanding of market structure. And remember, you're just one trade away. In this video, I want to share with you 3 price action trading strategies that have made me over 6 figures. Trust me, these price action trading strategies are simple, effective, and guess what? They are very, very easy to implement. Without further ado, let's go. So the first trading strategy is actually what we call the break of structure. So how this strategy works is that you want to identify a break of structure and then you want to enter when that happens. So let me just draw it out for you guys to see. So let's say price is like consolidating, going sideways right now. So pretend that this is the daily chart, right? This is the daily chart. And then ideally you want to wait for a break of the structure, right? So price to come down here, break this last low, and come back up to retest this last higher low to form potentially a new low high. And then this is where you want to enter for the trade. So when you look at this, right, if you go down to like, let's say the 4-hour time frame, right, or even the 1-hour time frame, this move right here, this little up move right here will look something like this. Mini higher highs, higher lows like this. And then eventually on the smaller time frame, on the 4-hour time frame, you want to look for your break of structure. Price form a new lower high, start breaking through the last higher low. There we have it, the break of structure. So now the break of structure in the 4-hour time frame has confirmed to us that right now price is going to head back down. This little retracement is done and price is going to continue to head back down. So that is why we want to enter right here for a nice sniper entry. As soon as price breaks structure, we have a confirmation, we have our confluence, we can immediately enter for a sell. Papoom, baby. So for this break of structure entry, honestly, you can either enter when price creates this lower high, or wait for price to break through this last higher low, and then come back up to retest it, then enter for a sell right here. I prefer to do it the second way, which is this one right here. You enter after price break structure, create a new lower high after it has retested the last higher low. So in this case, this gives me like a much more higher confirmation or even a higher confluence, so that I can be more confident to hold the trade all the way down. But on drawing, it looks easy and easy to trade, but on the charts it's much more complicated. Well, that's true, brokey. Obviously, it's gonna be much more complicated on the charts. If it's as simple as is it like that in the drawing, everyone will be rich, right? Dumbass. So basically, this is what it will look like on the charts, right? So you can start seeing price is actually in a downtrend right now. Price has created like somewhat of a consolidation over here. You can see this little consolidation right here. Price is creating your multiple like triple top over here, and price is just broken past the last lower low. So this is the last lower low, and price is just broken through the last lower low, right? And right now, like I said, what we are waiting for is your break of structure on a smaller time frame as soon as price has come back up to retest this last low that we have right here. So easily we have drawn like a little resistance area that we have right here, which I've already drawn for you guys because I'm a good gentleman. So yeah, draw like a little area right here, this little support area, whatever let's call it, support area or the last low. Now we are waiting for price to come back up to retest this low over here, right? That's the key. We are waiting for price to come up to retest this low. And you do not want to enter immediately when price like come up to retest this low and just immediately enter for a sell, because price can easily still go up and this can be a fake out, and guess what, price can just go up and you've just lost a shit ton of money, dumbass. So what you want to do is to go down to the smaller time frame, right? So over here, remember, like I said, we are on the daily time frame, so this is what we will see on the daily time frame. We want to enter when the retracement is done. So how do you know when this little retracement is going to be done? By looking at the market structure and waiting for the break of structure. So at this point of time, go down to the smaller time frame, the 4-hour time frame, right? So over here we can see that, okay, this is the little retracement, this is the little counter trend, right? So what you can even do is that you can even draw the counter trend line right here, right? So right now, price is still forming your higher highs, higher lows, higher highs, higher lows, higher highs. So potentially price could approach this zone right here and start to give us some sort of like consolidation over here to show us that this little retracement is losing its strength. So that is exactly what we are looking out for. So we're just gonna wait, and you can see price, boom, price go up there and start forming like this long ass upper wick. So what does this tell us, guys? If you see this long ass upper wick that we have right here, right, chances are there's a lot of sellers selling at this area, right? All the sellers are literally waiting at this area to short the price down, right? But I'm not gonna enter for a sell yet because remember, we are waiting for the break of structure. So you can see price starts forming a new like low high right here, this high low, then this high right here, and we can potentially start to enter for a sell. I'll enter for a sell once price break through this last low that we have right here. This is the last high low, so that's when I'm going to enter when price break through it. Bam, right there, guys. You can see immediately price break through the last higher low over here. And if you wanted to enter for a sell like somewhere right around here, right, you should not be placing your stop loss like freaking tight like this, right? You should give it a little bit of breathing room, place it above this area that we have right here. If you place it very tight like this, guess what? Price is gonna stop you out over here. The next time price is gonna come out to retest this area, and guess what? You just lost a whole lot of money just to see the trade go in your way. And you end up thinking that you're the worst trader in the world, blah 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 blah. Stop being a bitch. So next, we are waiting for price to come back up to retest this area that we have right here, and that is what price is doing right now. You can see price is forming a new low high. So the moment price break through this last high low, right, this is the break of structure that I'm looking for. Alright, let me just give you a brief recap. So what we did was that on the daily time frame, we waited for price to come back up to retest this low that we have right here. Market structure, guys. Low high, low low in the downtrend. So after price has done retested this area that we have right here, we zoom down to the smaller time frame, the 4-hour time frame, to look for our sniper entry. And in this smaller time frame, we are looking for the break of structure because this retracement is an uptrend and we want to trade the downtrend, right? Because this is the downtrend, the overall higher time frame trend, which is the downtrend. So we are waiting for the break of structure of this little uptrend. So the moment price come down, break the last higher low in this little counter trend, we can look to enter for a sell and trade in the direction with the overall, the higher time frame trend. Get it? So in this case, enter for a sell right here, I'm going to be placing my stop loss above this last lower high. I mean this last high that we have right here, and place a take profit all the way down at this swing low that I have right here. So if you go down to the daily time frame, you can see that this is actually the last swing low, right? So like I said, important guys, make sure you use all the time frames, right? Not all the time frames, I mean, make sure try to combine multiple time frames. The last thing you want to do is to just like stick to one time frame, or like just neglect the higher time frames. That's what I mean, neglect the higher time frames. Do not do that. So if you just like look at 4-hour time frame, right, you can see there's multiple levels where I can place my take profit. This area right here, this area right here, all these are levels where I can take profits, right? Take profit 1, take profit 2, take profit 3, right? So all these are examples of where you can place or take profit, basically at levels where price reverse. So you look towards the left, you see price reverse right here, price reverse right here. So somewhat support area right here, support area right here, where you can take your profit. But in this case, we're just going to take profit all the way down at this last swing low so that we can maximize our profit potential, right? So in this case, let's look at what price does. Price goes down, goes down, goes down, goes down, goes down, goes down. I think it's gonna take a while, and we have finally smashed our take profit all the way down here. Price has finally reached this area that we have drawn right here. I believe you can even go down even lower. Look at this. Price starts creating like a down bottom. You can either get out of here, right? You can either get out at this area right here, somewhere right around here, you're out of the trade, right? Another thing I like to do is that instead of like getting out like somewhere right around here, I will have moved my stop loss that I have, which was above here, all the way up here. I'll move it all the way down to like maybe somewhere right around here at this last lower high. Yeah, so basically whenever price is creating market structure, you should move your stop loss. So over here, move it to here, and price created this new lower high, move it to here again, and you can see eventually price goes down even lower, smash our take profit that we have right here, that we have drawn right here, smash our take profit, and it starts going up even lower, right? As simple as that, guys. So that's the whole concept of using break of structure to look for your sniper entries. So the next strategy I want to show you is actually called the force breakout strategy, right? This is the strategy that will fake out a lot of retail newbie traders, right? Because a lot of retail traders take the same old advice of when price breaks out, just enter immediately when price breaks out for a buy, and next thing you know is the force breakout and price reverses in the other direction, and you lose a lot of money. Like 90% of the traders who are absolute brokies, losers, absolute failures, which is why we need to take advantage of this and trade the force breakout, right? Let me show you what I mean. So in the uptrend, you know, price is creating higher highs, higher lows, and higher lows, right? But at some point of time, price is gonna come down here, retest this last higher low, this same old last higher low, and it's even gonna break past this last higher low that we have right here. It's gonna break past, and at this point of time, newbie retail traders start to think that, oh my god, price is gonna go down right now, price is gonna collapse right now because price has just broke through the last higher low, and they think that this is a valid break of structure, but little do they know that this is actually a false breakout, and the price actually ended up going even higher. So in this case, what you could have done is that when price broke through the last higher low, you can enter for a buy when price starts reverses, and it gives you like a nice close above this level that I have right here, like a nice candlestick close that we have above right here. So you can enter for a buy somewhere right around here, and then take the profit up. I mean, like take the, watch your profits rocket, skyrocket, whatever you want to call it, man. Now let's look at a few examples on the charts. So over here you can see that I've drawn up like this little higher low right here because price is creating your higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. So this is clear. Today price is in the uptrend, right? So right now, this is the last higher low, right? This is the last higher low. And you can see price is like coming down to retest this last higher low. So look at what price did. Price eventually actually broke past this last higher low, guys. Remember, when price break past it, the last higher low, do not do anything. You want to wait for signs to see if price is reversing at this area, and this is a false breakout, or this is actually a real breakout and price is going to reverse and head back down. At this point of time, I'm waiting, alright, I'm still waiting. So you can see price goes down, but it starts reversing at this area, and it actually closed above this little higher low area that we have right here. So what does this tell us? This tells us that this is actually a false breakout and you can enter for a buy, right? So you go down to the 15-minute time frame, you can start seeing like all these candlesticks are just closing above this area, and we also have a double bottom that we have right here. So clear as day, price is going to reverse and price is going to head back up. So you can enter for a buy somewhere right around here. Place your stop loss below this low, this little high area right here. Alright, this would be a very valid take profit because this is the last swing high, right? And you can see price just rocket up and smash your take profit right there. Very, very simple strategy. Let me show you another. Now this time around, price is in a downtrend because price is creating a lower highs, lower lows, lower highs, lower lows. So over here, this is the last lower high, right? And you can see price is going down even further, and it's coming up to start like retesting this area that we have right here. You can see the moment price come up to retest this area right here, this last lower high area that we have right here, do you want to enter immediately for a sell right here? Comment down your answer, yes or no. Do you enter immediately when price has retest this last level? If you answered yes, guess what? You're gonna remain broke because you haven't been paying attention to what I've been teaching you for the past goddamn 20 minutes. But basically the answer is no, because you want to wait for signs that show you that price is either going to reverse and hit back down, or is it gonna break past it. Because price can do any one of these two things, right? And if you enter for a sell here, what if price actually go up and break this area and just go up even higher? You have lost money. So now we want to wait for price to come back up to retest this area first and give us like a false breakout, which we have right here. You can see somewhere right around here, price actually broke past the area that we have drawn and start giving us upper wicks. Upper wicks means what? Sellers selling the GBPUSD, pushing the price down. So at this point of time, this was a false breakout, and I see there's also a what's this evening star candlestick pattern. So easily enter for a sell right here and take profit all the way down at this swing low that we have right here, or can even take profit at this area right here, or even this area right here, right? So I'm just gonna take profit at this swing low that we have right here, this most recent swing low. You can see price goes down, goes down, goes down, and smash your take profit. That's the false breakout strategy. Very, very simple, but yet very, very practical. The next strategy is called a pullback strategy. So how it works is, let's say once again, price is consolidating around this area, maybe after a huge uptrend, and it starts consolidating around this area. So you can have the resistance area here, you got a support area right here. So the moment price breaks out of this last high right here, we are waiting for price to come back down to retest this area, or even pull back slightly like this before entering for a buy, right? So how do you know when this pullback is done and price is going to continue to go up? Now, what you can do is that you can put like a moving average, right? You can put like a maybe like a 20 moving average, which will look something like this, and you can wait for price to retest this 20 moving average and start showing you signs that it's going to go back up. Then you enter for a buy right here, and you can start to see price going back up. But basically, usually when price break out of a key level, price will tend to like retest that level or pull back a little bit before going up even higher. So what price can do is that you can start pulling back like this, pull back up to this like 20 moving average before it starts going back up like this. So like I said, the best friend for this strategy would be your 20 moving average. So just search the moving average that we have right here and just change it to 20. Right, that will be your best friend that you're gonna have during this trading strategy, right? So over here you can see there's a resistance area that we had to have drawn right here, and price has just broken past the resistance area. So now we are waiting for price to pull back before we enter for the trade. So the moment price like starts going up like this, going up like massively like this, right, you should not be entering for a buy, because if you enter for a buy immediately when the price break out, it can be a fake out. Or you enter for a buy somewhere right around here after price is broke out, guess where the stop loss must be? All the way down here. And look at the distance of the stop loss. That's a super duper wide stop loss, and you don't want that to happen to you. So in that case, if you're too late to the market, price has already made its move, you want to wait for price to pull back or rather retrace before entering for the trade. So price starts going down, pulling back all the way down to this area, but it did not touch this resistance area. So over here, we can look to see that price has actually managed to retrace to the 20 moving average. Right, retrace back to the 20 moving average. If you go up to the daily time frame, you can see that price has managed to pull back down to this 20 moving average. So you can enter for a buy somewhere right around here, take profit at the next key level, right? And then you can start seeing price creating your higher highs, higher lows, once again higher high and higher low. And then price did another resistance area right here. You can see another resistance area that we have right here. This is another high. And when price broke out of this high, we are waiting for price to come back down to retrace back to this 20 moving average. You can see price retrace back to this 20 moving average. That is when we can enter for a buy, and price just continue shooting up, right? So when you are trading this pullback strategy, right, you can either enter after price has pulled back to the 20 moving average, or after price has pulled back to the last key level. So if price pull back to this area right here and start showing you signs that it's going to go back up, you can enter for that then as well, right? But whatever you do, you must wait for price to pull back or retest back to either the 20 MA or the key level, or the last high, low, whatever you call it. Now, if you want to learn more about price action trading and every single thing I know about price action, you can consider checking out the trading blueprint, link in the description. And also make sure you download my free ebook called The Path to Becoming a Profitable Trader. And smash on that like button if you have enjoyed this video, and hit on that subscribe button, because we are posting valuable content just like this one every single week without fail. And since you like price action trading, you should definitely watch this video next. It's gonna make you a lot of money. Remember, you're just one trade away. Mwah. So you're broke, but you want to get funded with large prop firm accounts like $100,000 or even 300k accounts, so that you can eventually make at least $10,000 per month from trading. In this video, I'm gonna help you get there. But first, I need you to stop spending your hard-earned money on large account challenges. How many times have you bought a challenge with your monthly salary and then ended up failing in the phase 1 of the challenge? Listen, I'm gonna show you a much better way to get your first big funded account without spending a lot of money. So if your goal is to get funded with 100k on FTMO or my Forex funds or any other prop firms out there, but you don't have a lot of money to start to spend on, right? I will show you the exact step-by-step guide to turn $49 into $300,000. The first step is to develop your winning trading plan. So to become a successful trader, all you have to do is to find the system, the strategy, the setups that work, and get rid of all the other trading setups that do not work. So I need you to find a strategy that fits your trading style and your personality, right? Everyone is different. What works for me might not work for you, because we have different personalities. We have different trading style. You might be a more aggressive guy who likes to look at charts all day. In that case, scalping is for you. But if you're like me, more calm and relaxed guy who gets stressed by looking at these candlesticks every single day, you might be more suitable for swing trading. So at the end of the day, this takes a lot of experimentation. You need to experiment with scalping, intraday trading, and swing trading, and find out which trading style suits you the most, and then choose and follow that trading style. Next, you need to have a win rate combined with a solid risk to reward ratio that will make you profitable over a series of trades, not just one trade. A lot of traders think that all they have to do is to make a lot of money on one trade. Wrong. You need to make money consistently over the span of a few trades. So most successful traders, they have a win rate about 50%. Alright, this is the average win rate of a successful trader. All the best traders I know, all the best traders you know, the average win rate is 50%, which means they win 5 out of the 10 trades that they took. Right? Out of 10 trades they take, they win 5, which means they win half of the trades that they take, right? So in this case, if you want to become a profitable trader, you need to aim for a higher risk to reward ratio. At least you need to have a 1:2 risk to reward ratio, at least, alright? If you have a 1:2 risk to reward ratio and you have a 50% win rate, guess what? This can make you profitable. So here's an example. Let's say that you are trading a $100,000 funded account, right? So 100k funded account, and you are risking 1% on each trade. So 1% will be $1,000, right? So your risk is $1,000. So your reward, which is 2 times of your risk. So your reward will be $2,000, okay? So every time you lose $1,000, but every time you win $2,000. So with this in mind, same thing, you have a 50% win rate, which means you win 5 out of 10 trades, right? So let's say you lose 5 trades and you win 5 trades. So every time you lose $1,000, but every time you win $2,000. So let's calculate the net profit. So this is about $5,000. So you lose $5,000, right? But when you win, you made a total about $10,000. Pardon my ugly handwriting, please, but I'm just trying to get the point across. So after 10 trades, you made a total of $5,000. Even though you lose half of the trades. That is why in trading, you do not need to be correct. You do not need to be right all the time. You just need a solid win rate combined with a solid risk to reward ratio, and that is really like the key to risk management. So I'll advise you to aim for 1:2 at least, alright? But you should always aim for 1:3 risk to reward ratio. This is my absolute favorite figure. My favorite risk to reward ratio, 1:3. That is how I trade. So all in all, you need to find a winning trading strategy and then backtest the trading strategy and document the win rate and the average risk to reward ratio over the span of 40 to 50 trades. After backtesting it, you should forward test it. So backtesting is to learn about the strategy. Forward testing or demo trading or paper trading, whatever you like to call it, is to learn about whether you can trade this strategy over the next 30 days. So I would advise you to do this with a FTMO free trial, which brings me to the next point, the next step. So the next step is to use the FTMO free trial as a training ground to help you ensure that you are ready for the live funded account challenges. So when you are trading this FTMO free trial account, you must execute the trade whenever you see confluences every single time without any hesitation, which means that you need to follow your winning trading plan religiously day in and day out. So once you learn about this strategy, you will be able to find out the trade setups that work and those that do not work. And I want you to take note of those trades that work and put it inside your winning trading plan. And then from now on, you should only be taking the trade setups that is from your winning trading plan. So now I want to show you an intraday strategy that I use to pass many of my funded challenges, and it is purely based on simple price action. So this is a trade that I took recently which played out really well. So this is what I like to call the A setup. Alright, so right now, before I do anything, I always make sure I do my top-down analysis, which means to analyze the charts from the higher time frame. Because remember, the higher time frame is king, right? Price move much more heavily on the higher time frame. So you should always make sure you focus and prioritize the higher time frame. So right now we're in the daily time frame and we see that price has literally came back down to retest this area right here, this strong support area that we have drawn. Previously it was a resistance area, but now it has broke through it, come back down to retest it, and now it has become your support area. So the moment price retested this support area, I'm going to be looking for my entry. Alright, so that's when I'll go down to the 4-hour time frame to look for more of my confluences, and I can see there is a double bottom being formed right here. 1, 2, double bottom being formed right here. So that's my first confluence for me to enter for the trade, right? And in this case, I can also use my moving average, my 8 and 14 EMA, right? So at some point of time, somewhere right around here, I will have entered for my buying position when I see the moving average cross over. So my first confluence will be this double bottom being formed right here. My second confluence will be this moving average crossover. So my third confluence could be some sort of candlestick patterns, which I like to look for in the 1-hour time frame. So once I'm at the 1-hour time frame, I see that somewhere right around this area where the moving average has crossed over, price gave me this gigantic, huge, bullish engulfing candlestick, which shows there's a lot of momentum, a lot of buying pressure pushing the price up. So at this point of time, I got my 3 confluence. I will enter for a buy right here. So in this case, I'm going to be placing my stop loss below this last higher low right here, and go to my 4-hour time frame. You can see this is the last higher low, right? So I'm going to be placing my stop loss below it. And for my take profit, ideally you want to take profit at the next key level. And if I zoom out to the daily time frame, I see that my next key level will be right here, right? There's a key level right here. Okay, this is the next key level. And then the next key level after this key level is this one that we have right here, this 2060, this ultimately strong key level, right? So these two are the key levels that I'm going to be looking to take profit, right? So I can either take profit right here at this key level or even take profit all the way up here. And I'm going to be placing my take profit all the way up here because I know that price has already been making like a very nice steady uptrend. Price has already created market structure, higher highs, higher lows. Now most likely it's going to get pushed up to the next major key level, which is all the way up here. And in this case, you can even draw like a Fibonacci from here till here, point A, point B, and you can see price retrace to the 61.8 level, and it's about to launch up to the negative 27 extension somewhere right around here, or even all the way up here at this midpoint between the negative 27 and the negative 61.8 level. So in this case, this is how I'll just hold the trade. I ended up holding this trade for like quite long. I believe it was quite long, and I'm holding a trade for, was it 1 month? I forgot how long it was, but it was pretty damn long. So this was more of like a swing trade, right? So I ended up holding the trade, and we can see price ultimately went up to smash our take profit, and this was like a 2,000 pips trade, right? 2,000 pips trade. So this is more of a swing trade already, right? This is past an intraday trade. But if you wanted to make this an intraday trade, you know, get in and out within the day, what I would have done over here is that instead of taking profit all the way up there, I would have entered right here. I would have entered somewhere right around here, right? And then just get out at the next key level, which could be right here, this next nice resistance area right here. This is where I would have gotten out. Or I would have even entered for a buy like somewhere right around here, where price gave my multiple confluence and take profit at the next key level, which could be right here, right? The next key level right here, this mini resistance area that we have right here, right? So depending on the trading style, like I said just now, whether you're a scalper, intraday trader or swing trader, this strategy is going to work like differently. So you have to always make sure you adapt and find out what works best for you, right? So in this case, if I'm choosing a more intraday approach, I'm going to be going down to like this 15-minute time frame to look for my entry. Go down 15-minute time frame, look for my entry, and I see the price has been consolidating at this support area right here. I'm waiting for some sort of break of structure, so to speak. You can see price consolidating, and over here price broke out of this consolidation, coming down to retest this consolidation, and gave us this huge bullish engulfing candlestick. So the moment price broke out, coming down, retest it and go back up, right? There's a break of structure, and I could easily enter for a buy right here. Also got my moving average crossover, and just take a quick scalp all the way up to this area that we have right here. Something like this, right? This will be more of an intraday trade for those people who like really want to intraday trade during the FTMO challenge. So like I said, this is all just based on pure, simple price action, nothing too complicated, right? And I showed you two examples. One is an intraday trade and one is a swing trade. And since these traded setups work, I'm going to put these trade setups into my winning trading plan. So the next time I see any of these trade setup, I'm going to be executing the trade without any hesitation, because I know for a fact that they are going to work. So the next step is to buy a 5k or two 5k funded account challenges from my Forex funds. Listen, if you cannot pass the FTMO free trial, you won't be able to pass the paid challenges from my Forex funds. So there's no point jumping straight to getting a funded account from my Forex funds when you can't even pass the FTMO free trial. So after you buy a 5k funded account challenge from my Forex funds, use and follow the winning trading plan like what you have done for the FTMO free trial, and take trade setups that work. And then once you have passed the challenge and you have made some profits from the payouts, use the profits to buy one 50k funded challenge account, and then just repeat the same process. Use the payout that you earn from your 50k funded account to buy either a 100k account, or even a 200k account, or even a 300k challenge. So the whole point here is to start with $49 to get your first small little funded 5k account, and then everything you make after that is just pure profit that you are earning based on your skill level. And just think about it, if you lose $49, you probably won't sweat, because that's the price of eating out at a nice restaurant, or it's even cheaper than your gym membership. And scaling from a 5k to a 50k to a 300k account is much more easier on the psychology, and you will give yourself time to improve your trading performance at the same time. Now, before you start doing this, you must understand two core important principles. Number one is to focus on the process, not the money. I know I talk about this a lot of time, but this point is really goddamn important. You need to be patient and remember that at each stage you are learning, you are improving, you are literally building confidence in your ability to trade. You are becoming a master at trading and learning how to manage prop firm accounts properly, correctly. And once you learn how to manage these accounts correctly, the sky is your limit. You'll be able to stack accounts on top of each other, and then if you can do this consistently, correctly, you will potentially be making $100,000 a month from trading. So let's say that you are making 5% monthly from your funded account. So on a $5,000 account, and you make 5%, that will be a profit of $250, right? Small amount of money. But if you think about it, you get your 50k account. So you get a 50k account and you make 5%, that will be $2,500 on your account. And then eventually you keep on scaling up and you are trading a 300k account, and 5% of 300k would be $15,000, guys. $15,000. When you finally make 15k from your funded account, you'll be glad that you were disciplined enough to follow your trading plan and put in the work to develop your confidence and mental toughness to trade the larger accounts. Trust me, guys, it's coming. Just continue to put in the work, and remember, I'm rooting for you. And if you keep going and scale up, one day you'll be managing $1 million in funding. And if you make just 10% of that, that will literally be $100,000 in 1 month. 100k in profit in 1 month. That's absolutely bonkers, mate. Next, I'm gonna briefly explain how I trade during each phase. Phase 1, phase 2, phase 3, right? The risk management behind it. Risk management is really the key when it comes to getting funded by prop firms. So for those people who are still watching this is my secret for you. So for phase 1, this is your first phase, and this is what we call the evaluation phase, right? In this phase, you need to get like a profit target of about 8%. So this is the phase where I'll go a little bit more aggressive, which means I'll risk about 2% to 3% on each trade, right? On each trade that I do, I'm going to be risking about 2 to 3%, right? I'm going to be going a little bit more aggressive on the phase 1 because you have a higher profit target. Now for phase 2, this is where it's the establishment phase. It's the phase where they know that you can trade, but they really want to confirm that you are able to do this for the long term, right? For the long run, you are able to become a consistently profitable trader, not just for 1 month, but for 2 months, 3 months, 4 months, 5 months. So for the establishment phase, the target is about 5%, right? You have to reach about 5% in like 1 month, right? During this entire phase. So in this case, you can chill a bit. That's how I like to do it, because it's literally 5%, right? 5%. So you can risk about 1% to 1.5% on each trade, right? Oh, that's how much I'll be risking during phase 2. About 1% to 1.5% on each trade. And then phase 3 is when you can finally unlock your funded account. You can finally actually get like a funded account, like a live funded account, not just some demo funded account in your evaluation and your establishment phase, right? So for phase 3, when I get my funded account, I'm going to be risking about 0.5% per trade, alright? Why am I risking only 0.5%? So that I can get my first withdrawal and my refund for the challenge that I paid, right? Once I do this, I have like a safety net, and all the other money that I earn from this account is just pure profit, right? It's just pure profit. So your first goal should be to get your first withdrawal and get your refund for the challenge, so that you can like risk free, so that you're risk free right now, and all the other profits that you earn from this account from now on is just pure profit. And with this, it will really help with your psychology, because now you know that, okay, none of my hard-earned money is on the line. Everything that I'm going to earn from now on is just pure profit. If you want to find out exactly how I trade and my winning trading strategies that will definitely help you get funded, you can consider checking out the Trading Blueprint course. Link in the description. And smash on the like button if this video has helped you guys out, and hit on the subscribe button, because we are posting useful trading videos like this every single week. Alright, so hit on that subscribe button, baby. What are you waiting for? And if you want to learn more about getting funded, this video is for you. Watch this video next. And remember, you're just one trade away. Mwah. I'm not gonna waste your time like all the other finance gurus out there who make videos of them in a mansion, in a Lamborghini, and yet they do not show you their live account. You watch hundreds of videos by these finance or trading gurus, and yet you are still broke, which means that these videos clearly do not work. By the end of this video, you'll learn exactly how to get filthy rich from trading, because I'm going to show you the exact step-by-step guide that I took to get to where I am right now. And most gurus will probably charge you $5,000 for this knowledge, but I'm here to give it to you for free. But there's one thing that you need to do for me. There's this one thing that you need to do if you want this video to work for you, which is you need to be focused. You need to be hyper focused. It hasn't even been 1 minute and you're already distracted by scrolling down to the comments and seeing what other people say, or checking your Instagram, scrolling through your Instagram feed. Am I wrong? You cannot become rich from trading if you cannot focus. That's just the truth. So I really want you to make eye contact with me right now and treat this video like a lecture from a master to a student, from a mentor to a mentee, and take down notes and learn and really absorb what I'm about to say. And by the way, I've literally written a 2,000 word ebook on how to become a profitable trader, like literally a complete guide, and you can get it in the description, link in the description. Just click on the link in the description and you can just download the free ebook literally for free. Alright, so I'm gonna become a millionaire this year. Let me repeat myself. I am going to become a millionaire this year. No, I will become a millionaire this year. And the truth is, a few years ago, I was dead broke. Imagine being so broke that your family cannot even afford a pair of Adidas sneakers. I still remember when I was a kid, I always wanted those Adidas sneakers, you know, like those classic sneakers that my friends would have. And I will ask my parents to buy it for me. Hey mom, can I get this $100 Adidas sneakers? And she always said no, and we always end up going to the wet market to get some cheap $20 shoes. Imagine being that broke. At one point of time, I literally had negative $20 in my bank account. Negative $20. And I would literally used to go clubbing and party until like 3 a.m. And I remember that there's this one day, not one day actually, all of those times where I went to club, I could not afford the taxi home. So I will party until like 3 a.m. and then I will just end up sleeping on the bridge with a bunch of other degenerates until the next morning. Then I will take the train home. That was how fucking broke I am. That was how pathetic and miserable I am. Now, before you do anything, if you want to get rich from trading, the first step is to set clear goals. Success comes from productivity. Productivity comes from following a clear and defined plan. And following a defined plan comes from having a clear goal. So it all comes down to having a solid goal in mind. Why do you want to get rich from trading? Why do you want to become a profitable trader? Why do you want to become rich? It could be for your family. It could be so that you want to you can travel the world. It could be for your children. It could be for your parents. You want to retire your parents. That's how I started. I started trading because I know that I want to get rich. And why do I want to get rich? Because I wanted to retire my dad. Not because I wanted to travel the world or all that crazy shit, but just because I wanted to retire my dad. Simple as that. So by having a strong why in mind, it will allow you to keep going when the times get tough. Because trust me, when you are trading, you're going to lose a lot of money, and there's going to be a lot of times that you're going to feel like giving up. You're going to feel like, you know what, trading is not for me, man. It's too hard to become a successful trader in trading, so I might as well like go try drop shipping or affiliate marketing or some shit, or crypto. There's going to be times like this where you will literally feel like dropping everything and just say fuck it and quit trading. And at those times, if you don't have a clear why, if you don't have clear goals in mind, you will succumb to the monkey mind. You will quit. But if you have clear goals, if you have set clear goals, if you have a clear why in mind on why you are doing this, you will keep pushing on. And remember why you started in the first place. Let me ask you a question. What would happen if you do not quit? If you do not quit trading and you keep pushing? Right now, if I close my eyes and visualize, it'll be traveling the world, right? I'll be traveling the world. I'll be having freedom, like time freedom, location freedom, financial freedom. I'll have all types of freedom. I'll be free to do whatever I want, whenever I want, with whoever I want. I'll just be free. And that's a very beautiful feeling to have. So yeah, like just think about why. And right now, I want you guys to literally write down your goals, right? I don't care how lazy you are, write down your goals, right? I literally have like a paper right in front of me right now on the wall. There's pasted that says my goals for 2023, which is 1 million subscribers and make $1 million and launch my course and other stuff on there, right? Those are literally my goals, my clear and defined goals on paper, and I've pasted it on the wall so that I can look at them every single day. Make your goals your wallpaper. You can literally set it as your wallpaper as well. So I literally want you to take some time out to write down your goals. It could be short-term goals, it could be long-term goals, right? Maybe short-term goal could be you want to make $100 per week from trading. Or long-term goal could be you want to become consistently profitable. You want to retire your parents. You want to quit your job and just pursue trading full-time. All of these are goals that you can put it down on paper and it will keep you on the right track. Right, so write down your goals, right? Short-term goals, long-term goals. And I kind of like to think I kind of like to think of my life as like 5-year crusades. So 5-year crusades are basically like thinking in your life in terms of the next 5 years. What are you going to do in the next 5 years? So right now, if you think about what your life is going to be in the next 5 years, you make all these short-term suffering, short-term losses of you blowing your accounts and accounts after accounts mean nothing. All of these things will mean nothing because you know that in the long run, and then 5 years later, you will become profitable and you will achieve the dream life that you have always wanted to achieve. So for real, the first step, very important, is set clear goals, right? You need to have a clear goal in mind. You need to have a clear direction in mind. You need to have a clear destination. If you are jumping into a car, you need to know where you are going. You need to have a destination in mind, right? So yes, at some point of time, you should focus on the process, but you should also have a goal in your mind, right? So that's the first step. The second step, or rather the next thing you need to do, is to rewire your brain. Well, the statistics are like 90% of traders are losers. They are not profitable. So only like the top 10% or top 5% of traders are consistently profitable. So how do you get to the top 5%? If you think about it, 90% of the traders are losing. And if you're following the advice of the majority, which is like, oh, selling at resistance, buying at support, all that majority stuff, it's not going to work because 90% of traders are losing. And guess what? They are following what the majority is following, which is this mainstream advice. So what you need to do is to rewire your brain instead. You need to start thinking like the top 10% of traders. You need to start trading like the top 10% of traders and do what's opposite of the majority. So if the majority is buying, guess what you should be selling? The majority is selling, you should be buying. Be fearful when others are greedy. Be greedy when others are fearful. So rewire your brain and get rid of all the useless information that you have absorbed and start learning and adopting the useful information. What I mean by that is that, let's say you go onto YouTube and you see a lot of different trading strategies out there. Trust me, some of these trading strategies will work and some of these will not work. And chances are you need to get rid of those strategies that do not work if you have learned them in the past. Right? It could be using a shit ton of indicators on your charts. Guess what? That do not work because you need to focus on price. Focus on what price is doing, price action. So it could be right now, you know what? I will just get rid of all my indicators and focus on price action because that is ultimately what works. What's proven and back-tested to be working? Price action. So ladies and gentlemen, rewire your brain because that is how you can become profitable. Next, the third step is to develop other income streams. Right? So when it comes to trading, you need money to make money. Alright? That's just the truth. Money does not just come from thin air, right? You can't just generate money from thin air. No, it's not possible. You need money to make money in trading. So the more money you have in your trading account, guess what? You have more room to play with, and that means that you can make more money. Does that make sense? Let's say you have a 100k account compared to having a 10k account. On a 100k account, you can use a standard lot size. On a 10k account, maybe you can only use a 0.1 lot size, depending on the leverage, right? But this means that if you can make much more money on a 100k account compared to a 10k account. That's why in trading, you need money to make more money. More money, more money, more money. And the only way you can make more money is by having other income streams outside of trading, right? So how I develop my other income streams is by starting my YouTube channel, my mentorship, right? All of these things has literally helped me to act as an additional income stream on top of trading, right? So I will use the money that I earn from these other income streams and pump it into my trading account so that I can make more money, right? I'm not gonna sit here and lie to you and say that, oh, my mentorship is so that I can give back to the community and I really enjoy teaching others. Yes, I enjoy these things. But another thing is that it acts as an additional income stream, right? It acts as an additional income stream for me, right? Yes, I love teaching. Yes, I want to give back to the community. But yes, I also want an additional income stream. So 100%, you need to develop other income streams, right? And these income streams allow you to generate money that you can put into your trading account. Because if you only have $100 in your trading account, guess what? You're not going to make much. And if you are broke and you only have like $200 in your bank account, you should not be putting that $200 in your bank account into your trading account, because you will lose that money. Trust me, you will lose that money. The only way to get rich from trading is to have a larger trading account. How are you going to make millions from trading if you only have $100 in your account? That is absolutely unrealistic. So you need to focus on building your income, right? Increasing the amount of money that you are earning. You could be working at a 9-to-5 job, or you could have a side hustle to help you generate the income. Once you have disposable income, money that you can play with, money that you are okay with risking or losing, put it inside your trading account, right? Not by putting every single bit of money that you have left in your bank account into your trading account, because that will just cause you to blow your account. And when you blow your account, guess what? You are bankrupt. You are brokey now. Now what if you are broke? Now what if you have less than $1,000 in your bank account? What if you don't want to risk your hard-earned money and put it inside your trading account? What you can do is to get funded, right? Get funded by a prop firm, right? So there's a lot of prop firms out there, My Forex Funds, FTMO, which will literally offer you a 100k account or 200k account or 50k account, and in return you give them 20% of your profits and you keep 80% of the profits or something like this, right? There's a profit split. So this funded accounting, prop firm thing is very, very useful for those people who do not want to spend a lot of hard-earned money into trading, who have like less than $1,000 in their bank account. Guess what? These funded account programs things, they are perfect. They're built for you, alright? They're built for you. But listen, you should not be getting funded unless you have a profitable, proven track record on your demo account. So if you are trading a demo account and you are still not profitable, there is no use getting funded. And when it comes to getting funded, it's actually quite hard to pass the challenges, the different phases, right? Because you need to have like you cannot have more than 5% drawdown, and you need to hit a profit target of 10% or something like this, right? There's a lot of rules when it comes to getting funded. And the whole point is you need to have solid risk management. The only way you can get funded is to have solid risk management. So if you want me to do like a full guide on how to get funded, comment down below as well. And just now, like I said, it takes money to make more money in trading. So if you only have like a small trading account, there is no use trying to flip that small account into $1,000 or even $10,000. You need to rather invest that amount of money that you have into getting a funded account. You can get a 50k account, you can get a 20k account, and this will allow you to play with more capital and allow you to practice your risk management, and this will allow you to make more money, right? Imagine trading 20K account compared to trading a $200 account. Guess what? On a 20K account, you can potentially make much more money and sustain in the long run. Now, let's say that you have made money from trading, you have made money from your funded account, and you have developed other income streams, and now you're making money. You're making profits here and there. You are balling out. What should you do with this excess money? You should reinvest back into trading or reinvest back into your business. My advice for you is that do not buy stupid shit like Gucci or branded shit just to impress people who do not care about you, who you don't care about. You should instead spend money on making your life more pleasant and easier. So the priority should always be to spend money on improving the quality of your life before all this materialistic bullshit. So I will advise you to reward yourself by improving your equipment, by making your office nicer and improving your quality of life, because like you'll be rewarding yourself, but doing it in a way that is like tax efficient, because you can business expense it, and it also makes you want to work more and work harder. So it acts like an extra motivation for you. Example, invest in a MacBook, or invest in a nice camera if you're a YouTuber, or invest in a nice microphone. All of these things help you to feel more productive and help you to feel more motivated to do your work, and that in return make you more money. And if there's one thing I love to spend my money on is experiences, right? I like to spend my money on experiences. That means traveling the world, seeing how the different cultures of the different countries are like, and just looking at different sceneries, right? Different sceneries, it could be mountains, it could be seas, it could be city view. Just looking at all these different sceneries just excites me, right? Brings out the inner child inside me. So what I can also do is to just invest in these experiences to make your life much more better, to make your life much more rewarding and much more fulfilling. And like I said, do not be stupid and spend your money on some stupid materialistic bullshit like Gucci, freaking Louis Vuitton, all that stupid bullshit just to impress people that you do not like, alright? Now, these are just a few things that have actually made me rich from trading. But if you want a complete step-by-step guide on how to become a profitable trader from scratch, that means like what you need to learn and what you need to do, how should you trade on a demo account, all of this stuff, I've literally give you a step-by-step guide, a 2,000-word guide, ebook on the path to becoming a profitable trader, how to build wealth from trading, which you can get in the description below. So click in the link in the description to get access to my free ebook that I've literally spent a lot of time working on. And the truth is, to do all this, to get rich from trading, you need to get on monk mode. And I'll be doing like a full guide on it. So if you want to see the video, just comment down below and let me know that you want to see it, and hit on that like button if you've enjoyed this video and you've learned something from it. Now, you definitely want to watch this video where I literally explain to you how to become a millionaire this year, right? I literally give you a full guide just like this on how to become a millionaire. Click on this video right here to watch it, because trust me, you're gonna enjoy it. And remember, you're just one trade away. You will not become a profitable trader if you do not master proper risk management. Risk management is one of the most important things you must know when it comes to trading. It's one of the most important factors that is required to become a profitable trader. So I want you to take out a pen and a paper right now and get ready to take down some notes, because I'm literally giving you the keys to becoming a successful trader. So when it comes to risk management, it's actually very simple, as it only boils down to 4 factors, right? Firstly, we have risk capital. Secondly, we have risk per trade. Thirdly, we have risk to reward ratio. And lastly, we have your maximum exposure. I'm going to take out some time right now to explain each one of them in depth for you guys. So firstly, let's look at risk capital first. What is risk capital? Risk capital is basically the amount of money you are comfortable losing. And if you lose it, it will not greatly affect your financial situation. So a lot of traders often ask me this question: how much money should I deposit into my account? And my answer is always the same. You should only deposit money you can afford to lose. So it's actually different from everyone. For me, it could be $100,000. For you, it could be $10,000. or for John it could be $100, right? Basically, you should only be depositing the amount of money that you are okay with losing. You must go in with this mindset that whatever money you deposit into your life account is gone, alright? It's gone. So I would advise you to ask yourself, how much of your total net worth would you be comfortable losing? Example, let's say that I'm comfortable with losing 10% of my net worth, and let's just say that my net worth is $10,000. So if I'm comfortable with losing 10% of $10,000, that means that I am comfortable with losing $1,000. So this is the amount of money that I'm okay with losing. So I'm gonna deposit $1,000 into my life account, not more. Alright, not more than $1,000. I can deposit $500, $600, whatever it is, but you cannot deposit more than the amount of money that you are okay with losing. Meaning that if you need this money to pay your rent this month, or for your daily expenses like food and traveling, transport, or is your emergency fund, do not deposit it into your life account. Alright, you need that money. You need that money to survive. So you should not be depositing that amount of money into your life account. And also, ladies and gentlemen, if you risk too much of your net worth, it actually messes up your psychology and it will cause you to actually lose money. Let's say that right now, same example, my net worth is $10,000, and instead of risking 10%, I risk maybe 60% of my net worth. So I deposited about $6,000 into my live trading account. See, 60% of my net worth is inside my live trading account right now. And today, I start taking a few trades in a row. It turns out I lose a few trades and I end up blowing that account. So now that I blew that account, guess what? 60% of my net worth is gone. I'm only left with 40% of my net worth. It's actually linked, because when you deposit a large amount of your net worth into your trading account, you have this mindset that now you must win every single trade, because your every last stroke of money is on the line. So you will try to force trades. You will take trades even when there is no opportunity. And the worst thing you should do is to deposit every single bit of your money in your bank account into your trading account. I've made this exact same mistake in my first year. In my first year, I remember I was trading. I remember I had like maybe $500 or even $100 left in my bank account, and my goal was to like flip it to $10,000 or even $1,000 just to cover my daily expenses. It was the last drop of my money in my bank account. So the only $100 left in my bank account, I deposited into my live account, and I ended up losing that $100 because every single day I was just looking at the charts, looking for opportunities to trade. And even when there is no opportunity at all, I still take trades. And this causes me to take a lot of stupid trades without thinking through. A lot of stupid trades, as the saying goes, stupid trades equal to losing money, alright? So I ended up just losing that last $100. So I ended up broke for the entire month. So that is a lesson that I learned the hard way. So make sure you guys take this time out to really think, okay? Think about how much percentage of your net worth you want to put inside your trading account. How much percentage are you willing to lose, right? Are you comfortable with losing? It could be 5%, 10%, or even 1% of your total net worth. And then go ahead and put that capital into your life account. And that is what we call the risk capital. The risk capital. By the way, guys, if you find this boring right now, you should wake up, alright? Because this is very important. This is very fundamental for your trading success, alright? So right now, I'm just going to go through these concepts on risk management with you, and then later, then I will go on to the charts and try to illustrate some examples. So if you are looking for charts, be patient and master these concepts first, and then later I will go through the charts with you guys. So the next thing I want to go through is your risk per trade. So what is risk per trade? Risk per trade is basically how much money are you willing to risk on each trade, every single trade. So this depends on whether you have a high risk tolerance or a low risk tolerance. So once again, it differs from everyone, right? For example, I might be a risky, a more adventurous guy, so I'll risk a higher percentage of my capital. And you might be a low risk kind of guy, like a play safe kind of guy who like to invest in those like safe dividend stocks. in that case, you should risk lesser money. So the general rule for risk per trade is to risk 1% to 2% of your total account on each trade. For me, I personally like to risk 0.5% on each trade, or sometimes even 1%, right? So this is just how I like to trade, because this allows me to have much more room for error, meaning that I can lose a few trades in a row and I'll still not blow my account. So let me give you an example on this man named Andrew. You can see this derpy looking guy. This man is called Andrew. So Andrew risked 25% of his total account on each trade, right? Because he wants to get rich quick from trading fast. He wants to become a millionaire trader this month. So he's trying to flip his small account to become a few $1,000,000. Of course, to make money fast, you must risk a lot of money so they can get back a lot of money in return. That is exactly why this stupid ass man start risking 25%. So he started taking his first trade and he end up losing it, and now he is down 25%. He lost 25% of his account. And then he started taking 3 more trades. Okay, so he started taking 3 more trades and he lost all 3 of them. Minus 25%, minus 25%, and also another minus 25%. So he just lost 4 trades in a row, and every time he loses 25%. Which means he lost a total of 100%, and he just blew his entire account just because he lost 4 trades in a row. Right now, when you are watching this, you probably think that Andrew is stupid and ignorant. He should have risked lesser. But when you're put in the same situation, you have done the same exact mistake. Just think about it. When you started trading, you also tried to risk a lot of money because you want to get rich quick fast, right? And you end up blowing that account over and over again. This is exactly why it is very, very important that you stick to the risk parameters of 1% to 2% per trade. So let's say right now, instead of risking 25%, you risk 1% per trade. If you risk 1% per trade, every time you lose 1%. So you can lose 100 trades in a row before you blow your entire account, right? You can lose 100 trades in a row. That is a lot of room for error. So like I said, once you have determined your risk per trade, then you can go on and calculate what is the correct lot size to use. So once you calculate the lot size, it depends on 2 factors. Number 1, your stop loss distance. And number 2 is your risk per trade, right? So based on these 2 factors, you're able to calculate your lot size, and you already have your risk per trade, right? After you think that, okay, you know what, I want to risk 1% on each trade. Now, that is your risk per trade. So for your stop loss distance, it depends on the particular trade that you take, right? So let's say you take this trade today and the stop loss is 30 pips. Then yeah, the stop loss distance is 30 pips. So once you get these 2 factors, once you find out these 2 factors, that is when you can go and calculate your lot size using a position size calculator. So you can just go Google position size calculator, and yeah, you can just come onto this page. So let me give you an example on a trade. Let's say that today I decided to trade Euro USD, and I want to enter for a buy because I start seeing price creating a higher low right here. So I go down to the, let's say, the 15-minute time frame to look for my entry. So once I went out to the 15-minute time frame and I decided that I want to enter for a buy here. So if I'm entering for a buy here, I'm going to place my stop loss below this higher low. I'll place my take profit at the next key level, which is somewhere right around here. You can see in this example, this trade right here, this stop loss is 58.3 pips. So this is my stop loss distance, right? 58.3 pips. So I will go to my position size calculator that I have and just input the numbers. So you can see currency pair, choose Euro USD because we are trading Euro USD. And then the account currency, it depends on your trading account, what currency it is. So for me, USD. So for the account size, I will put $10,000. So let's say that I'm Andrew and I'm trading with 10K, alright? I'm trading 10K. And the risk ratio is how much money are you risking per trade, right? If you want, you can put money, or if you want, you can even put risk percentage. I prefer to put risk percentage. So I'll put 1%. I want to risk 1% on each trade. And my stop loss, remember the trade that I just took, the stop loss is 58 pips. So I'll put 58 pips. So once I place the calculate button, it literally does all the calculation for you, right? You see that, okay, the sizing you should be using is 0.17. So right now, this is the correct lot size that you should be using. You should not be using a lot size that is bigger than this if you are following your risk management plan. So go on to your MetaTrader 4, and before you enter for the trade, go and change the lot size to 0.17. and then enter for a buy. Let me repeat that. You calculate your lot size first and then you enter for the trade. It's not the other way around. A lot of beginner traders, they enter for the trade first by using a stupidly high lot size, and then they end up realizing that that's a huge mistake. So make sure you calculate your lot size first before you do anything, and then you enter for the trade. So let me give you another example. Let's say that right now I saw that price is at this support level, and once again I want to enter for a buy right here. So I enter for a buy right here, and then I want to take profit estimated somewhere right around here, and this time I'll place my stop loss below this support level. So in this case, my stop loss is 15.7 pips, so I can just put that down right here. My stop loss distance is 15.7 pips. And how much is my risk per trade? My risk per trade, how much money am I risking per trade? So my risk per trade could be maybe I'm the risk 1% of my account on each trade. So 1% of $10,000 would be $1,000. So I'm risking $1,000 on each trade with a stop loss of 15.7 pips. Now that I get these two factors, I can go on to calculate my lot size. And how do I do that? Go on to the position size calculator once again. So in this case, I'm trading GP USD. So let me find where is GBP USD. Right here. And now I'll put account size, same thing, I'm trading with 10k in my account, and I'm risking 1% of 10k, which is $1,000. And this time around, what's the stop loss distance? Let me go check again. It's 15.7 pips, right? So 15.7 pips, I'll just round it up, put 16 pips, okay? 16 pips. And press the calculate button, and you can see it does the calculation for you, as simple as that. 0.63 lots. You should be using 0.63 lots. So now go to MetaTrader 4 and change it to 0.63 lots. That is how you can calculate the correct lot size that you should be using. So stop asking me what lot size should you be using, because it really depends on these two factors, your stop loss distance and your risk per trade. And your risk per trade depends on your risk tolerance. Now the third factor I want to discuss is your risk to reward ratio. So what is your risk to reward ratio? Your risk to reward ratio measures how much your potential reward or return is for every dollar that you risk. So let's look at this diagram right here to further understand risk to reward ratio and the importance of having a solid risk to reward. So you can see in this example, if your risk to reward is 0.5, meaning that you are risking 1% to make 0.5%. You are risking $1 to make $0.5. You will need a total of 70% of winning trades to cover the expenses of your losing trades. This means you need to win 70% of your trades, 7 out of 10 trades, just to break even. Okay, just to break even. Now, that is a very, very high win rate, and I would say that that is a very, very hard win rate to get, to achieve. I can honestly tell you that professional traders, they have a win rate of about 50% or sometimes even 40%, right? And to get 70% win rate, you are saying that you are better than most professional traders. So I wouldn't say it's impossible, but I'll say it's very hard to achieve. Now, next, your risk to reward. Let's say that you are taking a trade and you are risking 1% just to make back in return 1%. So you're risking $1 to make $1. So in this case, you need a total of 50% win rate. So you have to win 5 out of 10 trades. And like I said, this is the win rate of professional traders. And once again, it's pretty hard to achieve. So why not make your life easier and adjust your risk to reward ratio rather than win rate, which is something that is very, very hard to adjust. Now this is exactly why I trade with a minimum risk to reward ratio of 1:2. If you are trading with a 1:2 risk to reward ratio, that means that you need a total of 35% win rate just to break even. So out of 10 trades, you only need to win 3 or 4 trades just to break even. And I can honestly tell you that is much more possible. That is much more realistic for us, for you retail traders. So I would advise you to stick to a risk to reward ratio of at least 1:2. And if it's less than 1:2, do not take that trade. Okay, the higher the better. And I would kind of advise you to aim for 1:3. So how you figure out your risk to reward is to set your stop loss and take profit first, put it and just the tool and set your stop loss and take profit first, and then calculate your risk to reward ratio. And then you can assess your trade outcome and make better trading decisions for the next trade. So let me show you some examples on charts. So using back this same example on GBP USD, let's say that I enter for a buy somewhere right around here in the middle Okay, enter for buy here. And I'll place my stop loss below this support level, and I'll place my take profit at this next resistance level right here. And you can see, in this case, my risk to reward ratio is 1. That means I am risking 1% to make 1% back in return. Just think about it. If you are risking money, do you want to get back in return the same amount of money that you are risking? No, that is absolutely stupid, because you want to get back in return double the amount of money or even triple the amount of money that you are risking, so that you can actually make more money, right? Now, using back the same scenario, instead of entering or buy right here, let's say you entered earlier, you got a sniper entry, you entered somewhere right around here when you start seeing price reverse from this support level. So once again, you place your stop loss below this support level, and then place your take profit and all the way up at the next key level right here. And you can see in this case, your risk to reward ratio has now become 4.56. So you are risking 1% to get back in return 4.5%. You are risking $1 to make $4.5. And I can honestly tell you that is much more worth it. So I will go ahead and take this trade. But I will never ever take a trade if the risk to reward ratio is less than 2. Okay, if it's less than 1:2, I will never take that trade. So if it's like 0.98, no go. Alright, if it's 1.68, no go. It has to be at least 2 for me to take that trade, because ultimately I want to get back in return twice or double the amount of money that I am risking. So the last concept that I want to cover for risk management is this thing called your maximum exposure. So this is more of an advanced topic to talk about. So maximum exposure is basically an overall amount of money that you are willing to have at risk at any one time. So you can only find out your maximum exposure after you have figured out your risk per trade. So make sure you figure out your risk per trade first, and then figure out your maximum exposure. So maximum exposure is basically determined by the number of trades I can be in at any one point of time. So let me give you an example. Let's say once again, this man named Andrew, he decides to risk 1% per trade. Okay, he can risk 1% per trade. And let's say his maximum exposure is 5%. This means that he can only be in 5 trades at any point of time. So how I got 5 is by taking 5% and divided by the risk per trade. So take the maximum exposure and divide by risk per trade. This shows me how many trades he can be in at any one time. So knowing this, Andrew, he cannot be taking 6 trades at the same time, alright? He should be only taking a maximum of 5 trades at any point of time. So yeah, for my maximum exposure, I like to keep it at 5%, and I will recommend you to keep it at 5%, because you should never ever risk more than 5% on any single trade. So that's a very good, nice number to have. So like this video if you have learned something, and hit on that subscribe button for more free trading courses just like this one. And click on this video right here to find out the strategy that I use combined with this risk management strategy. It's gonna be insanely powerful. So click on this video to find out more. And remember, you're just one trade away. Mwah. You will finally understood smart money concepts after watching this video. So in this video, I want to simplify smart money concepts in a way that even a 5-year-old kid can understand. Most of the information that you can find online is all about retail trading. Oh,
Buy at support level.
if you search for how smart money and the big banks trade, you won't find much information about it. And today, smart money trading is probably one of the best kept secrets in the world of trading. And today, I want to reveal those secrets with you, to you. Once you learn how smart money trades, you can implement these concepts into your style of trading and make even more money. So let me explain to you some smart money concepts that you must follow so that you can finally become a profitable trader. So firstly, let's talk about boss or break of structure. So in an uptrend, price will be looking like this. You'll be making your higher highs and higher lows. Every time price breaks through a new high, this is what we call a bullish break of structure or BOS, boss. So there's a break of structure here, there's another break of structure right here, and another break of structure right here whenever price breaks the previous high. So at some point of time, price will eventually lose momentum and start reversing in the other direction. And for this reversal to be valid, price has to break the previous higher low. So this is the previous higher low and price has to break below it for it to be valid. So once this move has happened, this is what we call the chalk, or rather a change of character, chalk. In order for this chalk to work, we want this previous high to be an area of interest, like either a supply or demand zone or an order block. So the stronger the zone, the better it is, right? The better this chalk will work. Once we have a change of character, the chalk, and an area of interest, your supply zone, we can expect price to reverse and start going down. And then as it starts to go down, it will create your lower highs and lower lows and lower highs and lower lows. And as price creates your lower highs and lower lows, it will also create your bearish break of structure whenever price break through a lower low. So when price break through a lower low, it creates another break of structure right here. So this is our bullish break of structure, and this is our bearish break of structure, and this is our change of character. And at some point of time, this downtrend will start losing momentum, like this uptrend right here, and it will start reversing back up, and this will create your change of character right here. So this is pretty much the whole concept of this smart money concepts, break of structure and change of character. For this strategy to work, we want the area of interest, this zone right here, this supply and demand zone, to be as strong as possible, because the stronger it is, the more likely the price will move in the direction that you want it to. Now, what do I mean by strong area of interest? There are two methods that you can use. The first method is what we call the liquidity grab at a supply or demand zone. Firstly, you need to identify a strong supply or demand zone on the higher time frame, like the 1 hour time frame or above. So the higher the time frame, the stronger the area will be. And what you want price to do is your liquidity grab. So what is a liquidity grab? A liquidity grab is basically a forced breakout, right? In this case, where price breaks through a recent high or low, does a fake out like this, and then reverses in the opposite direction. So the psychology behind this liquidity grab is that people will be entering for a sell when price breaks through the recent low, because this is the recent low, and when price breaks through the recent low, the sellers will be selling down because they think that this is a downtrend, right? So when they enter for a sell right here, they're going to be placing their stop loss above the last lower high, which is right here. So if price end up doing a false breakout and price actually comes up, it will hit all their stop losses, adding fuel to the fire and increasing the momentum, causing price to shoot up. So we can take advantage of this by entering for a buy position somewhere right around here and make money as price goes to the moon. The second method to find a key area of interest is by using order blocks. So an order block is basically an area where the smart money and big banks likes to enter and exit. So how do you spot order blocks? You spot order blocks by looking for strong reversals like this and this and this. You can see whenever price goes up here, it reverses down strongly, and when price come back down here, it reverses back up strongly. So this level right here and this level right here is what we call the order blocks. Now let's combine whatever that we just learned, and I'm going to show you a high win rate smart money trading strategy. So for this strategy, make sure that you are using a higher time frame, like the 1 hour time frame. The first thing before you do anything is that you want to mark up your key levels or supply and demand zones by finding where price is reversing or respecting. Right here, whenever price goes up here, it always collapses 1 time, 2 times, 3 times, 4 times. So this is a very strong supply zone, and I can draw another demand zone at this key support area right here. So now I'm going to show you this strategy on GBP USD, the Great British Pound against the US dollar. We can see that there's a support area right around this area here, because whenever price come back down here, it always reverses, come back down, reverses. So you can see price has just been respecting this support level or demand zone, whatever you like to call it. And over here, price gave us a liquidity grab. So the first thing you want to look for is for price to give us a liquidity grab or a forced breakout at a supply or demand zone, which is exactly what price gave us here. Price broke through the support level and then it just went back up. So this was a very clear forced breakout, or what I like to call liquidity grab. Now you can even mock up your breakout structure here, and the next thing you want to look for is a change of character. Price must make a change of character after the liquidity grab. Do not take that trade if there is no change of character. So it's very important that you look out for a change of character after the liquidity grab. So I can spot a change of character right here, because this is the last lower high before price collapse, and then at this point of time, this is when price has broken the last lower high, breaking structure, causing a change of character. Now next, when do we actually enter for the trade? We enter when there is a fair value gap. Now, what is a fair value gap? A fair value gap is when price goes up or down so fast that it doesn't give buyers or sellers enough time to enter the market. Therefore, it creates an imbalance in the market. So price will usually come back up or come back down to this fair value gap and reject it. And that is when you can enter for the trade. So you can mark a fair value gap by using a rectangle tool to mark the previous candle's wick before the big move, and then taking the next candle wick after the big move. So right here, this will be your fair value gap. So there are bullish fair value gap, which is basically a big fat green candle, and there is also bearish fair value gap, like this big red candle right here. So back to the example, you want to enter for a buy when price has came back down to our fair value gap. So in this example, I can spot a fair value gap right here. You can see right here there's a fair value gap, and right now what we want to do is to wait for price to come back down to retest this fair value gap. Then that is when we can enter for a buy. And the reason why I mark this as the fair value gap is that if you look towards right here at this candle here, price went up super fast, right? Went up super fast, gave us a big fat green candle. This candlestick wick, the next candlestick wick, and the candlestick wick before it, I marked up the entire box, giving us the fair value gap. So I want you to know that price can come to the middle of the fair value gap, reject it, and then continue going up. But at the same time, remember, price can do anything it wants. So price can also touches the fair value gap, which is like this area here, just touches it and just reverse and head back up. So if you were waiting for the price to go to the middle, you would have missed out on the trade. So ultimately, it's really up to you on which way you want to do it, right? There is no right or wrong answer. So in this trade, I would have entered for a buy right here when price has came to the middle of this fair value gap, and it's showing me some sort of signs that it's going to reject it and head back up. And I'll place my stop loss below the fair value gap, and I'll place my take profit at where price last stopped at. If you look towards the left, there's a little resistance area being formed right around this area here. So that is where I should place my take profit. And as you can see, this was a 1:3 risk to reward ratio trade. Very beautiful trade. And the thing about trading fair value gaps is that you are able to get those nice sniper entries, which will give you a high risk to reward ratio. This trade smash our take profit right here. Very beautiful trade. And the next thing I'm looking for is another trade. So to show you this strategy works, I'm just gonna be continue using this strategy on this chart. So let's wait, and you can see at this point of time, price created another resistance area, or that's rather a supply zone, and it gave us a liquidity grab right here when price broke through the resistance and then it came back down. So this was a forced breakout. So this is a liquidity grab. And the next thing you want to look for is a change of character. This is a change of character right here, because this is the last higher low before price goes up and like failed to break past, right? So this was a little change of character right here. Price came back down, broke through the last higher low, giving us a change of character. So the next thing I want to do is to mark up my fair value gap, and I can mark up a fair value gap right here because I saw there's a huge push down and there's a big red candle here. So I'll mark my fair value gap right here, and you can see price has went back up to retest the fair value gap. So this is where I will enter for a sell position. When prices came back up to retest this fair value gap, enter in the middle of this fair value gap, place your stop loss above this fair value gap, and take profit all the way down at the next key level. And I can see the support level right here. I place my take profit right there. And once again, this was a very beautiful trade. We end up smashing our take profit on this trade. It's really as simple as that, guys. I know that a lot of YouTubers, a lot of people on YouTube have been trying to make smart money concepts very complicated. very, very hard to understand so that you guys can buy their course. And I'm telling you, it's complicated, but it's not that complicated. It's still doable, alright? It's still doable, and I'm here to help to simplify this entire process because I understand how you feel. When I first started learning about smart money concepts, all these BOS, chalks, BOS, fair value gap, all these foreign terms, I have no idea what the hell are those. And then I went to do my research and I end up being even more confused than I already am. I hope that like this video was able to like help to simplify it. But do not exit this video yet. I'm going to show you more examples because I understand a lot of you guys still probably do not understand this strategy yet, and you have to understand this strategy if you want to trade smart money concepts. So right here, after we close this trade, once again, price is at this support area right here, consolidating around this area, and there's a break of structure over here when price broke through the last high right here. And then at this point of time, price went back up to the same resistance area that we have drawn, and it gave us a liquidity grab once again. Gave us a liquidity grab, and then this is the last lower low or last higher low. And right now, price has broken this last higher low. So once price has broken this last higher low, it gave us a change of character. When price gave us a change of character, next step is to look for a fair value gap. And I can see a fair value gap right here, this big red candle here. And you can see the price went up to retest it. And if you notice, price did not go to the middle of this fair value gap and then go down. It literally just went up, touched the fair value gap and go down. So this is exactly what I mean by what I said just now. Sometimes price can just touch the fair value gap and then just collapse. So in this case, if you were waiting for price to go to the middle of this fair value gap and then go down, you would have missed out on this trade. But like I said, ultimately it's still up to you. So I'm going to show you one last example, and you can see I've drawn some break of structure, and honestly, break of structure, you can draw it on your charts, but this strategy is more about change of character. So right now, price has been collapsing, coming down to our beautiful support area right here, this beautiful strong demand. So price literally gave us a huge liquidity grab right here, force breakout, huge liquidity grab. So the next thing I have to look for is a change of character, and I get a change of character right here because this is like the last high and price has broken the last high right here. So this was a little change of character. And actually within this move, I can actually spot another change of character somewhere right around here. Because if you look closely, right, this price was trying to create a new like lower high and lower low and lower high and lower low, and it failed to do that. So price actually gave us a last lower high right here. So the moment price break through this last lower high, that will be your change of character. This thing is so damn long. Let me just shorten this thing right here, put it right here. The moment price start breaking through this last lower high, this is the last lower high, and price broke through it, this is your change of character. So right now, I can spot a fair value gap right here, and I'm waiting for price to come back down to retest this fair value gap, which it did right here. So the moment price start coming down here to back to this fair value gap, I'm going to be entering for a buy right here, place my stop loss below this fair value gap, place my take profit at the next key level, which is right here. There's a key level being formed right here, right? There's a resistance area. So you can see once again, this was a very, very beautiful trade. And it really is all about rinse and repeating the same thing, right? I have shown you that this strategy works. This chalk, boss and cox, this strategy work, alright? I'm gonna call it boss and cox strategy from now on. It's a very beautiful name, very easy to remember. So make sure that you go apply whatever you just learned on the charts and integrate whatever you just learned into practice, because that's the only way you can master smart money concepts, by practicing endlessly. Like this video if this video has helped you guys out. I really tried my best to simplify smart money concepts, which is a super complicated concept, into a way where like a 5-year-old can understand. So smash that like button and hit on that subscribe button for more weekly trading videos. And if you want to learn about how I trade using price action, check out this video right here. Trust me, this strategy is 10 times simpler than the freaking smart money trading strategy, alright? Click on this video right here to find out more. And remember, you're just one trade away. Mwah. If you are not making at least $100,000 a year, you are a brokey, and you need to listen to what I'm about to share with you. They want to keep you poor. The society want to keep you poor. The government want to keep you poor, keep you in debt so they can continue working for them. Saving money will not make you rich. You will still be broke after investing that $100 of your paycheck. If you have a rich mindset, a big mindset, you will know that the best investment that you can make is not in someone else's company. It's not in that crypto shitcoin that will flew 10x next year or some shit.
Imagine working over 60 years.
Just so they can enjoy 5 years. How fucking stupid is that? The key to success, or rather the secret to success in life or in trading in general. So the first point I want to talk about is how everyone advice is shit. Everyone is lying to you. They want to keep you poor. The society want to keep you poor. The government want to keep you poor, keep you in debt so that you can continue working for them. So the first step to becoming rich is to actually forget everything they taught you and rewind your mind. To become rich, you need a rich mindset, not a brokey mindset. And I always think that a brokey, the definition of a brokey, it doesn't matter if you earn $100,000 a year or $1 million a year. You can still be a brokey. It's all about your mindset. As long as you have a rich mindset, you are not a brokey. So, the first advice that I want to talk about is how saving money will make you rich. A lot of people will tell you, save money. Oh, don't buy that coffee. Don't buy Starbucks. Don't buy McDonald's. Save that money instead, and you'll become rich. Is it true or not? If it's true, why are your parents poor? Why are your friends poor? Why are your teachers poor? The same people who ask you to save money, they are poor. They are broke. They do not have $50,000 in their bank account. So this same old advice on saving money, make you rich, all these are bullshit, alright? That's the first thing I want to tell you guys. All this shit are bullshit. Saving money will not make you rich, alright? Let me repeat myself. Saving money will not make you rich. You need to get that through your head. That's the first point. Second point, investing. A lot of people will tell you that, oh, you should buy this stock. You should buy crypto. That will make you rich. Oh, if I invest $100 of my paycheck every month, I'll become a millionaire in 30 years. 30 years? 30 fucking years, and for what? So that you can enjoy being at the beach when you are old, white, saggy, and grey? What kind of bullshit is that? People who are retired, what's the normal retirement age? It's probably like 65 or 60 or something. Imagine working your entire life just to enjoy maybe 10 years of your life, because like the average lifespan is probably like 70 or 90 years or some shit. Imagine working your entire life. Imagine working over 60 years just so they can enjoy 5 years. How fucking stupid is that? So compound interest is a scam. It's not gonna make you rich fast. If you are looking to be fast, to get rich in your 20s, it's not gonna happen by investing in some freaking company out there. What kind of small dick mindset is that? To invest in some company? Think about it. If you have a small dick, you're gonna invest in someone else. You're gonna invest your hard-earned money into someone else's pockets to make someone else rich. However, if you have a rich mindset, a big dick mindset, you will know that the best investment that you can make is not in someone else's company. It's not in that crypto shit coin that will flew 10x next year or some shit. It is in yourself. That's the best investment that you can make, period. I'm gonna elaborate more on this later on. So, stop trying to find that perfect stock to invest in. Stop trying to find that perfect crypto to invest in. If you are investing pennies, you're gonna get back pennies. Investing $100 per month into your index fund, it's not gonna make you rich. Get that through your head, alright? It's not gonna fucking make you rich. Don't be a dumbass, alright? If investing your paycheck every month into a stock will make you rich, then why are most people still poor? Most people are investing. Most people are investing and trusting compound interest. So that's like the first thing. I mean, that's the second thing, compound interest, right? So, like I said, everyone they taught you, everything they taught you is a lie. Whatever schools have taught you, they are lying to you. Let's say you go to uni and study business. The lecturers over there do not do business. They have never done business before, or they have failed at doing business. That's why they come here to be your lecturers. They come here to be your teachers. Your parents are broke. Your teachers are broke. Your friends are broke. So why the fuck are you listening to them? Just because they are older than you? It's all the matrix speaking. Let me tell you, the only way to get rich is to increase your income. It's not by investing. It's not by saving money, saving on that coffee. It's by increasing your income. So the next question that you might have is, how do you actually increase your income? Very good question. There is a million ways out there to increase your income. There's a lot of ways to increase your income out there, right? There's drop shipping, or how to make money online. There is thousands of ways to make money online. Drop shipping, trading, freaking affiliate marketing, YouTube, TikTok, whatever. There's a lot of ways to make money online. I'm not here to teach you guys how to make money online. I'll leave that to Andrew Tate or something. You can join Hustler University or whatever the fuck you want. I'm not here to teach you how to make money online. I'm here to teach you how to get rich and how I got rich. For me, I choose Forex trading. That's the route that I choose to get rich. Forex trading. And I focus on Forex trading. What I mean by that is that I literally only spend time doing that one thing, that Forex trading, just focusing on that, and not giving a shit about drop shipping, affiliate marketing, other fucking form of income stream. So that is what you need to do right now. The first step to increase your income is to pick one method to get rich and focus on that and becoming extremely fucking good at that one thing. Right, so that one thing, like I said, it can be Forex trading for you, or stock trading, crypto trading, affiliate marketing, real estate, whatever that you want. Go ahead, choose that. But chances are, if you are here, you're probably interested in getting rich from trading, right? You're interested in that. I'll talk more about that later. So after you pick one method, I need you to study your ass off. Learn everything you can about that particular thing. Right? Learn everything you can about that particular thing. If you pick Forex trading, make sure you become the best at it. Make sure you learn every single thing there is to know about it. Make sure you master it, no matter what it takes. You need to have that drive, that perseverance to keep going, even when times get tough. So that's the first thing. I know I keep on saying that's the first thing. I'm pretty sure I said like a lot of things already, but yeah, I'm just like freaking messed up. So after you focus on that one thing and you spend weeks, months trying to master that one thing, I want you to have this goal in mind. You need to aim to make $10,000 per month. That's the magical number right there. $10,000 per month. $10,000 per month is the magical number, because once you reach that, you are pretty much like set. That means that you can afford like quite a lot of things in life. You can travel to your favorite country. You can walk in a store and buy whatever you want without having to worry about the price tag. You can go to a restaurant and have a nice dinner with your family without worrying about price tag. So $10,000 per month is the first goal that you should aim for once you start making money online. Remember this figure, guys, 10K per month. After you hit that 10K per month, trust me, the next goal should be 20K, 30K per month, and it's very much possible. I'm telling you, it's possible because I did it. Once I hit 10K per month, next month I hit 20K, 30K, 40K, 50K. Very, very much possible. So, aiming to make 10K per month. After you make 10K per month, what's the next step? Continue increasing your income. Continue to increase your income. I'm telling you, you have to continuously reinvest that money back into the thing that you are doing. Let's say you are Forex trading. Reinvest money into it. Reinvest your profits into it. You make $1,000, okay, good. Put it inside your account, maybe take $100 out to reward yourself, and then leave the other $900 inside that account to compound it, so that you can make even more money. You can use a bigger lot size now. Reinvest the profits. Reinvest your income back into your business. The last thing you should fucking do is to buy some fucking Gucci or LV sneakers. Fucking bullshit. That's another lie that Matrix is trying to sell you. Consumerism. Oh, you should buy this Nike branded bag to be cool in school. Oh, you should buy Air Jordans, bro. It's like trending right now. Fuck off. Why are you buying such expensive shit when you are fucking broke? And and you have to freaking go on finance and try to loan money just to buy that fucking Snickers. How fucking stupid is that? How are you buying all this shit when you haven't even retired your parents? Don't be a fucking idiot. Be wise with your money. Reinvest that money back into your business or whatever that you're working on. Trust me, it will really pay you tenfold if you do that. Compared to if you buy that freaking Snickers, which will depreciate over the value, and then some fucker right now is gonna say that, oh, you know, Snickers is actually a good investment. Oh, shut up, bro. Fucking hell. All you brokies out here. So yeah, after you make 10k per month and you start making more money, then that is when you can finally start investing in stocks, crypto, or whatever. You don't start investing when you are broke. You invest when you have money to actually invest in. Once you make 6 figures in your business, okay, then now you can start thinking maybe you should buy this stock or buy this crypto so they can grow that money passively. But if you are earning $1,000 per month, why the fuck are you investing? You should be spending that money and spending that time and effort to think about ways to make more money. Have some side hustles aside or some shit. Like I said, if you invest pennies, you're gonna get pennies. You will still be broke after investing that $100 of your paycheck. Why do I say this? Because this is exactly what I did. I remember last time, I would say like 2 to 3 years ago, I was working as a waiter, serving tables in a restaurant. And a lot of you guys know my story. I was serving tables in the restaurant, very, very broke at that point of time. And I was making probably about like $8 per hour or sometimes even $10 per hour. $8 per hour, guys. So yeah, that was fucking broke. So I'll make maybe like $1,000 per month. And then at the start, I'll start buying some Snickers, like some dumbass teenager do, you know, some stupid shit. Buy some nice Snickers. But then as I start learning about money, then someone told me that I should invest. Or I see YouTube tell me that, okay, you know what, the only way you can get rich is through investing. So I start investing like $500. I put $500 into my account and try to buy Apple stock or some shit. So I did that for maybe like a few months. And 1 year passed by. I made some money. How much did I make? $200. $200, guys. Yeah, I'm still poor after 1 year of investing. So that is why I tell you guys to invest only when you have money. Let's say you have made over 6 figures now and you start investing $50,000 into your favorite stock. Now, 1 year later, you'll probably get back $20,000 or some shit like this as profit. And that is so much more significant than making $200 or $50 from your favorite stock after a year. Like you could have spent that money, or rather I could have invested that money into myself and made 10 times more money than that. So let me repeat the steps. Number 1, increase your income. Number 1, increase your income. And how you do that is by finding a method to make money online or in real life, whatever you want. Just find a way to make money. And then third step is to focus and try to be as good as possible at that one thing. Literally get laser focused on that one thing, get as good as possible on that one thing. And then fourthly, after you make some money, you make 6 figures, you make 10k per month, then that is when you can start investing into stocks or whatever. But I would still advise you to invest back into the one thing that you are working on. It could be Forex trading, it could be your business, it could be your YouTube channel, whatever it is. I would advise you to reinvest the profits back into that, because I have found that that is the best way to become rich. Right, so that's the first part of this lecture. I kind of tell you guys like the 4 steps that you should get rich, and there's a lot more wisdom I'm about to share with you. Next point I want to say is that hard work. A lot of you guys think that hard work is going to get you rich, and I'm here to debunk that myth. Hard work alone will not make you rich. When I was serving the tables as the waiter, I was working very hard. I'll work from day till night and reach home at around 2 a.m., 1 a.m. I was working very hard, guys. I was working super hard. But was I rich? I wasn't rich. I was broke. The thing about working hard is anyone can work hard. I can hire a guy from Fiverr to work hard for me, and I can pay him maybe like $10. Is he rich for working hard? Fuck no. Hard work is no longer significant in the modern age. It's about working smart now. And it's not about how hard you work. It's about what you work on. Think about that sentence for a minute. It's not about how hard you work. It's about what you work on. I hope that you guys are taking down notes right now, because like a lot of this thing is really quite like gem and quite useful. Okay, who's taking down notes? Let me see the lecture chat. Go type it down in the lecture chat right now. Are you guys taking down notes? If you are, say yes. If you are not, say no. Wow, wonderful, guys. Wonderful. Wow, there's a lot of people taking notes. Okay, nice. Okay, back to the lecture. I'm actually surprised by how many people are taking down notes, because if I were inside this lecture, I probably would not take down notes, because I'm a lazy piece of shit. So yeah, back to the lecture. It's not about how hard you work on, it's about what you work on. What did I just say? It's not about how hard you work, it's about what you work on. Right, so this all links together. Whatever I just shared with you, it all ties in together. The best investment that you can make is in yourself. I want to emphasize on that sentence. When I said that the best investment you can make is not in stocks, it's not in crypto, it's not in real estate, it's not in Rolex, it's in yourself. I'm going to be frank with you, I'm going to be 100% honest with you. I got the most returns from investing in myself. So what did I do to invest in myself? I bought books, started reading books, self-improvement books, finance books, Forex trading books. All of these helped me become the man I am today. I bought courses. I bought online courses. I studied them. I practiced my trading. I applied what I learned from those courses. And it helped me to become a profitable trader I am today. The third thing, I invest in equipments that allow me to work better. A lot of people always ask me like, what do I spend on my money on? I have so much money, so what the fuck do I spend it on? And my answer always shocked them, because I don't spend it on cars, I don't spend it on luxury watches, I don't spend it on a lot of things. Like, yes, I do have a luxury watch here and there, but I don't like necessarily buy them. I don't really enjoy luxury, because I invest all those money, or rather I spend the money that I earn on equipments that will allow me to work better, to become more productive. So it can be simple things like getting a nice quality noise cancelling headphones, or a new monitor, or a new chair, or a new table. All of these things will allow you to work better, and if you can work better, guess what? You're gonna make more money. So technically, all these things I'm still reinvesting back into the business. So those are the three things that you guys can invest on. You can start buying books, or rather invest in books, invest in online courses, invest in equipments. I would say the final thing you guys can invest in is mentorship, right? I'm not here to sell you my mentorship program. My mentorship program is fully packed right now. We have no more slots. But if there's one thing I would tell my younger self, is to invest in a mentor. Find a mentor. I can't believe like how important it is to have a mentor. If I had a mentor, I would have mastered trading maybe within 1 year. It wouldn't have taken me so long, and I wouldn't have lost so much more money. The key to success, or rather the secret to success in life or in trading in general, is to follow someone who is already successful at what they do. You are listening to me right now because I'm already successful at trading, and I am wealthy in my 20s. That is exactly why you are following me right now. You are listening to me right now. So my advice for you would be to find a mentor that you can look up to. It can be me, it can be another YouTuber, it can be another guy out there in the industry. I don't give a shit who it is, but find someone and try to like learn everything you can about that person. Follow him on all the social media, follow him on Instagram, follow him on YouTube, follow him on TikTok. And then start watching all his videos so that you can start emulate his thinking, start thinking like him or her. That is how you can actually become successful. You start emulating the successful people. What I did was that I did not have a mentor, so my mentor was like books. So I will read a lot of books, and then like my mentor will be like the authors, and I will visualize myself living their life and like applying what they learn and how they think. Oh, Bill Gates does this. Oh, Steve Jobs does this. And I will try to emulate how all these successful people live. Oh, they have a morning routine. Okay, you know what? I need a morning routine too. Oh, they meditate. Okay, you know what? I can meditate too. I can start journaling too. All of these are beautiful habits that you can work on. So those are the 4 things that I would advise you to invest in if you want to invest in yourself. Those are the 4 crucial things. The 3 reasons why you are poor. There's only 3 reasons why you are poor. You guys probably heard these 3 reasons before. But you know what? I'm still going to say it anyways. The 3 reasons why you are poor. Number 1, you are lazy. I would say a lot of people right here listening to this, you guys are maybe not lazy. You guys are probably like working hard, but not hard enough. For me, every single minute of my day, I'm spent working. If I'm awake, I'm working. Other than lunch and dinner, I'm working. And I would say that I work not because like I have to, but because I enjoy it. It's my purpose and it brings me fulfillment, right? So that is why I work. I don't have time to sit there and watch Netflix, watch some movies like a little bitch. If you're doing that, you're lazy. You're scrolling TikTok in the middle of the day when you could have been using that time to work on your side hustle or learning trading. Get the fuck out of here. You're lazy. You are choosing to look at the Instagram models page instead of watching the trading geek videos. Oh, you're lazy. Get that shit out here. You're lazy. So I would say like 80% of people here, you are not lazy. Maybe it's just the 20% that needs to hear this. You guys need to work harder if you want to be rich, man. Like, no cap. I know I said that hard work is not significant, but you still need to work hard at what you do, alright? Second reason why you are poor. You are arrogant. Oh, no. I'm not arrogant. I'm actually pretty humble, guys. Oh, I'm pretty humble. Then why the fuck are you not watching my videos till the end? You are arrogant because you think you already know this. You think that you are already good at trading just because you made $10 today from trading. You think that you are a master. So there's nothing for you to learn anymore. You don't have to watch my videos anymore because you think that you are the best right now. That's being arrogant. I'm telling you, if Elon Musk walked in the room right now and he tell me how to make money, I'm gonna sit there, shut the fuck up and listen to him. I'm not gonna speak a single word. I'm gonna listen to him and then ask him questions. I'm gonna be open-minded enough to absorb his knowledge. Because this motherfucker, Elon Musk, is richer than me. So I'm gonna listen to him. And that is called having humility. You need to have the humility to say that, okay, you know what, I'm not there yet. I need to listen to this wise man and his wisdom. I need to take down notes. And the thing about trading is you will never ever be so-called perfect at trading. Trading is always about improving and learning. Even at this stage right now, I'm still studying trading. I'm still exploring advanced trading strategies. I'm always learning. I'm learning how to make better YouTube videos. I'm learning how to improve my trading. I'm learning how to become more disciplined at trading, even at this stage. There's always someone out there that is better than you, and you need to have the humility to say that I'm not there yet and start learning. So that's the second point. You are arrogant. I mean, the second reason on why you are poor, you are arrogant. The third reason is stupid. You are fucking stupid. If you are poor, you are stupid. I mean, if you are stupid, you are poor. Okay, basically that's the third reason. And I really believe that no one here is stupid. I really believe that everyone here listening to me right now is smart enough to come into this lecture. If you are smart enough to come into this lecture, you are smart enough to make money. So I'll say the people who are stupid is probably like, maybe like not inside this call. Some other people out there. So those are the three reasons on why you are poor. Lazy, arrogant, and stupid. So based on these three reasons, you guys can go ahead and like figure out what you need to work on. It could be laziness, it could be arrogance. If you're lazy, okay, tell yourself that, you know what, instead of scrolling TikTok for 1 hour a day, why not spend that 1 hour on studying trading, watching the Trading Geeks videos till the end. Keyword, till the end. Which brings me to the second reason, arrogance. You are not watching my videos till the end because you think that you already know the thing already. Oh, I already know supply and demand good enough, so I'm not going to watch this video. Oh, I already know how to trade support and resistance. That shit is so simple, so I'm not going to watch this video. No, you fucking don't. You fucking don't. You're doing it wrong. You're drawing the supply and demand wrong. So have some humility. Suck it up. Suck up your ego. Put your ego aside and start learning. Taking down notes. I'll say that these three reasons kind of stopped me from being rich also. So I'm here to tell you guys that you can get rid of these three things. Lazy, arrogant, stupid. You can get rid of these three things. Josh Hughes asks, how do I not be lazy? Very good question. Very, very good question. How do I not be lazy? Dear Josh, discipline. If I have one word for you, is to be disciplined. What does it mean to be disciplined? It means to do the hard things, especially when you don't feel like it. Today I woke up, I didn't feel like doing anything today. I felt like just lying in my bed. Oh, I'm so tired. I feel like just sleeping in the bed. Oh, I feel like just laying in the bed and scroll TikTok instead of getting up and do work. Discipline is getting up, getting the fuck up, tell yourself to get the fuck up, and still do the work, even though when you don't feel like it. That is discipline. So I would say, start developing discipline. Start developing resistance to the slave mind. Your mind is weak. Your mind is telling you that you should play that video game. Your mind is telling you that you should jerk off to freaking porn every day. Your mind is weak. Do not listen to your slave mind. So start developing the discipline to do the hard habits. I would say that there's a video where I make on my YouTube channel. It's called 3 Habits That Make Me a Successful Trader in My 20s. Go watch that video, implement those 3 habits into your life, and this laziness, illness, this sickness will be gone. Alright. So I hope that has answered your question, Josh Hughes. Jesus Christ, guys, there's a lot of recommendations. Okay, so a lot of you guys asked for books suggestions. I'll probably make like a video on book suggestions soon, but basically, I'll recommend you to read these 3 books on Forex trading. Number 1, 10 Essentials of Forex Trading. Number 2, Trading in the Zone. Number 3, Naked Prices or something, is Naked Charts or something. Yeah, basically read these 3 books. You said increase your income and then invest, but how do I increase my income without investing?
Dear Kosai, you have not been listening to my lesson. Increase your income and then invest. Increase your income means that you need to start having a side hustle first, right? It could be making YouTube videos. It could be like what Nicholas said, learn a skill that brings you money. Once you learn a skill that brings you money, you learn how to make money online, you start having money, then that is when you can invest. You don't start investing first when you are broke. You invest after you have made money. So Kaitan asked any books recommendation for better discipline and self-improvement. I would say there's a few books. Number 1, Marcus Aurelius Meditations, very beautiful book. Number 2, 12 Rules for Life. Number 3, The 10X Rule by Grant Cardone. Alright, let me just answer a few more questions before we end here today. QQ asks, do you recommend The Intelligent Investor? No, not really. It's a thick-ass book that it's like freaking wrote by Warren Buffett or some shit. Warren Buffett read it and he became rich or something, but nah, I never read that book. Okay, Truth has been asking a quick explanation of Fibonacci retracement levels. It's very hard for me to explain here because I cannot share my screen, I cannot show my face. So I'll say go watch that YouTube video that I did on Fibonacci retracement. Don't be lazy, literally go search on YouTube Fibonacci retracement by The Trading Geek and you can see there's 2 videos what I made. Coercion asks a very good question. How you fight your own ego? Is this should be mastered too? Very, very good question. Ego. Ego is the enemy. Ego is the enemy, right? So to fight your own ego, as much as I want to tell you that I have the answer to that, I do not have the answer to that. My answer would be what I did for myself is that I accept that I'm not up there yet. I'm open-minded to rich people advice, successful people advice, and I go out there and start learning. And I accept the fact that the market is powerful, the market can do anything it wants. So if the market is showing me that price is going up, I'm going to be flexible enough to enter for a buy instead of entering for a sell just because my ego said that I should enter for a sell. So I'll say to become more open-minded to suggestions and wisdom, coercion. Okay, Behemoth asks, do you know other good mentors beside you? Not really. I would say there's a lot of YouTubers out there doing the same thing as me, so you can go search for other trading YouTubers. So yeah, don't worry if you guys weren't able to like hear some part of the lecture or my mic is mute for some time, because all of this is recorded and I'm gonna send the recording or rather post the recording onto YouTube. So don't worry about it, guys. Okay, last few questions before we end here today. What are the side hustles we can do to make $500 quickly? Quotient, good question. I would say, you see, that's the thing. Everyone want to make money fast. Everyone want to make money quick. There's no such thing as quick. There's no such thing as fast. If you want to get a six-pack abs, it's not going to get you there overnight. You need to put in the work for months, weeks, or even years. So I would say, go out there, learn how to make money online first. Learn the side hustle first. Once you start getting good at that side hustle, then you can start maybe like making $500. It could take years, it could take months, it could take weeks to do that, alright? It took me like maybe like 1 year just to make $500 on YouTube. It took me 1 year. So are you able to wait that long? So I'll say, like I said, a lot of side hustles out there. I'm not gonna tell you what side hustle to use because I personally use Forex trading. So yeah, there's a lot out there. You can do your research. Freaking editing videos can make you money. I don't know, like affiliate marketing make you money also. Yeah, guys. The one best side hustle to make $500 fast is OnlyFans. Go create an OnlyFans. Alright, guys. So whatever that I taught you here, everything that I taught to you today about how to get rich is all useless if you do not apply what you just learned. I understand that some of you guys might have taken down notes. Now is the time to go apply those notes. Go apply whatever you just learned. Go out there, find that side hustle, learn everything you can about it. Start making money, aim to make 10K per month. And then that is when you can finally start investing or something. Knowledge is only power when it is applied. So it's useless. You have just wasted 40 minutes sitting here listening to me if you do not go out there and actually apply what you just learned. So if you want to become rich, apply whatever I just told you. Do whatever it takes. Work hard. Master the skill that you want to master. The skill that will make you money, that will make you happy. And your life will become much more purposeful, much more fulfilled. And you will make more money than the entire past generation do. So that's my final advice for you here today. I want to thank you guys for attending this lecture. 270 people over here. That is crazy. Thank you guys for attending this lecture. And I hope that you guys have learned something inside this lecture. I just wanted to like spread some wisdom here. So right now, it's 8:42 p.m. right now. In about 20 minutes, I'm going to be dropping a YouTube video on the only way to trade profitably. So after this lecture, wait 20 minutes, you are going to see another YouTube video by me on YouTube, so you can go watch the video and start studying trading again or something. Remember, do not let the ego get into your way. Do not be arrogant, be humble, have some humility to say that, okay, you know what, I'm not that good yet, so I'm gonna try to become better at that thing. It's always a continuous journey. Life is always about improving 1% better every day. So with that, I leave you here today with all this wisdom, and I hope that you guys have an amazing day, and I will see you guys soon. And remember, you're just one trade away. Mwah. As simple as that. I want to keep things as simple on this channel, and the truth is I do not trade sideways market. I do not trade when the market is consolidating. Remember, there will always be opportunities another day. If this week price is going sideways, guess what? I'm not going to be trading the entire week at all. I'm not going to be taking a single trade because I want to see clear opportunities. I want to see my trade setup being formed on the chart, and then I will take that short. But if it's not present, be patient. Do not force any trades, because if you start forcing trades, you will lose money. Now let's calculate the results. So we made about 4.3R, and then plus 2.4 plus 8 plus 1 plus 4.6R. So in total we made about 20.3R. Alright, 20.3R. So if you risk $1,000, guess what? You have made a total of $20.3 thousand. Alright, $20.3 thousand. So this is how much you can potentially earn in, I think this is 1 month. How much you can potentially earn in 1 month of trading if you are trading $100,000 account and you are risking 1% per trade. Okay, you're maybe made about 20K, 20% per month. And honestly, this is super duper good. Alright, this is quite good, and honestly is quite, I would say, like, it's not that realistic for beginner traders, because beginner traders, as long as you get like 5% plus 5R, that is already good for you per month. Okay, so ultimately to me, trading is not about being right or wrong, winning or losing. It's all about making sure that your losses are as small as possible and your winners are as big as possible. That is how you can become profitable, when your winners literally engulf the losers. That is how you can become profitable over the long run. So how do you do this? You need to practice proper risk management, like what I did here, right? I make sure that I risk 1% on each trade, every single trade. So you can see 1%, 1%, 1%, 1%, 1%. It's very consistent. And I managed to make all this using nothing complicated, no fancy 5 indicators on my charts, nothing. Pure price action, market structure, just by looking at higher highs, higher lows, lower highs, lower lows, to see what price is doing, what the candlesticks are showing me. That is how I managed to become profitable. This is my own personal strategy, and I hope that it works for you. I hope that you take maybe at least 1% of this entire video and go implement it into your own trading journey. Because remember, knowledge is only power when you apply it. If you watch this video, after you're done watching this video, you're gonna go back to trading randomly using stupid indicators and just like trading when the market is going sideways. It's useless, right? It's useless watching this video. You should apply what you just learned from this video, and trust me, you will achieve so much more success if you do that. So make sure you like this video if this video was helpful to you, and hit on that subscribe button for more weekly trading videos just like this. And remember, you're just one trade away. Mwah. Today, I'm going to teach you the concept of top-down analysis, or some may call it multi-time frame analysis. Top-down analysis is basically analyzing the charts from a higher time frame down to a lower time frame. You will need 3 time frames. The first time frame that you need is the direction time frame. This time frame allows you to identify the direction of the market. Is price going up, or is it going down, or is the market in sideways? The next time frame that you need is your behavior time frame. This time frame will give you a clear direction of what price is doing. Is there a lot of momentum? Or is the market breaking structure? Or is there a lot of weak rejections, doji candlesticks? Is the market retracing to create your new higher highs and higher lows? So that is the second time frame. For your third time frame, this is where we're going to be entering the trade. So this is your entry time frame. If the price is in the downtrend, you should be looking to sell. And then if price is in the uptrend, you should be looking to buy. As simple as that. So these are the 3 time frames that you need. Then the time frames that you should be trading on depends on your trading style. For me, I am more of a mix between intraday and a swing trader. So the time frame that I'll be using for this is that I will use the 4-hour time frame for direction, use the 1-hour time frame for behavior, and use the 15-minute time frame for my entry. But if you are a scalper, you will not be using these same time frames. You will probably be looking at different time frames. Maybe your direction time frame could be the 1 hour, and then your behavior could be the 15-minute, and then your entry time frame could be the 5-minute. So ultimately, the time frames that you're using, the top-down analysis that you are using really depends on your trading style. So make sure that you tailor this strategy to work for your trading style. So for this example, we're going to start doing our top-down analysis by using the 4-hour time frame first. So that is our direction time frame. The reason why I choose the 4-hour time frame is because the structure is just so clean, and it clearly allows me to identify like the overall trend direction instead of going down to like the 15-minute time frame where the price is just going up and down, up and down, up and down. A lot of you will look at everything that is going on right now and be very confused on whether you should go in for a buy or go in for a sell. But that is a wrong way to trade. Since I am day trading, I really do not care about what price is doing all the way back here. I am focusing on what price is doing right now, what price is doing today, which is over here in this area right here. So that means that I'm not going to be plotting a shit ton of lines on my charts just like this. Like, just look at this, it just looks so confusing. How are you able to find out like what price is doing if you have so many lines over here and now you just confuse yourself even more? Just like I said, I'm more of an intraday trader, so I'm going to be focusing on what price is doing right now, what price is doing today. So on the 4-hour time frame, we can clearly see that price is in an overall uptrend. But right now, today, price is like consolidating over here. So I'll take my box tool and mark the high of this consolidation and mark the low of this consolidation right here. So right now, what we want to do is to wait for price to give us a clear directional bias. At this point of time, price can either break above the high to show us a lot of momentum to the upside, or it can break this low right here and push down even further.
So those are the two scenarios. Right now, I'm just bar replaying this, but if I am live trading, I'm gonna wait for the 4-hour candlestick to close first before making my decision on whether I should go in for a buy or a sell. Let's look at what price does next. You can see price is breaking the low, and most of you would enter for a sell right here because you hear the same advice all the time. Just sell when price break through the support level. And I want you to look at the next candle after price break through the support level. It literally gave us a big green candle. What I'm gonna tell you next is gonna change your trading forever. I'm gonna give you the secret sauce for free. So right here on the 4-hour time frame, we can see that the overall momentum is up. And then we go to the 1-hour time frame and we can see that the momentum is going down. And then next, you go to the 15-minute time frame. Now, which way do you think the momentum is going right now? Is it going up or is it going down? The momentum is going down. Look at this. Just look at this. It's obviously going down, right? However, on the 4-hour time frame, it was going up. So you can see it's kind of like contradicting each other. The 4-hour time frame, the higher time frame, is telling you that price is going up. But then on the 15-minute time frame, price is showing you that it is going down. And remember, the higher time frame trend is always stronger than the smaller time frame trend. So the 4-hour trend, the 4-hour momentum is stronger than the 15-minute time frame momentum. So this uptrend, the overall uptrend, is stronger than this mini 15-minute downtrend. So in that case, what we want to do is to trade with the overall trend, the higher time frame trend, which is the overall uptrend, the overall up momentum. And in that case, we should only be looking to buy. But we are not going to buy right now because the momentum right here is still going down. We want to wait for price to shift in line with the 4-hour time frame trend, which is the overall uptrend. So right now, what we need to do is to wait for the trend on the 15-minute time frame to change from bearish to bullish. Once we get a strong sign of price being bullish, that is when we can enter for a buy. And right here, price has not really given us any strong sign of price becoming bullish yet. So we still wait. Let's look at what price does next. You can see price is just like coming back down to retest this area one more time. You can see price just consolidating around this area a little bit, just consolidating. At this point of time, we are still waiting to see what price is going to go next. Because if you want to enter for a buy, we have to wait for price to come back up to this level and just like continue going up. That is when we know that this entire thing was a fake out and price is going to go back up just like this. Let me just go back to the 1-hour time frame to see what price is doing, to like monitor price. And we can see like right now, price is not giving any strong sign that price is going to go up yet. And as you can see, price came back all the way down here to retest this level and gave us this big juicy candlestick right here. And price has just broken this little downtrend line that we can draw right here. And you can see price has just pierced right through it. Now remember, for your entry, you should go to the 15-minute time frame, right? So you can see price has just broken through the downtrend line that we have drawn right here. Previously, price, whenever it come back up here to this trend line, it always head back down. Come back up, head back down. So it's just broken through this little wall right here that we have drawn. So right now, the momentum has shifted from a downtrend to an uptrend right now. So now the 15-minute momentum is up, the 1-hour momentum is up, the 4-hour time frame momentum is up, and it all lines up together like magic. Remember this rule: never buy in a downtrend, and always wait for confirmation for uptrend to be present. So I will enter for a buy position right here when I see this giant green candlestick, which show us the momentum has shifted. Place my stop loss below the trend line right here. Place my take profit all the way up at the resistance area, like somewhere right around here. The last high right here at this area here. Because remember, the last time price was all the way up here, right? It literally toppled all the way down here. So you can call this like supply zone, whatever you want to call it, supply or resistance area. That is where I'm going to be placing your take profits at. If you are unclear on where you should place your take profit, always look towards the left right here to see where price last stopped at. So you can see right here, price last stopped at here before it collapsed all the way down here. So you can also place your take profit all the way down here. So for this example, I'll place it all the way up here because this is like a very strong area that, you know, like price is going to respect. So we still wait. So right now, let's look at what happens next.
Okay, price is like slowly going up, and right there it just smashed your take profit right around that area right there. I want to show you another way where you could have entered for this trade. So let's go to the 1 hour time frame, and you can see right now prices came back all the way up here. Remember, if you see price like right here, you cannot be entering right here, because if you enter for a buy here, your stop loss must be all the way down there. That is crazy, and you do not want to be entering for a buy right here. You want to wait for price to pull back to a key level, then you can enter for the trade. So right now, I'm going to show you another way where you can enter for this trade, enter for this buying position. So at this point of time, we're going to wait for price to come back down to this level. So we wait and see like price is coming back down to this area right here. And when price come back down to this level and it touches it, you cannot enter for a buy immediately, because that will be trading on impulse. You are assuming that the market is going to respect this level and head back up, and that is trading on impulse. You never ever want to assume what the market is going to do. You always want to make sure you react to the markets. Trading on impulse will lead to disaster. So once again, you want to wait for confirmation. So prices came back all the way down to this area, and we wait and see what price is doing. It didn't really give us any confirmation yet, so we still wait and see. Okay, we wait, and you can see price went down even further. At this point of time, you want to apply the strategy that I just showed you, the top-down analysis. So on the 4 hour time frame, we can see that price is in a uptrend, and right now on the 1 hour time frame, we see that price is in a downtrend momentum. And if you go to the 50-minute time frame, you will also see that price is in a downtrend momentum. So what do you want to do in this case? You want to wait for the 50-minute time frame and the 1 hour time frame momentum to shift from a downtrend to an uptrend. Then you can enter for a buy. You want to wait for the 4 hour, the 1 hour, and the 50-minute time frame, all 3 time frames to line up perfectly. So right now we still wait. And as you can see, like price is like starting to go up right now. Very, very beautiful. This is the upshift momentum that we are waiting for. And if you're wondering why the price reversed at this area, let me show you this beautiful trick. Go to the 1 hour time frame, and if you look towards the left, you can actually see that there is a demand zone at this area right here. There's a demand zone at this area right here. I'm not going to go through how to draw your supply and demand in this video, but make sure you watch till the end, and I'll link you to a video which I did on how to trade supply and demand. So right now, the 1 hour time frame is up. The 15-minute time frame momentum is up. The 4 hour time frame momentum is also up. At this point of time, what you can do is to enter for a buy. So I'll enter for a buy like somewhere right around here. And I want to place my take profit at the next key level. And right now, price has not given us any recent key level yet. So I can just literally zoom out all the way out here, and I can see there's a very strong key level at this area right here. I'll place my take profit all the way up there. The reason why I place it up there is because, like you can see right here, the last time price went up this high, it literally reversed all the way back down. So this is like a very strong supply area. And let's look at how this beautiful trade play out. You can see literally price went up and smashed our take profit right there. And I think this is more of a swing trade already. Like I said, I'm a mix between intraday trader and a swing trader. So this is how I would trade the multiple time frame analysis. Like this video if this video was helpful, and if you want to learn more about supply and demand, you need to check out this video right here, so that you can understand how to trade supply and demand, which is a very, very important concept that you must know if you want to become a successful trader. Click on this video right here to find out more. Welcome to the tribe, and remember, you're just one trade away. Mwah. If you can master supply and demand, you'll be able to make so much more money from trading. These are what I'm going to be covering in this course. But if you want this course to work for you and you really want to master supply and demand, please do not skip through the video. I'm going to start off by teaching you what is supply and demand, why you should trade it, and then how to draw, how to find supply and demand zones, and how to actually trade these zones. When should you enter for the trade? Last but not least, I'm going to teach you how I personally trade supply and demand. My own secret supply and demand strategy. So what is supply and demand? Supply and demand is basically aggressive selling and buying. That's it. We want to see aggressive buying and selling because this tells us that all the big boys like big banks and institutions are entering into the market and pushing the market in that direction. I want you to look at these candlesticks right here. Big fat momentum candles
tells us that there is a lot of aggressive selling. There is a lot of momentum and volume pushing the price down. On the right side, we see green momentum candles, which tell us that there is a lot of aggressive buying, a lot of buying pressure, a lot of momentum pushing the price up. So these are what you should be looking for when trading supply and demand. These momentum candles tell us that smart money is in the market. On the other hand, if you see small candlesticks just like this is not demand, alright? This is small baby buyers. We do not want to see small candles like this because there is no volume or momentum by the smart money at all. Why should you trade supply and demand? Let me tell you why I trade supply and demand. Because I want to trade with the big boys who have a lot of money. I want to react to the price when these big boys enter the market. The best way to see them entering into the market is by waiting for supply and demand. Supply is when the market is going down aggressively, and demand is when the market is going up aggressively. So I want to see these nice momentum candles that tell me that the big boys have come out to play. Remember, we are retail traders, we are brokies. We do not have enough money to move the market, while these guys are dealing with millions and billions of dollars. Let's say that you have insider information and you know that the big boys, smart money, billionaire traders, whatever I like to call them, are buying at this key level right here. So will you enter for a buy? You are a dumbass if you said no. Of course you would. It's literally free money if insider trading wasn't illegal. Because you know that these people have the money and the power to move the market. So obviously you want to ride the wave with them. Because the last thing you want to do is to trade against them. But that is what a lot of retail traders do. Now that you have understood why you should trade supply and demand, let's talk about how to actually find these supply and demand zones. The first step is that you want to look for at least 3 momentum candles in a row. So you can see right here we have spotted 3 green momentum candles in a row. It can be more, like it can be 4 or 5 green candles in a row, but the minimum is at least 3 momentum candles in a row. Remember, you do not want to see tiny small little candlesticks just like this. You want momentum candles, the big boys. So in this example, I will just use these 3 green momentum candles right here. So the next step is that you want to find the area where the move started. So this up move right here started from the previous candle. So this is the previous candle right here. So in this case, what you want to do is to take out your rectangle tool and mark the high and the low of the previous candle. So just draw like a little box and drag it all the way up here like this. So now the area between these 2 lines will become the demand zone. So right now what we want to do is to wait for price to come back down to this area and then enter for a buy. But price already did that, right? Price literally went down to retest the demand zone before shooting back up. So if you enter for a buy here, you will have made a load of money. Just another example. There is literally 3 momentum candles in a row right here. So we take our box tool and we box the previous candle, the high, drag it all the way down to the low, and then drag it to the right side just like this. So this will be your supply zone because the last time price was here, it got pushed all the way down here. So this is your supply zone and we are waiting for price to come back up to this area and look at what happened next. Boom, boom, boom. So right now, price has managed to come back up to this area and I want you to observe to see what price does. It literally collapsed. You saw that. I hope you saw that. It literally went back up to this supply area that we have drawn and collapsed. So that's the first way that you can use to identify your supply and demand zones. The next way is consolidation. You can see right here, price is just going sideways, not going anywhere. So what you can do is that you can draw a box to box up this entire consolidation. And look at what price does. Price literally went up all the way to touch this consolidation box before heading back down. So that is your second way. The third way is to identify an area with wicks. So wicks basically show us that price is rejecting that area, right? So you can see right here there is multiple long wick candles at this area here. So what you can do is that you can draw a box around this area here, just drag it all the way right here. So you can see the next time price came back down to this area, price literally shoot all the way up there. So this was a very good demand zone. There is also another supply area right here. You can see there is multiple long wicks being formed at this area, which show us that this area is like a very strong area that price is always rejecting. So if you draw towards the right, you can see that next time price came back all the way up here, it literally collapsed all the way down to the demand zone. Now that we have understood how to identify supply and demand zones, we have to know how to trade them. So right here, I have spotted 3 green momentum candles, which means that the demand zone is somewhere right around here. So after I spotted these 3 momentum candles, I'll be looking at the previous candle before this up move is formed, which is this red candle right here. So I will take my box tool and literally mark from the high all the way down to the low and drag it to the right, just like this. So this is your demand zone. So right now, we are waiting for price to come back down to this demand zone to retest it before entering for the trade. So there are basically 2 ways where you can trade this. You can either place a buy order at the demand zone so that when the price gets down there, your broker will automatically get you into a buy position, or you can manually enter the trade after you see what price is doing at that area, which is the one that I like more. Because remember, no matter how strong the demand area is, there is always a chance that price is going to break past it. So right now, I'll be patiently waiting for price to come back down to this area. So we see what price does, and as you can see, price is approaching this area right now. And the second price come back down to this area and touch this area, you should not enter yet. You must wait for confirmation. That is a very important point. You have to wait for price to show you that it is gonna head back up. So right now you saw that price has came back all the way down here to this demand zone, and it gave us a long wick doji and also multiple long wick candlesticks, which show us that price is rejecting this demand zone and it's gonna shoot back up. What does this candlesticks tell us? It tells us indecision in the market. It tells us that price is rejecting this area, but we cannot assume that price is gonna go back up yet. We have to wait for the next candlestick or the next few candlesticks. Let's look at the next candlestick. So right here, price gave us a big green bullish engulfing candlesticks. This tells us that, you know what, the buyers are back into this market. The big boys is at this demand zone, loading up their buy orders and price is gonna go to the moon now. Oh, this last higher low. Or if you want to play it safe, you can always place it below the demand zone. For this example, I'll just place my stop loss below the last higher low right here. So for your take profit, I want to place my take profit at a key resistance area or a key supply area. So I'm going to be looking towards the left and see where price last stopped at. If you look towards the left, you will see that right here, price gave us 3 red momentum candlesticks. So right here, there is a supply zone. So how I mark out my supply zone, remember, is that you want to look at the previous candlestick, mark the high to the low, and literally drag it up just like this. So I'll place my take profit all the way up at this supply area right here, and place my stop loss a little bit tighter, somewhere right around here, below this bullish engulfing candlestick. And this is like 1:2. Let's see how this trade plays out. Price went up and smashed our take profits. I want you to look at what price did when it came up to this supply area that we have drawn here. It gave us 1 wick right here, this upper wick right here, which show us that there were sellers at this point of time that was pushing the price down. But the buyers are way too strong. That is exactly why price continued to go up even further. Literally just rinse and repeat this strategy. So after I've closed this trade, let me just remove this and I'll just keep on drawing my new supply and demand zones. Since price has just broken past this supply area and invalidated it, I'm just gonna remove this, and I can see there's another like demand zone somewhere right around here because there is multiple wicks being formed right here, which show us that maybe this is like a little demand area. So we can see like right now prices came back all the way down here, and you can see what price did after it came back all the way down to this demand area. It shoot back
up. At this point of time, price has just confirmed to us that this is a valid demand zone because price gave us 3 green momentum candlesticks. So I can just like redraw this little demand zone because like I want to draw it at this previous candle, you know what I mean? So I'll just like drag it from this previous candle, the mark, the high, the low, drag it to the right side just like this. And right now I'm waiting for price to come back down to this area and show me some sort of confirmation before entering for the trade. I almost forgot to mention to you guys, but I also draw like a little supply area right here because price gave us multiple long wick rejection at this area. So this is like a little supply area, and right now we just wait and see. You can see right now price has came back all the way down to this demand zone and he has broken past it just like a little bit. So do you think we should enter for a sell here? This is what retail traders are doing. Retail traders will just enter for a sell when price break through like a little support area or whatever. And look at what price did next. It went back up, so this was ending up like a little fake out. So at this point of time, this gave us a confirmation that price is not breaking past this demand zone. This demand zone is solid and we're gonna head back up. This is the bullish confirmation that we are waiting for. You can see like the green candlesticks are getting bigger and bigger. So at this point of time, I'll just enter for a buy somewhere right around here. Place my stop loss below this demand zone. Take profit at the supply area that is being formed right here. And look how this trade play out. Okay, you can see price went up, and right there, boys, right there, we just smash our take profit, making this a very nice supply and demand strategy. 2 wins in the bag, baby. Now, since you are still watching this, I'm gonna give you a little secret. I'm gonna show you how I personally trade this supply and demand strategy. My own strategy, my own supply and demand strategy. When I am trading, I do not just like to rely on one confirmation. I need multiple confirmation. So what I like to do is that I like to use all the other technical analysis tools in my arsenal to give me more confirmation for me to enter for the trade. For example, this trade right here, the moment price starts retracing right here, just like this, right? I will pull out my Fibonacci. So I'll pull out my Fibonacci, drag it from this swing low all the way up to this swing high right here and literally just drag it across like this. So right now I am waiting for price to retrace all the way down to either one of these retracement levels. I've done like a full length tutorial on Fibonacci retracement and how you can use this to get high win rate trades, which you can check it out after this video. But basically how this Fibonacci retracement tool works is that I'm waiting for price to come back down to any of these retracement levels, this 38.2, 50, 61.8 and 78.6, and then I see some sort of confirmation and I will enter for a buy and I will take profit at the negative 27, the extension level right here. So basically the moment I start seeing price retracing, I just pull out my Fibonacci retracement and I'm waiting for price to come back down to either one of my retracement levels. So we still wait and see, you can see price is like heading back down. And it came down all the way down to this 61.8 level before it starts retracing right here. At this point of time, I'm not going to be entering because I know that most of the time when you are using Fibonacci, you cannot be entering when price just bounce off one time. You need to wait for price to come back down to retest this same area, which makes it like a more solid area before getting into the trade. Now this is where the real fun begins. This is where the magic happens. You can see right here, this is the 61.8 retracement level. But at the same time, it is also our demand zone. It's also our demand zone right here. We have just discussed that this is our demand zone, right? So I'm not going to explain it again, obviously. So right now, we are waiting for price to come back down to this demand zone or this 61.8 level and give us some sort of confidence for us to enter for a buy somewhere right around here. You can see this is literally like the additional confluence that you need. My Fibonacci retracement level lines up with my demand zone. So in this case, what I will do is that instead of risking my usual 1% per trade, I would risk even more. I will risk maybe 2% on this trade because right now I am more confident in myself. So right now I'm still waiting for price to come back down to this area before entering for the trade. So we see prices came back down to this area and you can see price is just showing us that like it's going to reverse and head back up. At this point of time, I will have entered for my buy position right here. Once again, place my stop loss below this 61.8 retracement level or demand zone, whatever, and then place my take profit at the negative 27 extension level. You can see just now I place it at the supply
zone, right? But now I'm going to be placing it at the negative 27 extension level because I trust the Fibonacci, it will do the thing it does. So we wait, and you can see price is like going up. Okay, and right here we have just smashed our take profit, guys. It's really just as simple as that. You have to understand how to use Fibonacci retracement. If you still don't understand how to use Fibonacci, you are doing yourself a huge disservice. Which is why I want you to check out this video next, where I literally give you like a complete course just like this on the Fibonacci retracement to help you become profitable. Click on this video to find out more. And remember, you're just one trade away. Mwah. So you can see this is a 1 to almost like 10 risk to reward ratio, which means that you are risking $1 to make $10. A lot of you guys have been asking for the part 2 of the sniper entry video. So here it is, sniper entry chapter 2. So just to recap, why do we want to get sniper entries? Because we want to make money. And we want to get those trades where it give us like a low risk but high reward trades, right? Like those ridiculous 1 to 15 risk to reward ratio trades. You know what I'm saying? Right now, I'm just going to show you this entire sniper entry strategy on some random pair that I will probably never trade, just to show you that this strategy works on any currency pair. So I'm just going to use NZD, GBP, NZD, British Pound, New Zealand dollars. Alright, let's go, man. Yo, this is a disgusting pair, man. I really pity people who trade these. No offense if you trade these though. So before you do anything, you always want to set up your charts for success, right? So what you want to do is to mark your support, the resistance, your supply and demand. Basically use all the tools in your arsenal to help you like mark up the charts. So I can just mark up like a little demand area right here, and we can also see like a little supply zone right here, right? Whenever price gets up here, it always like end up reversing and heading back down. Okay, and then there's one more supply zone right here. So now that you have marked up like your support, resistance, supply and demand, whatever, the next thing you must do is that you want to trade from one key level to the next key level. It's really just as simple as that, guys. Your goal is to trade from one level to the next level, and then from this level to the next level. So right now on this chart, I can see there's literally so many opportunities where you have entered for a sniper entry. Let's look at this example right here. You can see that right now price is at like this very strong supply area or resistance area, right? So obviously, if price wanted to break past it, it would not like freaking consolidate around here. No, it would just like break past it with a lot of momentum. But that is not what price is showing us. Price is literally just showing us that, okay, they're just small candlesticks right around this area here, and it's just like consolidating, going sideways here. Since there's like a giant consolidation right here, we can just draw like a little box around here, right? Around here. So this entire area is your consolidation area, and this shows us that price is not breaking past this resistance area. Chances are, if price is consolidating around a key level, it is not breaking past it unless it's waiting for some like news announcement for it to just pierce past through. Since we kind of know that like price is not going to break past this resistance area, that means that we should be looking to sell, right? So we should be looking to sell. At this point of time, this is when price has finally broke out of the box. So you could have entered right here for a sell position when price broke out of the box. But if you are talking about sniper entry, super sniper entry, we cannot be entering right here because this is kind of too late, man. You want to be entering somewhere around here, right? So if we zoom in right here, we can see that price actually formed like a double top right around this area here. So the moment price showed us that it went up once, go up again, failed to break past this level twice, we could have entered for a sell position, right? Along with other confluence, because remember, we can't just enter based on one chart pattern, right? We need other confluence. So the first sign is that this is the double top pattern. The second sign will be this is a very strong resistance area or supply zone, whatever you like to call it. And then the third confluence could be this morning star candlestick pattern. I mean evening star. Oh my god, I always get confused between these two. But this evening star candlestick pattern right here, you can see this one green candlestick followed by a doji followed by a red candlestick. So for those of you who do not know what is evening star, this is a oops, not this one, maybe like, yeah, this is the evening star candlestick pattern. You can see right here. When price form evening star, this means that price is about to go down, right? It's basically like a candlestick pattern that show you that price is gonna reverse and head back down. Yup, so we have seen that right here when price did this evening star. So now with that, we have our 3 confluence we can enter for our sell position right here. Or a 4th confluence could even be the moving average crossover. You can see like at this point of time, the blue line is still above the red line, but right here, this is when the red line starts to cross over the blue line, just right here. You can see right here. So this is the moving average crossover, and we can enter for sell position right there. And then for sell here, I'll place my stop loss above this resistance area right here. Place my take profit all the way down, guys, all the way down at the next key level, which is all the way down here. I can see like there's a very strong support area down here. You can see the reason why I place my take profit right here is because remember, price moved from one level to the next level, so there is a very strong support level right here. So chances are price is gonna come down to this level next. So you can see price price came all the way down here. So this was like a ridiculous 1:4 risk to reward ratio trade. And with that said, there is so many things that you have done during this trade, right? Whenever price starts to like retrace and create structure, you need to move your stop loss. So you can see price went down, come back up to retrace to create your new lower high. So at this point of time, when price created this lower high right here, I would have moved my stop loss all the way like down here above this last lower high right here. Trading view kind of don't allow me to do it, but basically I'll move my stop loss from right here, which is the original stop loss, move it all the way down here, right? Because this is the new lower high. This is structure. Price will respect structure, because if price actually break past this level, chances are it's gonna like continue heading back up. So guess what? You actually got stopped out. And in that case where you actually did got stopped out, but you have moved your stop loss right here, guess what? You are actually still in profit. So technically, if you lose the trade, you are still in profit. That is the crazy thing about this strategy. Yeah, so you always want to make sure you move your stop loss into structure. So you can see price went back down once again, come back up, retrace to create your new lower high. So my stop loss right here, move it again to right here. So now, even if you lose this trade and your stop loss get like smashed right here, right, you would still be in profit, baby. You will still be in a lot of profit, right? So that is why we move our stop loss so that we can protect ourselves and our capital. So when price retraces, another thing you can do other than moving your stop loss is that you can scale in, right? You can scale in and add another position. So when price actually like go down and retrace to create your new lower high right here, this is when you can enter for another sell position. You could have entered for another sell position right here. So now you got not just one sell position, but 2 sell position in place, going down to your overall take profit. So now you can make like double the amount of profits. So make sure that you can consider scaling in when price creates your structure. Okay, here's another example. You can see that price has just been like going down, but it's approaching our very strong demand area, right? Our very strong support level, which means that there is a very low chance that price is actually gonna break past it. And you can see when price actually approaches this level, the candlesticks are getting smaller and smaller. You can see just smaller, small candlestick, which tell us that there is not much selling pressure. There is not much momentum that's gonna push the price down and break past this level. Nope. The buyers are going to come in and take over the market. So at this point of time, when you see these multiple small candlesticks, you want to wait for some sort of big green candlestick, which show you that there is buying pressure, and now price is going to reverse and go to the freaking moon. Yup, so you can see like price actually like go up, retrace to create your new higher low. So at this point of time, when price starts retracing and creating a new higher low, this is the first sign that tell you that price is going to reverse from a downtrend to a uptrend. Alright, that is the first sign that tells us that, right? But we still want to wait for like more confirmation. So what I will do at this point is that I'll just draw like a little Fibonacci right here. You can just draw a little Fibonacci right here. And if you do not know how to use Fibonacci, do yourself a favor and go watch my videos on Fibonacci retracement. I've already done 2 videos, and you are really doing yourself a disservice if you do not know how to use Fibonacci. So you can see, okay, price retrace all the way down to like the 50 extension level. Yeah, you can see right here, this is the 50 extension level. So you retrace back to here, twice create your double bottom. 1, 2, double bottom, and it just starts reversing, right? So at this point of time, this is when you have entered for a buy position somewhere around here. When you see that price is not breaking past this 50 extension level, place it your buy order right there, place your stop loss below this last higher low right here, and I'll place my take profit at the negative 27 extension right here, or even a 61.8 level. But since this video is on sniper entries and not on Fibonacci, I'm gonna be placing my take profit all the way up at the next key level, which is all the way up here, right? All the way up here, because this is like the very strong resistance area, and as you can see, price went up and smashed our take profit. So you can see this is a 1 to almost like 10 risk to reward ratio, which means that you are risking $1 to make $10. And if you guys know me, you will know that I will only take the trade if the risk to reward ratio is 1:3. Yup, so this is a ridiculous sniper entry. And remember, as price creates structure, make sure you do two things: move your stop loss and also consider scaling into the trade. So right here, as price goes up and create your new higher low right here, this is when you have moved your stop loss from here, which is your original stop loss right here, right? Move it to the new higher low, guys. Move it right here, and as price goes up, create your new higher low, keep on moving it, right? Keep on moving it, so that eventually when you get stopped out, you are still in a whole lot of profits. And I will have also like scaled in for another buy position somewhere around here, and also around like here. So total I'll have like 3 trades running to my overall take profit, and I will have made like bank on this big beautiful uptrend. Now let's look at like a currency pair that is like more common and more boring for us ordinary humans. And let's look at AUD USD, one of my favorite currency pairs. So you can see I have my beautiful key levels marked up here. We got your supply zones, your demand zones, support, resistance, whatever you like to call it, and we have also have your beautiful trend line. So at this point of time, you can see that price approaching this beautiful strong support level that we have drawn right here. What a handsome support level. And price is not breaking past it. So that's the first sign that tells us that price is going to reverse and hit back up. The second sign is that price broke through the trend line right here. This area, this is when price break through the trend line. The third sign that shows us that price is going to go up is your moving average crossover, boys. You can see at this point of time the red line above the blue line, but right here, this is when the blue line cross over the red line. So at this point of time, this is when the moving average crossover occurs, and right now this shows us that price is in the uptrend. So now we got your multiple confluences, multiple signs to tell you that you should enter for a buy. At this point of time, what you can do is that you can enter for a buy position when price break through the trend line, right? But that is still kind of like pussy way trade, you know what I'm saying? Like, you want to get sniper entries, you cannot be entering when price break through the freaking trend line. You want to be entering when price is not breaking through the trend line. Before price break through the trend line, you want to enter. So I will have entered somewhere around here when the moving average has crossed over. And right now, because we are on the 4-hour time frame, and the moving average crossed over right here. But I'm pretty sure if you go down to like the 1 hour or the 15-minute time frame, the moving average has already crossed over somewhere around here. So I'll just enter right around here, place my stop loss below this supply, this freaking support level right here, place my take profit all the way up at this like resistance area right here that we have drawn this very strong red area here. What a beautiful red head. So you can see this is the 1:4 risk to reward ratio trade, and you can see price went up and smashed our take profits. Okay, now let's take a look at GBP JPY. So another point I want to add is that if you actually get stopped out like this, right? Let's say that your stop loss is right here, and then you got stopped out when you enter for this buy position. What I need you to do is to be flexible. So what I mean by being flexible is that you always want to make sure that you do not impose your thoughts onto the market. Remember, the market can do anything it wants. It can literally do anything it wants. It can go up if it wants, it can go down if it wants. Your job is not to predict the market. No, your job is to adapt, right? Your job is to adapt and react to the market. React to the market, boys. So what I mean by that is that I can literally tell my friend that, hey bro, Euro USD is going up. But then I see Euro USD on my chart going down, even though I thought it was going up. Guess what? I'm going to be flexible and enter for a sell position I won't be stupid enough to enter for a buy just because I told my friend that Euro USD is going up. That is what I mean by you gotta be flexible in order to make money in this market. One of the main reasons on why I win a lot of trades is because I'm flexible. I can admit the fact that I'm wrong about that trade. Like I can switch from a buy to a sell very quickly depending on what the market is showing me. If you found this video helpful and you want to see a part 3, make sure you smash the like button and comment down below and let me know. And bro, make sure you hit on that subscribe button. Welcome to the tribe, and remember, you're just one trade away. In this video, we're going to talk about how to get sniper entries. I'm literally talking about those entries where you get in and you immediately go into profit. Yep, that's the entries we're going to talk about today. So when price is at like a resistance area just like this, what you want to do is to draw a box around this consolidation. Like look at this, price going sideways, draw a box around it. Alright, so whenever price is consolidating, just draw a damn box around it. Do not trade consolidation. I hate trading consolidation. So a lot of YouTubers will ask you to enter for the trade when price break out of the consolidation box. But that is not sniper entry, that is shit's entry, and we want to get sniper entry, right? So what we want to do is to go down to the 15-minute time frame, alright? 15-minute time frame. So if you want to get sniper entry, you must look at market structure. Here's what I mean. So right now, price is still consolidating, and I want to wait for price to show me some sort of lower high, right? Once I see some sort of lower high, that is when I know that, okay, price might be breaking out of this consolidation box, and then that is when we can enter for the trade, and that is what price is doing right now. You can see price is creating a low high, and over here price is just going sideways, not going anywhere, up and down. But then right here, this high right here is lower than all of this. You can see all of these highs. This one is so damn low. So this is where we can enter for a sniper entry. So what we can even do is to like draw another box like right around this area here, change the color to this one right here, and now we want to wait for price to break through this small little box that we have drawn. Alright, so we just wait. Okay, you can start to see like some sellers start to come in when you see this big fat red candlestick, which tells us that there's a lot of sellers in the market right now, so we can prepare to enter for the trade. So we wait. Okay, right here guys, this is when price broke out of this consolidation box, this small little consolidation box. This is when price is going to continue and hit back down. So this is when we can get in for a sell position right here. And what I'll do is I'll place my stop loss above this last lower high, because this is the last lower high and this is the last swing high. So this is your structure. So you always want to place your stop loss based on market structure. So I'll place it a few pips above this last lower high. For your take profit, what I like to do is to go to the 1 hour time frame and place my take profit at like the next major key level. Alright, the next major key level is all the way down here, right? So we can put it all the way down here. And look at this. 1:11 risk to reward ratio, boys. You are risking $1 to make $11. You are risking $1,000 to make $11,000. How mad is that? And right now, let's just look at what price is going to do next, and then we can go from there. Okay, you can see price go down. Alright, go down. Okay, right here guys, you can see price went back up to retest the box. Okay, so at this point of time, you still have not gotten stopped up yet because you place your stop loss based on market structure. But what you can do is to move your stop loss to make this like a risk-free trade, right? So what I will do is that I want to wait for price to create like a little lower high right here, and then this is when I'll move my stop loss from here all the way up to this right here. This is the, because this is the new lower high, right? You want to move your stop loss into profit. So the worst case scenario is that if we get stopped out, guess what? We break even. So we still wait for price to create your lower high first. Okay, right here you can see this is your new lower high already. So what I'll do is I'll place my new stop loss right here. I mean, I'll move my stop loss right here. What am I saying? I'll move my stop loss from here, right here. It was originally up here at this 1.22 level. I'm gonna move it to this level, 1.219 level. So right now stop loss will be right here. And guess what? If you lose this trade, if you get stopped out, you are actually break even. You don't even lose any money. How mad is that, bro? You don't even lose money. So the reason why we do this is because we always want to make sure like we preserve our capital. We want to preserve our money, right? As traders, we want to reduce our risk as much as possible. And also why we place it right here instead of like some random place is because this is the new lower high, and the price will respect market structure. What I mean by that is that price won't like go up and then break this like last lower high and then continue going down. No, price won't do that. Price will respect market structure. So price will have to create the lower high to continue going down in this downtrend. And if you move your stop loss at like some random point like right here, guess what? You're gonna get stopped out, man, and you do not want to do that, alright? You always want to wait for price to create your new lower high, create structure first, then you move your stop loss so that it become a risk-free trade. Say it with me, risk-free trade. So yup, now your stop loss is right here, and let's just continue and see. Okay, you can see price just collapsed, and now we are like way into profit. So at this point, if I'm using like a one lot size, I'm probably making like, I don't know, $1,000. I'm not even sure, but basically you are in a lot of profit. And guess what? The worst case scenario is you get stopped out and you break even. So at this point of time, you can consider scaling in. Actually, not at this point of time, right here. Right here, when price created your new lower high right here, right? This is when you can consider scaling in. So what I mean by scaling in is that you can add another position on top of the first trade that you have. So right here, you enter for one sell position. So at this area here, you can enter for another sell position right here, right? You see some sort of moving average crossover on the 15-minute time frame right here. You can see the moving average crossover right here. You can enter for another sell position. So now you have not one but two sell position going into your take profit. This means you can potentially like double your profit, double the amount of money that you can potentially make on this one nice trade. So you place your stop loss above here, and now same thing, take profit all the way down here. So now we got two trades running to our overall take profit, which is way down here. And the reason why we consider scaling in is because like, if this actually go down as we plan, we not only make money on one trade, we make money on two trades. So we can literally get double the amount of profit. Yep, so now let's see what happens next. Now that we have our two sell position in place, and you can see price go down. Okay, right here, price created a new lower high, guys. Guys, this is when price created a new lower high. Right here, this is when price created a new lower high, right? So the reason why this is a low high is because this high right here is lower than this high, and this one is lower than this one. So what do you do next? Same exact thing. Keep on moving your stop loss. So now your stop loss was right here, right? Now it become right here. So now your new stop loss will be right here. So the first trade, you move your stop loss to right here, and then your second trade, you also move your stop loss right here. And guess what? If you get stopped out on the first trade, you still make profit, because right now we are in the profit zone. And then if you get stopped out in the second trade, guess what? You actually break even. How mad is that? So now, both of your trades are freaking risk-free, man. So if you lose, guess what? You actually break even, or you are actually still in profits. Yep, so we'll move both of our stop loss right here to this new lower high. And at this point of time, what you can do is that, yep, you can consider scaling into another short position. Enter for another sell position right here, and now you have three trades. Not one, not two, but three trades running to your take profit. How mad is that? I know I keep saying how mad is that, because this is really madness. Once you get this concept in your trading journey, it's gonna change your trading forever, man. Yep, so same thing, this stop loss, you can place it above this lower high, take profit at this major key level. Now we got three trades running all the way down to our take profit. And at this point of time, this is the most satisfying thing ever. You see all three trades of yours go down to the take profit. As simple as that. But don't worry if you still do not get it. I'm gonna show you one more example. Now that you have closed these three trades, the next thing you want to do is to wait for the next opportunity. So right now, price is at this support, which means that price can potentially reverse, right? Because this is a very strong support area. So what we can do is that we can draw a box once again right here, because this is a giant consolidation that I hate. Alright, I do not like consolidation. So at this point of time, you want to wait for price to create higher low. So in the uptrend, it's basically like the opposite of what I've just showed you. So at this point of time, we wait for price to create a higher low. So over here, it's just going sideways, 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 sideways. But then look at what happened right here. This is when price create a low that is higher than all of these low. So this tells us that, okay, maybe price is about to explode and head up, right? So what you can do is that you can enter or buy position somewhere around here when you have your three confluences, moving average, crossover, whatever, all of that stuff, and then you place your stop loss below this last higher low, and then you place your take profit all the way up at this next resistance area. And where is the next resistance area? All the way up here, the red color zone that we have drawn, all the way up here. Now, this is a beautiful sniper entry. Look at this. Like, price literally went all the way up there. That is so crazy. Like, price went all the way up here, and now it's creating a new higher low, right? Whenever price creates a new higher low, remember you have to do two things. Either move your stop loss into profit. So right now, this is your first stop loss. You can move your first stop loss to right here, right? Right here. And when price is right here, you can consider scaling in into another trade. So you can enter for a buy position when price is this bullish engulfing candlestick, big fat green candlestick, and place your stop loss below here and take profit all the way up here. Now you have not one but two trades going into your take profit, and you have made a banger on this one big trend direction. So if you want to get an entry that gives you like an insane risk to reward ratio, like 1:5, 1:10, 1:15 even, you must be aggressive. You must be so aggressive. So a lot of people are really afraid to get in, and that's what stops them from making money. So this sniper entry aggression that we do here is the difference between making $500 and making $5,000. Yup, it's a super big difference if you get in right here compared to if you get in right here. Huge difference, guys. If you want to see a part 2, make sure you comment down below and smash that like button and hit on that subscribe button and the freaking bell beside it. I really do think that sniper entries is one of the most important things that you must master in trading. That is why make sure you comment and like on this video so that I can release a part 2, so that it will motivate me to release a part 2. Alright, so welcome to the tribe, and remember, you're just one trade away. Mwah. I quitted my 9-to-5 job after mastering these 5 trading rules, and I never have to work again. So if you want to escape your job and live your dream life, master these 5 rules. Firstly, don't fall in love. Don't fall in love with your trade means that you should not get attached to your trade. Let's say that you entered for a buy right here and you place your stop loss right here. And then you start seeing like the trade going against you like this, like it just keeps going down and going down, so you end up here moving your stop loss because it's like so near your stop loss and you're like so scared, right? You're like, oh my god, no, it's gonna hit my stop loss. So you keep moving the stop loss, keep moving it, and then the trade still keep on going against you and keep going down, and ultimately you can't take it anymore because the loss is like way too big, so you end up taking like a big L. Stop trading like that. I want you to remember that the market can do anything it wants. So once you place your stop loss, just leave it, and if you do get stopped out, just move on to the next trade. The next thing is that you do not want to fall in love with your buyers. So right now you can see it's a bullish market, price is in an uptrend, price is going up. So you should only be looking to buy, right? But then you start seeing price break market structure, break through the trend line and reversing to become a downtrend. In this case, you do not want to be attached to your bullish bias. So right now, price has broken market structure and is in a downtrend right now. So instead of still continue looking to buy, you should be looking to sell right now. So you never ever want to like fix your bias onto the market because the market can do anything it wants. Once again, the next thing is don't fall in love with your market. Let's say that you have been trading EURUSD for a few months now. It's your favorite currency pair on the list, but then you start seeing that it gets slow and choppy recently because maybe this month there is not much volatility in EURUSD. But then you see GBP USD moving like crazy. In this case, go trade GBP USD. Alright, just because you've been trading EURUSD for like a few months now does not mean that you are in a marriage with it. Alright, you don't care about that shit. Just move on to GBP USD, find a currency pair which have much more opportunity, then trade that one. Do not be so fixated on your favorite currency pair that you just neglect those that give you opportunities. If you fail to plan, you plan to fail. If you want to build a house, you need to follow a blueprint, right? Because if you anyhow build the house, that house is going to crumble. That is exactly why you must create a solid trading system, because a solid trading system essentially acts as a blueprint for your trading. So a trading system comprises of 4 things. Number 1, a trading plan. So a trading plan consists of a lot of factors like what time are you going to be trading, what currency pairs are you going to be trading, and then which brings us to the next point. It also comprises of your risk management plan. How much money are you willing to risk per trade? What lot size are you going to be using? All of these things takes into account your risk management. And what should your risk to reward ratio be? Like for me, if it's less than 1:2, I will not take that trade. Next, before you start trading live, you have to make sure that your trading strategy works. Because if you don't, you're going to be so frustrated and you're going to lose a lot of money. So make sure that you use a winning strategy that is tested multiple times and you know that it works. A trading strategy is very important because it allows you to understand where to enter for a buy, where to enter for a sell, when to stay out of the markets, and where you should place your stop loss and where you should place your take profits. Next, you also need to have a trading journal. Having a trading journal is so important in your trading because it allows you to write down all your trading mistakes so you can learn from them. Number 3 is become a good loser. As humans, we hate to lose, right? And we have been conditioned by society that, oh, losing is bad, failure is bad, I want you to change the way that you think about losses. Losses are not bad. Losses are only bad if you do not learn from it. Every single loss puts you much closer to a win because you have to lose in order to win in trading. We hate to be wrong, right? But I'm telling you, it is okay to be wrong in trading because you can lose a few trades in a row and just win one and be profitable if you practice proper risk management. Professional traders, they are very, very good at taking losses because when they lose a trade, they don't feel like, oh, I'm the worst at trading. They take a loss and then they just move on to the next trade as if nothing has ever happened. So that should be the mentality that you need to adopt. You need to remember that losing is really part of the game. So for me, I don't care if I lose a trade because I know that when I win big. So I can lose 3 trades in a row and still be profitable. Number 4, don't break your trading rules. I know you hear this a lot, but it is true. The more disciplined you become as a trader, the more money you make from trading. I know it's super duper hard, but you have to try to become more disciplined. Things like follow your trading plan, journal your trades, use the correct lot size. All of these things will help you become more disciplined. Successful people, they are very, very disciplined. When people ask me like, where do I get all this motivation from? I tell them that I'm only able to get to where I am today because I value discipline over motivation. The man who works when he don't feel like it will always beat the man who works when he only feel like it. Think about that for a minute. Remember guys, discipline can make you rich. So many beginner traders, they keep making the same mistake over and over again. Which brings us to the next point, which is always improve. This is very, very important guys, because as a trader or as a human, you must always be learning, you must always be improving, which is why I would advise you to aim to become 1% better every single day. Because like, I understand that you probably can't go from a total loser to becoming a disciplined trader the next day, right? It takes a lot of time, it takes a lot of discipline, it takes a lot of dedication. So that is why I would advise you to really just aim to be 1% better. So becoming a better trader does not mean that you need to make more money when you are trading. You can still be losing and become a better trader. Because becoming a better trader is all about reducing the mistakes that you make. Becoming a better trader means that you are making less and less beginner mistakes. Last time you might use a lot size that is way too big for your account, but now you practice proper risk management and you don't do that anymore. You don't commit the same mistake anymore. That itself is progress. That means that you have become a better trader. And when you become a better trader, that means you are becoming a more disciplined trader. And when you become a more disciplined trader, money will come. So I really want you to adopt this mindset of becoming a better trader instead of trying to make a lot of money in the short amount of time. No, just adopt this mindset of becoming a better trader, becoming a more disciplined trader. Because when you do that, trust me when I say that, money will be coming to you. You won't have to chase money anymore, money will be coming to you. Bonus tip, never ever quit. Why are you making excuses? You are broke. There is nothing for you to lose except for maybe your hard-earned money. But there is nothing for you to lose. All the benefits of trading outweighs literally everything. When you do actually master trading, you will achieve the freedom that you have always dreamed of. You'll be able to live your dream life. You'll be able to get your location freedom, which allows you to work wherever you want. You can be sitting on a nice beach in Puerto Rico and then still be making money. You don't have to worry about money anymore because now you can actually put food on the table for your family. And you don't have to work for your stupid boss anymore. I came from nothing and I still made it because I did not quit. So please do not give up because I believe in you and I hope that you can believe in yourself. I still have a lot more tips to share with you guys. So if this video reach 200 likes, I will release a part 2. And if you enjoyed this video, make sure you hit on that subscribe button. Welcome to the tribe, and remember, you're just one trade away. Mwah. I can always trade the London session or New York session, whatever. Because now you have the freedom to work whenever you want. Whenever you want to work, you can just work. There's no boss like nagging at you to, hey bro, go to work or you're fired. None of that. And then there is also your location freedom. So your location freedom is when you can work wherever you want. You can be sitting on a nice beach with a laptop in your lap and make money. And you can travel the world and make money trading. And god damn, these 3 types of freedom, once you achieve these 3 types of freedom, trust me, you're gonna be so happy, man. You're gonna be so happy. You're gonna be the most happy that you have ever been. Because now you don't have to worry about money. You don't have to worry about working for a freaking evil boss and making him rich. You are making your own self rich. You have own freedom. You have a lot of freedom. And this is what you have been working so hard for. The 3 types of freedom. The LTF. Congratulations. You can stop here. But trust me when I say that it is not as fulfilling as you thought it was. I'm pretty sure that you thought that when you reach this stage, you're going to be so happy and so fulfilled. But that is not the truth. I've learned this the hard way because I don't know about you, but when I reached this stage, I felt something was empty. I wasn't particularly fulfilled. I was happy, but not really fulfilled. I still felt like something was empty, which brings me to the next stage, the final stage. So the final stage, when you are going to feel fulfilled and really feeling happy, is called your stage 5, and this is what I call the self-actualization stage. This is what I call the self-actualization stage. So the stage 5, the self-actualization stage, is where you are like literally on the top of your trading journey. This is the best place to be in. This is when you actually start helping others. You start helping others. Because you feel like you make money alone, that's not really fun, right? You make money alone trading, that's not really fun. You don't really feel fulfilled because ultimately how you feel fulfilled is by helping others and changing other people's life. So basically, I've helped you from stage 0 to stage 5. So you actually start recruiting those guys at stage 0. Those guys at stage 0, so it all works out. This is what the tribe is about. I help you go through all these stages. You reach the point of self-actualization through my help. So you start recruiting other people to start trading and also join my tribe. You share my videos to your friends and your family, and you basically help them to learn more about trading, and they join my tribe, and the tribe gets bigger and bigger, and we start changing the world one step by step. So there might be one question on your mind right now. Why? Why are you doing all this, the trading gig? Why are you doing all this, Brad? Why am I making all these videos to help you guys? Okay, like you want more people into trading, but why? The truth is, I want more friends. I want more guys who are on this trading journey. I want more brothers. I want to start a revolution, like a whole new generation of people who are not just interested in finding the 99.9% win rate strategy, but instead are focusing on risk management and psychology. I feel alive when I talk to someone who actually knows what is going on in the market. I want a group of people who achieve financial success through trading, and they use that money to help their friends and family in need. Because I'm at a stage of achieving freedom, and I know how happy and fulfilling that is to just like give my family money, give my friends money whenever they need it. To be honest, I want to make the world a better place. I'm at a point of self-actualization and it's quite lonely at the top. Then there is like not much other people here with me, so I'm throwing down the rope. I'm at the top of the bucket and I'm giving you my arm because it would be so much nicer if I had another brother by my side at the top of the bucket and we're just like pulling all the little losers out of the bucket together. That's the point of this tribe, and I hope that you will join me. So make sure you comment down below and tell me what stage are you in, because I'm assuming that you are in either the stage 0, stage 1 or stage 2. And make sure you like this video so that this video can reach out to much more people and the tribe actually become bigger, so we can essentially help much more traders out there. And also hit on the subscribe button and the notification bell beside it. Welcome to the tribe. And remember, you are just one trade away. Mwah. What's up, bro? If you really listen and master what I'm about to say, you can potentially make about $10,000 per month from trading and become consistently profitable trader. So are you ready for the secret trading strategy that the top 5% use? Let's hop onto the charts right now. Jokes on you, brother, but there is no charts today. So if you exit this video right now, you're just gonna continue losing. So if you wanna stop losing, continue watching this video. Alright, so in this video, I'm gonna share with you my major psychology tips. It's all listed right here. And I understand that you guys can't see right now, right? The video is like inverted. But if you recall in my previous episode, I talked about how like trading strategy is easy. Let me just roll the clip here. Analysis is easy. Technical analysis is easy. Me and my students from the mentorship program can analyze the charts, any chart, within 30 minutes and determine whether we should go in for a buy or sell. Because the truth is, analysis is easy. You can master technical analysis within 6 months. You will be able to understand how to use trend lines, support, resistance, smart money, whatever, in 6 months. You know what it's hard? Psychology and risk management. These two factors are the two major factors that it is so hard that will cause you to lose the most amount of money. Trust me, most of the time when you are losing money, it's not because you analyze the chart wrongly. It is because of your own emotions and you are using a lot size that is way too big for your account. And that is just the truth, guys. It is not because you are a bad trader. It is because you are managing your emotions badly. So that is the unfiltered truth. That is why like my goal is to really make sure you guys focus on risk management and psychology rather than strategy. Yep, so you can see that I talk about how trading strategy is easy, technical analysis is easy. You are able to master how to analyze the charts within 1 or 2 or 3 months, right? But what's hard is really trading psychology. That is like the one thing that really prevent people from becoming profitable. So if you are willing to work on that, and if you want to like really serious about becoming a profitable trader, you need to watch this video till the end. And what I mean by that is that I do not want you to like skip around this video like a little loser skipping around, because your attention span is so short, right? I really want you to focus and just stay with me and listen to what I'm about to say. Absorb each tip into your trading journey, okay? Without further ado, let's get started. Number 1, we got overcome greed, okay? Overcome greed. Greed is a very, very common emotion, okay? As humans, we will experience emotions like greed, right? There is no 100% power for you to get rid of all these emotions that you go through when you are trading. But what you can do is to really not let these emotions take control of you and really like try to be rational as much as possible. So example of greed is like the market can give you $500, like you see on your MetaTrader 4, you see floating profit $500, but then you think that $500, what the hell, that's too less, man. I want more, I want 5,000, I want 10,000. So you end up holding the trade a little bit longer, even further from your take profit, and guess what, 1 hour later you end up losing the trade. And that is all because of greed. So greed is a very, very harmful emotion. So another example of greed is that you are rushing the process by starting to trade like your live account so fast. So what I mean by that is that maybe you just started trading. You have back tested, you have learned technical analysis for about 1 to 2 months, and now you want to trade live account. That is rushing the process, guys. And I always tell my students, never ever rush the process. Take your time to master the trading, and as you become a better trader, you will make more money. That's just how it works. As you become better, money will just come. But if you rush the process by like starting to trade live account fast, instead of making money, money will run away from you. Money will run away, and you will chase money away, and you will end up losing a lot of money. So never ever rush the process. Please trust the process, like what Joel Embiid from NBA said. So the second psychology tip is that you need to have another income other than trading. This is such an important one because like most traders come into this market thinking that they're gonna quit like their full-time job after 1 month of trading, and I can tell you that that is not realistic. So a little bit on my story. So I was working like a 6 months internship, so it was like a 9 to 5 job at like some fancy office, right? So during this 9 to 5 job, what I would do is that I would learn trading whenever I have any free time. So it could be like during lunchtime, or it could be after I am done with my work and I'm head back home after dinner, that I will study trading until about 12 a.m. before I sleep. And then I wake up, go to work, and then come back and learn trading. And that was how serious I was about trading, right? I was not like, okay, you know what, I'm just gonna quit this job and fucking trade. No, right? I need to have another income. So this another income help to like supply your trading capital, and once you're able to build up your capital, you have like maybe 10k, 50k, 100k in your trading account. That is when you can potentially like consider quitting your job to trade. But if you are not consistently profitable, like you are still losing trades, do not even think about quitting your job, man. Do not even think about quitting your job. You need to become consistently profitable first before you can even think about quitting your job. I don't know how many of you are still watching this video right now, because I understand that it's a little bit boring than the usual trading videos where I analyze the charts with you guys and show you guys like my trading strategy on the chart, right? So this video really have no charts, so I'm really quite like interested to know like who else is still watching this video, because if you're still watching this, chances are you are really serious about mastering trading. So if you're still watching this, make sure you go down right now and comment something like the trading gig is the best or something. Just comment anything to tell me that you are still watching this video and you are dedicated. I'll make sure I reply to your comment, guaranteed. So the third psychology tip is that I need you guys to be robotic, right? So what it means to be robotic is to not get too attached to the outcome. Okay, never ever get attached to the trade outcome. So I remember in one of the videos I told you that trading is 50-50, right? There will never ever be like you confirm win that trade. Okay, that will not be an instance where it's like this. It's always 50-50. You win, you win. You lose, you lose. Alright? So no matter how confident you are in a trade, there is still a chance that you're going to lose the trade, right? And no matter how much times you lose the trade, there is still a chance that you're going to win the next trade, because like I said, trading is random, right? It all comes down to probability. So everyone loses in the market, right? Every single one. Trading is just part of the game, right? Let's say example, you run a restaurant business. Okay, you run a restaurant business, you'll make money by having a lot of customers, right? But you will have expenses by like renting the space, or buying the tables, buying the groceries to cook up the food for your customers. All of these things are called your expenses, right? And these are your business expenses. So in trading, your expenses are your losses, because these losses help you generate profits in the long run. So treat losses like your business expenses, and do not ever trade with money you can't afford to lose, guys. So important. If you only have like $200 in your bank account right now, do not put all $200 into your trading account, right? You can maybe put like $50 into your trading account or what, but make sure you still have money to eat and have like your basic necessities like a roof, shelter or something. Okay, just make sure you do not trade with money you cannot afford to lose. The fourth tip is to stop looking at Lamborghinis. A lot of you make this mistake, or rather I myself made this mistake. I will go to like some successful trader and then see their Instagram, and it's like, whoa, this guy has a Lamborghini, this guy has a Ferrari, this guy has a $1 million cash in his hand. And I would think that, yo, I want to be like him. So I will end up going to my trading account and try to use a lot size that is way too big for my account just so that I can make money. And also I end up like forcing a lot of trades when there is no opportunity at all. And that is when you guys really need to think of trading as like a percentage game rather than like a get rich quick scheme, right? The trader who owns a Lamborghini, he might have been trading for like 5 years or 6 years even, right? Ultimately, you have to understand that you are like at a different level, and I don't say that in like a disrespectful way. I'm saying that as like a honest way, okay, honest way. Like honestly, this Lambo traders, I'm not at that level yet also, right? So I'm not at that level yet. I'm just gonna admit the fact that I still have more work to do. So you also have to admit the fact that you have to more work to do. Like you have to work on your trading discipline more, right? So all of these things will really help you to prevent yourself from comparing yourself to like more successful traders, because comparison is the thief of joy. So the next step is to take a break. Every day is not a trading day. Alright, that is such an important point. Alright, so for me, I give you an example right now. So the last time I traded was in May, like end of May. So if you think about it, that's about 1 month since I traded. 1 month, guys. 1 month, I did not trade at all. So every day is really not a trading day, right? Like you do not have like, oops, sorry. You cannot have like the pressure to like, oh, I have to trade today, I have to make money today, so I will go into the market and force some trade. No, you cannot do that, right? You should only trade when there is opportunity. Literally as simple as that. And you deserve to take a break if you have been like trading for a lot, alright? So it is perfectly okay to take a month or so away from the charts. Your brain need to rest too, right? You know, when you exercise, you sleep, and then your body rests, and then you gain muscle. Your brain is a muscle too. Your brain also need to rest. So by taking a break, it allows your mind to be like more refreshed so that you are able to dominate the markets when you get back to trading. And I really want to emphasize the fact that you guys should not just focus on chart work. You guys should not be just focusing on analyzing the chart and getting like the best entry possible. It does not matter how good you know how to analyze a chart. That's the truth. It does not matter. If you are not there psychologically, and you let your emotions take control of you, take over you, you will lose. Alright, that's just the truth. You will lose. You have to develop a proper mindset first before you become profitable. Alright, so really make sure you absorb all of these psychology tips that I'm sharing with you. Okay, I decided to like change the backdrop a little bit just to give you guys something different. So the next step will be to handle your emotions in real life first before you decide to trade. So what I mean by that is that do not try to trade if you are going through something in your life. Okay, it can be like a bad breakup, or you lost a friend, or something bad happened to you, you got fired or something. Okay, something bad happened to you. Do not try to trade when you are experiencing like these emotions, because trust me, it will affect you on the charts. Alright, if you get better at handling your emotions in real life, you can do the same when you are trading. That's just the truth. Like if you can handle your emotions in real life like a man, you'll perform much more better on the charts. So that's why there's a saying that goes like, the charts literally reflect like your life or something like that. And bro, you need to stop comparing yourself to others. Alright, everyone's trading journey is different. What works for them might not work for you. Like this video if this video was helpful, and make sure you hit that subscribe button. Welcome to the tribe, and remember, you're just one trade away. Mwah. The reason why a lot of you guys lose money in the market is because you guys do not know when to correctly get into the market. Like, let's put aside psychology and risk management. So if you know when to correctly get into the market, you are just gonna make money. As simple as that. Some people get into early, some people get into late. And both of these scenarios will cause you guys to lose a lot of money. But before I start, I just want to say that I hear you guys, and I'm going to be posting a lot more price action videos over the next few weeks, because we all know that price action is king, and my goal on this channel is to help you guys become consistently profitable. So of course I'm gonna give you guys the best strategy ever. So I have a lot of examples on the screen right now to show you what you do, because like I said, I've been trading for a few years, so I have done the exact same mistakes. Let's get right into it. So tell me if this scenario look familiar. You see like a big candlestick piercing through like a certain key level, and then because of your fear of missing out, you decided to get in for a buy right here when price did this big fat candlestick, and you see everybody's buying, so you want to enter for a buy. And then the next thing you know, price decided to drop back down. Sounds familiar? I'm pretty sure it does, right? Because I personally committed this same exact mistake so many damn times in my first year of trading. So the problem here is you are not being patient enough. Like because of fear of missing out, so you get in for a buy right here. And where will you place your stop loss? Like right down here, and then where will you place your take profit? Maybe like right up here, there's like a key level, right? And you can see like the risk to reward ratio is just wrong. It's 0.4, that's like shit. So you do not want to place it like this, right? You always want to have like a good risk to reward ratio, like 1:2, 1:3, right? So if you get in right there, it will just ruin your risk to reward ratio, because you got a higher chance of losing that trade compared to winning that trade. So make sure you always be patient. Do not let FOMO take control of you, and wait for price to get to a certain key level or trend line, then get into the trade. So to determine when to correctly get into the trade, you must use all the technical analysis tools in your arsenal. So things like support and resistance levels, which are basically like key levels that tell us that price is gonna reverse or gonna break past that key level, or Japanese candlesticks, which tell us every single thing we need to know about price right now. Is there more buyers in the market, or is there more sellers in the market? And then there's trend lines to help you identify the trend direction, and also your moving average, like the indicator that I have right now. So we have to use all these tools to figure out whether we should go in for a buy or go in for a sell. So the most important point here is that you do not want to get in when price is in the middle of nowhere. So this is the key level, this is the key level, and right here, this is when price is in the middle of nowhere, and you do not want to get in for a buy. Let's say you get in for a buy here, your stop loss will be below the support, take profit at the resistance level. You can see like the risk to reward ratio is just not worth it, guys. This is not a worth it trade, alright? This is not peng. So you do not want to get in right here. So you always want to make sure you wait for price to get to a certain key level or a trend line before you're considering taking a trade. So let's say if you enter right here, okay, stop loss will be below right here, and then you'll take profit all the way up here. Now that's what we are talking about. 1:7 risk to reward ratio. You're essentially risking $1 to make $7, and this is just so much more worth it. So another tool that you guys can use is your trend lines. So like example, let's say I plot this trend line right here, and I can draw like my little resistance area right here. Yep, so basically make sure you use all the technical analysis tool in your arsenal to just help you determine when to enter for a buy and when to enter for a sell. So when price is at a trend line, price can only do two things, alright? Price can either bounce off this trend line like this and continue going back up, or price can break through this trend line and just head back down. It's really just as simple as that. Price can only do two things. It can either bounce off and continue in that trend direction, or break and go in the opposite direction. As simple as that, guys. So I see so many opportunities where you could have got in on this big trade. So when price come back down to this trend line, so let's say you have drawn like this trend line right here, and price come back down to this trend line, look at what the candlesticks are showing you at the trend line, right? So you zoom in, I see, alright. So that is, what is this? This is your morning star candlestick pattern. So it's like a 3 candlestick pattern that show you that price is gonna reverse and head back up, right? So that is one confluence. Right now, price showed us the morning star candlestick pattern, which show us that price is gonna reverse and head back up. So that's one. Number two, what's your second confluence? Your second confluence is that price is at this major trend line right here. So the third confluence could be you waiting for a moving average crossover, right? So if you go down to like the 1 hour or even the 4 hour time frame, you'll see like the moving average has already crossed over. So you can see you go down to the 4 hour time frame, or let's just go down to the 1 hour time frame to look for our sniper entries. You can see like over here, all the candlesticks are below the moving average, is below the black line. And then at this point of time, this is when the black line starts crossing and now the candlesticks are above the moving average. So this is when the moving average has crossed over. So combine this with the other two confluence, which is right now price is at this trend line, and number 3, right now there is a morning star candlestick being formed on the 4-hour or the daily time frame, right? So you can get in for a buy position somewhere around here, and in this example you'll place your stop loss below the trend line. So this is the last higher low. Remember structure, guys, this is the last higher low, and then you place your take profit all the way up at the next resistance area, right? I see a little resistance area being formed right here. Yeah, you can see there's like a little strong resistance area being formed right here. You can place your take profit all the way up here. You can see whenever price gets up here, it reverses 1 time, 2nd time, 3rd time, 4th time. A lot of times, whenever price is up here, it always reverses. So this shows us that right now, this area is a very strong resistance area. So you can see the trade literally went all the way up there, guys. Like, I'm not joking or I'm not lying to you guys. You guys must take this seriously, alright? Like, it's really just as simple as that. You wait for price to get to either a trend line or a key level, and then look for multiple confluences. Use all the technical analysis tools in your arsenal. Trend lines, support resistance, candlesticks, moving average, Fibonacci, whatever tools that you have, use it, alright? They are not there just to like for decoration or just to for show, alright? They are there because it helps you determine when to get in for the trade. So don't worry if you still do not understand. I'm gonna show you a few examples, and by the end of this video, I can guarantee you that you're gonna understand this entire strategy and you will know when to buy and when to sell. So here's an example in the downtrend. So you can see this beautiful downtrend, just draw like a trend line right here, connecting all the lower highs. 1, 2, 3, 4, alright? 5. So all of these lower highs are touching the trend line, so this is a valid trend line. Let's say price has already like went all the way down here, right? Price has already went all the way down here. You do not want to enter right here, guys. If you enter right here for a sell, because like you want to trade with the trend, right? So this is the downtrend, you want to enter for a sell. So if you enter for a sell right here, your stop loss must be all the way up here, because this is still the last lower high. Alright, this is still the last lower high, so you do not want to enter right here. If price has already made a large move just like this is a large move, be patient, wait for price to go back up to the trend line to create your new lower high, and then this is when you can get in for the trade. Alright, so right now still be patient and do not enter for the trade yet. Let me just speed this up a little bit, and you can see like, okay, price get up here, alright, get up here, wait for price touch the trend line. Okay, right here, this is when price touch the trend line. Okay, so remember when I said that when price is at the trend line, it can do two things, right? Price can either break through this thing and start going up like this, creating your high low, going up like this, or price can continue going down, right? Bounce off this trend line, continue going down. Price can only do these two things, guys. So right here we see price bouncing off the trend line, right? And we want to look for other confluences because there is only one confluence. This trend line bounce is only one confluence. Okay, basically confluence means confirmation or reasons, right? If you guys do not understand what's confluence. So that is one confluence. The second confluence would be some sort of candlestick pattern. So you go down, you see like, alright, right here, this is when price is showing us a little bit of dojis. You see 1 doji, 2 doji, and you can see like price is showing us a lot of wicks. 1, 2, 3, 4, 5, 6 wicks. Basically show us that price is like not breaking past this trend line. It's just like getting rejected at this trend line. So there is not only wicks at this area, right? There is also a bearish engulfing candlestick right here. This big red candlestick that show us that there is a lot of selling pressure in this market, right? That means this price is gonna go down. So that is two confluence. Now we need to look for one more confluence. So there's actually like a little trend line, I mean like a little resistance area right here. You can see whenever price up here, you always reverse. And you can see there's like a little resistance area right here. So that can be another confluence, that this is a resistance area. So now we got 3 confluence. Your fourth confluence could be the moving average crossover, right? Like I can go down to the 1 hour or even the 4 hour time frame. You'll see like the moving average has crossed over. Because right now it's on the daily time frame, so it's a little bit slow, and because price react a little bit slower on the higher time frames. But if I go down to the 4 hour or the 1 hour time frame, you'll see like the moving average has already crossed over. I would love to show you that, but TradingView does not want me to shine. Like when I go to the 1 hour time frame, it says that like the data is not available. So we'll just have to use the daily time frame. So now we got 4 confluence, we can get in for a sell position. So we will get in for a sell position right here, and we'll place our stop loss above like this resistance area or above this trend line, and we can place our take profit either at this support area right here. You can see there's this like little support area being formed right here, right? whenever price down here, it always like reverse and head back up. Or we can place it at right here, another support level right here. This is the lowest point price went to before price like retrace and pull back all the way up here, right? So this can be our take profit. So let's just place our take profit right here and let's see how this trade plays out. So before I do that, look at this trade. It has a 1:3.6 risk to reward ratio. That means you are essentially risking $1 to make $3, 10 cents to make 30 cents, $1,000 to make $30. I mean, $1,000 to make $3,000, right? My brain just glitched there. Is that worth it? That's definitely worth it, right? You are potentially getting so much more in return than what you are risking. So this is a decent trade, and let's see how this trade plays out. Alright, price go down, and ultimately smash our take profit right here. You can see this price action trading strategy works, right? Price action is king. Price action will always be king. It's really just as simple as that, guys. So before I continue with this video, I got a huge announcement to make. I'm accepting 5 new students to my mentorship program. So if you are interested to learn trading from me one-on-one, I literally go into a Zoom call and explain and teach you guys from the beginning all the way to the end, like how to actually become a successful trader. Like you can see, these are like the syllabus on what you're gonna learn. You can pause on this video if you want. So basically, these are what we're going to learn. I'm going to give you everything you need to become a successful trader. So if you are interested in that, make sure you go DM me on Instagram to just reserve your spot. Yep, so if you're serious about trading, I believe that you need a mentor. And I just want to say that this is not an ordinary course, alright? It's not a course where I just give you guys videos and just watch. No, it's literally me getting into a Zoom call with you, like you right now watching this, and I literally teach you everything I know about the charts, right? So if you're interested, like I said, just go DM me on Instagram. Just drop me a message that tell me that you're interested in this mentorship program. Yep, so there's only 5 slots available, so make sure you just go DM me on Instagram as soon as possible to reserve your spot right now. Here's another example, but right now we're gonna learn how to get sniper entries on the support and resistance time frame. So right now, like I said, you do not want to enter when price is in the middle of nowhere. So what I mean by in the middle of nowhere is anywhere around here, right? You do not want to enter right there. You want to enter when price is either at a resistance level or a support level, alright? So right now, price is at a support level, so we can look for our entries. So since this is like a very strong support level, you can see like whenever price is down here, it always go back up. Down here, always go back up. Down here, always reverse and head back up. So this tells us that this is a very strong support area that price has failed to break past multiple times. So we can look to enter for a buy position somewhere around this area. And you can see, luckily for us, price is at the support area right now. You can see right now, price at this major level. And we do not want to enter right here yet because there's only one confluence. The support level is only one confluence. We want to look for 3 confluence or as many as possible. So we just wait, we still wait. Yeah, so maybe I can go down to like 4-hour time frame. Oh my god, damn it, trading view. So we have to stick with the daily time frame. But like I said, if you want to get sniper entry, just go down to the 15-minute time frame or even the 1-hour time frame. So you can see right now at this level, price did this big green candlestick right here. This is a bullish engulfing candlestick which tells us that price is going to head up. So if you look towards your left, you'll see another candlestick pattern. This right here, this is the morning star candlestick pattern. This 3 candlestick pattern which show us that price is going to reverse and head back up, right? So we can enter for a buy position somewhere right around here. But there's only 2 confluence. We need 1 more confluence, and that is your moving average crossover. You can see like the black line has crossed over right here. This is when the candlesticks are above the black line right now. So enter for a buy position right here, and you should be placing your stop loss below this support level, and then place your take profit all the way up at this resistance level. The reason why we place our take profit all the way up here is because if you look towards your left, let's zoom out a little bit, look towards your left, you will see that whenever price is at this area right here, 1, 2, 3, 4, 5 times, it always end up reversing and head back down. So this is a very strong resistance area that tells us that, okay, price is probably not gonna break past this level, so we'll play it safe by placing our take profit right there. So we'll place our take profit right here at this resistance area, and let's see how this beautiful trade play out. Bam, 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 bam. Absolutely smash our take profit right here, guys. This is when price has already smashed our take profit, so we have get out of this buy trade. So you can see that right now price did this hammer right here. This is like the inverted hammer or something, but basically this is a candlestick pattern that show us that price is gonna go down, and that is our first confluence. This is a bearish hammer if I'm not wrong. So that's one candlestick pattern. The second No, that is one confluence. The second confluence is that price at this resistance area. So the third confluence could be like some sort of moving average crossover. So we can enter for a sell position right here and place our take profit. Place our stop loss above this resistance area. And now your take profit will be at the support level that we have drawn right here. Because if you remember, like at this area, price is just like very hard to break past. So you can place our take profit right here and look at this, guys. Price ultimately went down and smashed our take profit right here. I'm not playing with you. This strategy works, guys. So go ahead and backtest this strategy. Alright, make sure you scroll down right now and like this video if this video is helpful, because this video was really long and it really took a lot of time to make. So make sure you smash that like button and comment down below what videos you guys would like to see next. And make sure you hit that subscribe button and hit on the notification bell beside the subscribe button so that you can be notified when I drop new price action videos just like this. And remember, and welcome to the tribe. And remember, you're just one trade away. Mwah. So I see a lot of YouTubers complicating the concept of market structure, when in reality, it's really not that hard. It's really quite simple. So right now, I'm just really gonna like simplify the entire concept of market structure to a level where like a 5-year-old can understand. So if a 5-year-old can understand, you can understand, alright? So right now I'm just gonna like show you guys like a blank chart so that I can draw it out for you guys to see. Because like if I draw it out, it will be so much more easy for you to understand. So the first thing you must understand about market structure is that when price is going up, it just does not go straight up, right? It goes up in waves, like it moves in waves, you know what I'm saying? So it will go up, create your higher high, higher low, higher high, higher low, higher high, higher low, and higher high, higher low, just like this. So the reason why it's called higher high and higher low is because this high is higher than the previous high, this high higher than the previous high, and this low is higher than the previous low, and this low is higher than the previous low. So in the uptrend, price is making your higher highs and higher lows. So in the downtrend, price will be making the opposite, right? Price will just go down in a straight line. It will make lower highs, lower lows, lower highs, lower lows, like this. Lower high, lower high, lower low, lower low. Alright, so now that you get the concept of market structure, the next thing you must understand is break of structure. Alright, break of structure will help you determine when price is reversing. Okay, so how do we know a trend is ending? We look at the structure. We look if price broke at the structure. So in the uptrend, price will look something like this, right? Higher highs, higher lows, higher highs, higher lows. But at some point of time, price will start losing steam. This uptrend won't just go up forever. Price will start losing steam and just like starts weakening a little bit, you know, consolidating and just like showing you small candlesticks. That basically just shows you that price is losing strength. This entire uptrend is losing strength and the buyers are losing control of the market. So at some point of time, price will come down, break through the previous higher low. Previous high low, where's the previous high low? Right here. This was the previous high low, right? This was the last high low. So at some point of time, price will break this last high low. Let me just change the color right here for you guys to see. So yeah, right here, this is when price break through the last higher low. But right here, this does not mean that price is in a downtrend. This does not mean that price is going to reverse and hit back down yet. Because this can easily be a fake out and price can just pew back in like this, like just poke his butt back in and then just continue going up like this, right? So we do not want that to happen to us. So in this case, to get a confirmation that show you that price is in a downtrend and price is like reverse already, right? We need to wait for price to create your downtrend market structure. So a downtrend market structure will looks like lower high and lower low, right? So we wait for price to form a lower high first. So when price goes up to retest this level here, or you can even go up all the way up here before pumping down, this is your new lower high. So if price is giving us a lower high and lower low, this means that price is in a downtrend. So you'll see like price creating more lower high and lower low, like, and just like go down like this. So this is the entire concept of market structure. It's really just as simple as that. So I really don't get how a lot of YouTubers can like really complicate the concept of market structure when it's really just as simple as that, alright? But you know how in reality, like on the charts, it just does not look as simple as this, you know? Like there's gonna be emotions involved, and sometimes like the market can consolidate for a while and you don't know what's the trend. So I just really hope that like this market structure thing will help you guys like gain a better understanding of how the market moves. Because you guys must understand that the market don't just move randomly. it moves in structure. So in the uptrend, it's making your high highs and higher lows. In the downtrend, price is making your lower highs and lower lows, right? It won't be like, oh, high high and low low, high high, low low, complicated shit like that, right? So just remove this messiest chart. Okay, so now let's apply whatever we just learned. So I really think that market structure is one of the most important things that you have to understand about trading. So I really need you guys to give me your undivided attention, alright? Really just keep all the distractions away and just focus on what I'm about to say. Because what I'm about to say might change your life. So market structure, let's apply it onto the charts. So a very good example is let's just look at AUD USD. Alright, AUD USD is the most smoothest man on planet, you know, most smoothest man on planet, and it's just so smooth because like price respect, price action a lot, which is what I've been preaching for years. So yeah, price just respect price action a lot, and especially it respect market structure a lot. Like if you look everywhere, you can see market structure because price is always either trending up or down, right? And then consolidation a little bit like right here or something. Yeah, but whenever price trend up or down, there's always market structure being formed, right? Always. So right now we got a beautiful uptrend. If you can't see this is an uptrend, you are blind. So all you need to do is to take the goddamn trend line too, boys. Take the goddamn trend line too and drag it all the way, connect all the higher lows like this. Alright, so yeah, if you really cannot see that this is an uptrend, if it's not obvious enough for your brain, take a trend line too. God damn it, take a trend line too, bro. So once you plot the trend line too, so the first sign that shows us that price is gonna break structure is when price break through the trend line. Alright, if you cannot see market structure, plot the trend line too and wait for price to break through the trend line. So right here, this is when price break through the trend line. So you can start to see like, okay, this uptrend is kinda losing steam and the buyers are kinda going away, right? Remember like the chart that I just draw for you. So price goes like uptrend, and then it starts like consolidating and then like go down to break the previous higher low, and then like it's continue going down like this, right? This is what is happening right now, guys. Let me look. Like you can see price uptrend, and then what does it do? Consolidate, right? Consolidate like what I just drawn out for you guys, and then price go down, break the previous higher low right here, and just continue going down. Right, this is why I really just believe in market structure. So let me just like zoom in to show you guys. So there's a lot of chances where you can enter for this beautiful trade, right? So but before I get into the entry I'm gonna show you like maybe second half of this video. So if you're really interested on where to enter for a buy, where to enter for a sell, where to enter for the trade, please be patient and wait till I finish explaining market structure, because you must understand, really understand market structure before you dive into the entry. If you don't understand market structure, it's like jumping from level 1 to level 10. It's just, you're gonna get killed, alright? You're gonna get killed and lose a lot of money. So once you draw this beautiful trend line, and you can see where is the last higher low before price starts consolidating and breaking structure. Right here, right here, right here. So this can be the last higher low. Another last higher low could be right here if you guys want to, right? Ultimately it depends on your interpretation, but I just like to put it at like the recent higher low. This one is the most recent higher low before price starts consolidating. Another higher low could be right here. It's like a little small little higher low right here, right? You can put it right there also. But for the sake of this example, keep things simple, I'm just gonna put it right here. Yo, my camera literally died on me. I was like literally recording halfway and I got cut. So now I don't know where I stopped. So you can see right here, this is when price break through the previous higher low, right? So we do not have to enter yet, because remember, price can still continue pumping up like this and just head back up. So we do not want to enter yet. We want to wait for price to create your lower high and retest this entire higher low to now form as like a resistance area and just head back down like this. Then we enter for the trade. Alright, let me show you what I mean. So now we still wait, still be patient, still wait for an opportunity to jump on. So we just wait. Okay, you see it's still going down and we are not going to enter yet. If you enter right here, guys, remember, if you enter right here, your stop loss must be all the way up here. This is because this is the last lower high. Your stop loss is all the way up here and it's just not worth it. That's why I always tell you guys to be patient. Never ever chase trades, alright? Let the trade come to you. Never ever chase girls, alright? If you want to chase girl, the girl is gonna run away, man. So if you chase anything in life, it's just gonna run away from you. So never ever chase trades. wait for the trades to come to you, right? Just like if you see a pretty girl, you gotta wait for the pretty girl to come to you, you know what I'm saying? So you wait for the trade to come to you. So right here, we still do not want to enter yet. What is all this? Oh my god. So right here, we do not want to enter yet, alright? So we wait. Okay, price is starting to like come up, alright? Wait. Alright, we see you, I see you. So we see like price is like retesting this level right here, right? You can see price start retesting. So right now we are on the daily time frame, so I can go down to the 1 hour time frame to look for the entry. So 1 hour time frame, and you can see, okay, price went up to retest this level here. Okay, so we still wait. I want to wait for like some sort of confirmation. So I still want to wait for some sort of okay, you can see like right here, like price forming like dojis and stuff. So maybe like price is like reversing. So we still wait. I need some more confirmation. Like this is just not enough for me to enter, guys. This is like still consolidating and stuff. So just wait. Yo, come on, man. Why so slow? Man? Yeah, so you end up like, see, end up even going higher. So if you enter like somewhere around here, guess what? You have gotten stop out or something. So it went up to retest this previous high low. You can see like, if you zoom out, this is really the previous high low, guys. So it's consolidating around here. So this is like the first sign that tells us that right now price is losing steam. This uptrend is losing steam and it's not able to break past this. If it's able to break past this, then it's going to continue going up. But no, price is giving us small little candlesticks, dojis at this major level. This shows us that, okay, price is really about to head down, like no joke, guys. Okay, you can see like price is start like rejecting this level here. Okay, you can see price start rejecting this level here. Okay, right here, this is when price like officially like reject this level and gave us like a, what's this like? What's this? This is the evening star. This is the evening star candlestick pattern. So now we've got an evening star candlestick pattern right here. That's one confluence. Second confluence will be like your this later level here, which is the previous high low, and it now forms as a resistance area. So this is your new lower high. So this second confluence, that confluence will be the moving average crossover. So you can see like the moving average starting to cross over, and then 3 confluence. That's all the confluence you need. You just need 3 confluence, and then I can enter for the trade. Alright, I think there's more confluence right here, but to keep this video as simple as possible, I'm just gonna enter for a sell right here because we already have 3 confluence. So where should your take profit be? Remember, guys, your take profit should be at the next support level right here. There's a little support area being formed right here. Right, you can draw like a little level right here. So let's see how this beautiful trade go up, play out. You can see like price go down. Okay, reject. Okay, now price officially create our new lower high. So now we know that price is actually in a downtrend right now. Absolutely crazy, boys. Like we have smashed our take profit right here. You can see price reach all the way up down here, smash our take profit. Really as simple as that, guys. That is how you can trade market structure. Really as simple as that. Like, I just don't want to like complicate things for you on this channel, because in reality a lot of YouTubers complicate things and it's just not that hard, boys. It's just not that hard. So now I've shown you guys like an uptrend. So in the downtrend it's kind of like the opposite. So price is making your lower highs, lower highs, lower lows, lower highs, right? And then price at some point of time, this downtrend will start losing steam, consolidating, do its thing, show us that the sellers are losing control of the market. And then some buyers will start to come in and push the price up and break through the previous lower high. So the previous lower high is right here. Previous lower high right here. So now price has broken through the previous lower high, but you do not enter yet, right? Like I told you guys, price can still, this can still be a fake out and just went back in and just continue going down. So you do not want to enter yet. You want to wait for price to break through this lower high. Alright, break through this lower high. That's one sign. Second step is to wait for price to come back down to retest this lower high and then forms like a higher low like this, right? Higher low like this. Then this shows us that, okay, right now price is in the uptrend. This downtrend has reversed and it's in the uptrend. Then price continue going up. So this is when we can enter for a buy position. So you always want to be patient to wait for price to break structure before you assume that price is reversing. Like what I mean by that is that you never want to assume that price is reversing when price broke through this lower high immediately like this. Price broke through this lower high immediately. Do not just assume that price is going up already. You have to wait for price to create your higher high and higher low. Welcome to the unfiltered trading section. So today I want to talk about trading goals, right? if you do not have a trading goal in your mind, you will fail because you won't know like what you're aiming for. And if you don't have a destination in mind, you're just gonna be like running around going nowhere. So I really want to make sure that you guys set the correct trading goals, right? Trading goals is so important, right? Honestly, I'm just gonna be honest with you guys. Like the biggest goal when I started trading was to get financial freedom, time freedom, and location freedom. So what I mean by that is that I wanted to be able to like travel the world, and I wanted to be able to work whenever I want. So which is what I'm doing right now. I'm just working whenever I want. And then I'm also wanting to like basically get financial freedom so that I can buy stuff without having to worry about the price tag, which is something that I'm really really proud of right now. Like right now, last time I go to a restaurant, I'll be like, what? This is $12 meal? No, I can't do that, man. $12 is way too much. I'm only earning $1,000 per month. Shut up, Jared. Shut up, bro. Like, shut up, bro. Like, it's not about how much you are saving, man. It's about how much you are making. So now I can literally just walk into any fancy restaurant and just, alright, this is just $20, $50. It's alright. I'm just gonna order whatever the fuck I want and without looking at the price tag, right? So find out what your trading goals is and really just write them down somewhere, and maybe write them down in your trading plan, right? So you can refer to them every single day, and it just really gives you that extra push when you don't feel like it. There's a lot of days where you're not gonna feel like it. Like maybe you got a losing streak, which is very common by the way. You got a losing streak and you're like, man, I'm a bad trader. I'm a bad trader, man. I should quit trading. And then you look at your trading goals and you're like, oh shit, man, I got a long way to go, man. I'm trying to provide for my family, yo. So I can't give up right now. The trading goals just help to give you that extra push to continue going to the next level, right? Just helps you to give that extra push. So I would say like really really make sure you write down your trading goals. I would rather you write down on paper, because when you write down on paper, it's much more significant, much more like sentimental, right? So that's one thing about trading goals. Just make sure you come up with your own trading goals. It can be financial freedom, or quit your job, or travel the world, or provide for your family. All of these are like some very common reasons that my students wanted to learn trading. Is because of all these reasons, right? So I believe that it's like the same reason as you guys, financial freedom, all those stuff, right? Just write them down and just have a fixed destination in your mind. So that's one thing about setting goals. So the next thing I want to say is that like, do not set small dick goals. The term small dick goals came from like the small dick energy. You know how there's the big dick energy and there's a small dick energy, right? When you have a big dick energy, you're like a big man, you know, like basically like you just know what's big dick energy. So small dick goals are those goals where you're like, oh, maybe I should just like make $100 per month from trading. Shut up, bro. Like, why are you doing this? Why are you limiting yourself? So time is gonna pass anyways. Time is gonna pass anyways. What I mean by that is that, let's say you set a goal to make 10K per month, compared to setting a goal to make $100 per month from trading. You're gonna learn trading anyways. Time is gonna pass by anyways. But if you have a goal to make 10K per month compared to a goal making $100 per month, you're gonna wake up feeling like you're gonna conquer the world, and you're just gonna like just feel much more energy, feel much more like motivated to go achieve your goal. Because if you wake up and think that, I'm gonna make $100 this month, $100 this month, that's way too less, man. I should just stay in bed. Compared to like, shit, I have to make $10,000 this month. And then you're gonna give you like, I'm gonna wake up at 5 a.m. and when the alarm set off, I'm just gonna wake up and do my thing, analyze my charts or whatever, because I have a goal to make $10,000 this month, not $100 this month, like all these small dick motherfuckers. So really really make sure you set big goals, right? So Grant Cardone always say that, like in the book, the 10x, what is it called? The 10x rule, right? The 10x rule. So there's this book written by Grant Cardone called the 10x rule. So it basically says that you should always set 10x goals. 10x goals. Alright, so if you set 10x goals, you are gonna achieve it if you put in the work. Right? You basically say that, you know, all your friends are probably gonna be like, oh, that goal is way too big, man. Why are you trying to be a millionaire? Like, just be mediocre. Just be comfortable with where you are right now. Bro, that is so much bullshit, man. That is bullshit, man. Whoever listen to your friend, you are an idiot. You are an idiot if you listen to a friend. Your friend is probably broke. That's why I keep saying that, right? So listen to me. Alright, listen to me. Listen to me instead of a friend. Alright. Trust me, I'm here to really like help you to live a comfortable life, live a good life, live the life I am living right now. I'm here to help you, my boys. I'm here to lead you, my boys. So yeah, set 10x goals. Don't let your friends doubt you. Just because they have small dick doesn't mean you can have a small dick, right? Like, gotta have the big dick energy, you know what I'm saying? Set big dick goals. Like for me, a very big dick goal that I set like is to reach that 100,000 subscribers on YouTube. And I understand, like it's like you're probably thinking, yo, why are you doing this? That is way too big. You only have like 2,000 subscribers right now. And my mindset is like, the message that I'm spreading on this channel right now, all the psychology tips, all the risk management tips, all like the strategies that I'm showing you right now, they are very important message that I think more people need to hear about. More traders need to focus about psychology and risk management, and that is my goal on this channel, to share with you the unfiltered truth about trading. It's not about strategy, it's about trading psychology and risk management. So that's the message that I really want to spread to much more people. That's why I really aim to reach 100k subscribers, because if I can reach that level, I will be able to impact so much more traders and help them in a way that no other YouTubers can. Because a lot of YouTubers are like, oh, 99% win rate strategy. Yeah, I just really want to like be more fulfilled, because I'm feel really fulfilled right now, guys. Like really, I have never felt so fulfilled in my life so far. I know this like me trying to be like vulnerable and stuff, like, but that's just true. Like I've never felt so fulfilled in my life so far, especially after I seen the comments in the previous unfiltered episodes. I don't know who is like still watching this video, but if you commented on the last video, like I saw like there was a lot of comments in the last unfiltered trading episode, right? So I'm just really grateful for you. Like any comment that you leave on my videos, it just really helped me to be motivated to push much more content, because trust me, there is a lot of times where I feel like giving up. Like I just feel like my channel is not growing like other YouTubers or 10k 50k subscribers. My channel is just not growing that fast, even though I really believe that the message that I'm spreading here is really important. So yeah, like I'll really just like, so yeah, like basically like you're gonna feel like this a lot of times when you're trading. You're gonna feel like giving up, but I want to tell you that I believe in you, my bro. I believe in you, my sister. I believe in you. I don't care if your family don't believe in you. I don't care if your friends don't believe in you. I believe in you. You are gonna make it if you keep going. Trust me. If you keep going, there's gonna be at least a 1% chance of making it. Like if you stop and quit right now, you're not gonna make it 100%. There's a 0 chance if you're gonna make it. But if you keep going, there's at least 1% chance, right? And trust me, you're not doing anybody service if you quit right now. Your family will be so much more well fed. Your family will be so much better if you keep going. I know that because that is where I came from. I was dead broke, right? I was dead broke, and then I keep going with trading. Even though I blow multiple accounts and lose a lot of money, I kept going. So I really want you to do the same, not just for you, but for your family and for me. Like I want to be able to like really tell people that, yo, you know, like people watching my videos, they really became profitable. They really became like good traders, and that is, I'll be very proud. I'll just be very proud. And I know that's kind of selfish for me to like think, oh, blah, blah, blah. But really, I really just want the best for you. So yeah, this video has been packed with information. So really, if this video is helpful, make sure you like this video. By liking my videos, it helps my videos to like push out to the algorithm, and more traders will be able to see this video and like my videos basically, and they'll be able to like finally grasp my message. Like it's not about strategy, it's about psychology and risk management. Alright boys, I really want you to like comment down your trading goals so that you can like give each other support. Like just tell each other, yo, keep going man, like we are all gonna make it someday. Just comment down below your trading goals. I will like your comment, I'll reply to your comment, and I'll give you some motivation and encouragement. So yeah, you can hit the subscribe button if you want. Welcome to the tribe, and remember, you're just one trade away. Mwah. Are you struggling to grow your small account? Do you always end up blowing your small account? I've been there and done that. So I want to show you 5 easy strategies that will allow you to 10x your small account. So the easiest way to grow your small account is to risk 100% of your trading account. So if you have $1,000 in your small account and you risk 100%, and that will be betting $1,000 on each trade, right? So let's say you have a 1:1 risk to reward ratio. And guess what? You won that trade. Then congratulations, you have managed to double your trading account. So you won $1,000 and you have managed to double your trading account, and now it's at $2,000 because you risk 100% of your account, right? Yay, you made $1,000. But what's the downside? Yes, you can double your account with one trade in just like a few hours, but is this something that you can consistently do every single month over the next 1 year, or the next 5 years, or 10 years? The answer is no, because it's only a matter of time before you start going through a losing streak and you will end up losing everything. This is what your account equity curve should look like. It should be going up steadily. It should not be like go up a lot and then come down to zero, alright? So if you want this to be your account equity curve, watch this video till the end, and I guarantee you that you will be able to grow your small account if you apply whatever I'm about to teach you. So I need you to be laser focused. Monk mode, baby. Just put away all the distractions and just focus on what I have to say for the next few minutes. The first strategy is to only take high probability trades. You have a small account, so you do not have the luxury to trade normal trade setups, because you want to preserve your capital so that when a high probability trade setup, high probability, oh my god, that is so hard to pronounce. A high probability, oh my god, I lost my train of thought. So basically you want to preserve your capital so that when a high probability trade setup comes along, you are able to take that trade. So what counts as a high probability trade? It depends on your strategy. For me, a high probability trade is where I have multiple confluences telling me that I should enter for the trade. So honestly, I normally look out for at least 3, but to make it a high probability trade, I look for at least 4 confluences. The more confluences, the higher probability of you winning that trade. So confluences are basically things like confirmation, right? Like candlestick patterns, market structures, trend lines, support and resistance levels, all this stuff. So a low probability trade would be like trading during consolidation, or when there are very less trading volumes and there's like small candlesticks, etc. And if you have been trading for a while, chances are you have like a gut feeling on whether you're gonna win or lose that trade. And we all know that feeling, right? We all know that feeling. And sometimes you just have to trust that gut feeling to tell you that, okay, this is a high probability trade. Enter. And if you guys are wondering why I keep like looking on top, it's because I'm looking at the monitor which is like displaying the slides. The second strategy is to set your risk per trade. Risk management is boring. I know, alright, but boring works. All the strategies I'm sharing with you today are not the most interesting strategies like martingale strategy or flip a coin to determine whether you should buy or sell. But these strategies I'm sharing with you today, they work even though they are boring. So the most important rule to grow a small trading account is to clearly set your risk management rules. Without a proper risk management plan, there is a higher chance that you will blow your trading account. So my advice for you is to control how much money you are risking per trade on each trade. The common rule is that you should only be risking 1% of your account on each trade. But I understand that 1% on a small account like $100 account is only $1. So adjust this according to your account size. Like You might want to risk more if you have a smaller account. Ultimately, it depends on how much are you willing to lose per trade. Are you comfortable with that amount? If not, use a smaller lot size. And how you determine the lot size is by using a position size calculator. You can just go Google any position size calculator and it will allow you to determine what lot size should you be using based on the amount of money you're risking per trade. No matter how much money you risk per trade, you must stick to a proper risk to reward ratio of 1:2. Or, honestly, I look out for 1:3, meaning that the potential profit should be triple or at least double the potential loss on the trade. The third strategy is to stop trying to flip your small account. Guys, I know
Keyo Finance, fungua mic.
Haraka-haraka.
account mentality, and it's this mentality that is causing you guys to blow your account and continuously fail to make money in the market. So the small account mentality happens when you are constantly looking for trades and desperately trying to force money out of the market, and this will cause you to take a lot of low probability trades like the one you see on the screen right now. And these low probability trades causes you to lose money. Traders with big accounts do not feel the pressure or a need to trade. They are more relaxed, they are more patient, and this results in them making money faster than the small account mentality trader, the small dick energy trader. There's this trick that you can do. Just mentally add 2 or 3 zeros at the end of your trading account balance. And if you do this, it will take a lot of urgency out of trading that you might be feeling right now. And you won't feel like you have to trade every single day and take every single trade. And this will definitely help you grow your small account. As cliche as it sounds, you need to focus on the process, not the money. So there are a few things that you need to start doing right now. Number one, be more disciplined. Work on your trading discipline. Things like using a smaller lot size and following your trading plan or follow your risk management plan. And also, you should be focusing on making less mistakes. You know how when you're just starting out, you make a lot of beginner mistakes like over trading or using a lot size that is way too big for your account or not following your trading plan. All these are mistakes that you can try to reduce. So as you try to reduce these mistakes, guess what? You are becoming a better trader. And when you become a better trader, the money will come. So obviously these things are so hard to do. Like they're so difficult to master. Things like trading discipline and following your risk management plan. It takes a few months to master all these things, or even a few years, right? But they are so important. If you really want to become a successful trader or a millionaire trader, you need to master these few things like becoming more disciplined or making less beginner mistakes or following your trading plan, following your risk management plan. This will really allow you to trade objectively instead of letting emotions cloud your trade, cloud your judgment, and end up blowing that account. The fifth strategy is to slowly increase your position size. As your account gets bigger and bigger, you need to start using a bigger lot size. But you should still try to stick with your risk management rules. So an example is the one that you can see on the screen right now. Let's say right now you have $100 account, like a small little $100 account, right? So the lot size that you should be using is obviously the smaller lot size, the 0.01. That's the smallest lot size that you should be using, or that is the correct lot size that you should be using. So as your
Unataka upande juu
So be patient, do not chase a trade and react to the market. So if price is like consolidating like this, what I will personally do is that stay out of the market. I will stay out of the market and I will wait for price to like show me some sort of candlestick patterns that tell me that price is either breaking past this level or is reversing at this level. Then I enter for the trade. Like example, like right here, I still will not enter because price is consolidating and there is not much sign that show us that price is reversing or breaking past this key level. So we will still wait. And you can see right here, price gave us this big bearish engulfing candlestick, just rejecting this key resistance level. And you can see this shows us that we should enter for a sell position. So if you enter for a sell position here, your stop loss will be above here, and then you can place your take profit at the next key level. And you can see price just continue dropping. So that is why you guys must always be patient and react to the market. Do not just like enter for a sell position immediately because price is at a resistance level. Remember, price can do whatever it want. Price do not care about you. So price can break past this level or reverse at this key level even after consolidation. If you do not like to stare at charts all day just like me, what you can do is to set alerts at key levels when you are analyzing the charts. So let's say in this example, I want to set an alert at this key level right here. So basically, I want to analyze the charts when price at this key level here. So what I will do is to press this alert right here and then change the figure to 1.05, 1.05. So you can put like analyze Euro USD or something and then click save, and then you see there will be like this orange dotted line being formed right here. So basically when price come here to touch this level, TradingView will literally like send you like a message or an email telling you that okay, right now Euro USD is at this level. So when you get the message, you can open up your device, whether it is your laptop or your phone, and see what the next few candles are formed at this key level. Like is price like reversing and heading back up, or is price gonna break past this key level? And then you can trade from there. So that is a tip that you guys can use to save a lot of time. Take profit, stop loss, risk to reward ratio, and the lot size that you use should be as important as your entries. You can literally have like the best entries in the world, but if you do not practice proper risk management, you will not make money in this market. So make sure you guys prioritize risk management on the same level as your entries. Do not just focus on technical analysis and getting like the best entries possible. Focus on risk management too. Protect your account, protect yourself, protect your money so that you can make the most amount of money in the long term. Number 1 is your 3-line strike candlestick pattern. The 3-line strike candlestick pattern is basically 3 subsequent candles in a certain direction and then an engulfing candle in the opposite direction. So this candlestick pattern does not work 100% of the time, so make sure you watch out for other confluences before you enter for the trade. And the first thing you need to do when you look at this pattern is you want to look out for the overall trend first, right? If the overall trend is an uptrend, then it will be 3 red candlestick followed by 1 bullish engulfing candlestick. And then if the overall trend is downtrend, then it will be 3 little bullish candlestick, 3 little green candlestick, and then 1 huge bearish engulfing candlestick. And then you can sell it down. I'm going to show you on the charts in a minute. So the 3-line strike candlestick pattern is basically a continuation candlestick pattern. This means that when you see this candlestick pattern, that means that the trend is going to continue. So if you see this in a downtrend, it's going to continue going down. And if you see your 3-line strike pattern in an uptrend, it's going to continue to go up. So you should enter for the continuation of the trend, of the overall trend, right? So the first thing we need to do is to look at the overall trend first, right? Like right now, as you can see, it is a downtrend. Price is making your lower highs, lower lows, right? That is why that is in a downtrend. So you should look out for this candlestick, this 3-line strike candlestick pattern as a continuation of